about this that really talks about getting in this point. We made a joke and we talked about making t-shirts that said trade harder. Do you remember that, Patrick?
Oh, yeah. We love to bring it up, and we need to actually do that at some point.
So, again, you can't trade harder. You can't do anything harder. It is what it is, and it's just going to take time. So, what happens is you get this sunk cost of, I've been working 8 hours a day on trading for 2 years. I should have more than I have. Well, guess what? Only an hour of that 8 hours was even productive. You haven't really been working all that much. You've just been spinning your wheels doing dumb stuff. That's one of the problems with ambition is you are going to spend lots of time doing really things that aren't going to add any value to your bottom line.
Yeah, like consuming content. First of all, thank you for listening to this podcast, but that's what so many people do. They just think by osmosis, the more they absorb, the better they're going to be with that execution. Meanwhile, people who are barely consuming any content are out there running circles around you. You have to understand that balance. But I want to go back to what you said real quick, Rob, because it's funny. And again, dedicated podcast listeners know my story here. But I figured I had, back when I was first starting trading, I had about 18 hours waking hours in the day. By golly, I was going to use them. I didn't have the family thing to put the brakes on. I was single and by myself. I had all the time in the world, and I used it. I would get ready for work at about 2:30 in the afternoon. I would go into work at 4, wait tables, and then come back a little before midnight, eat, get myself ready to trade the London session, and then trade Forex until about 6 in the morning. Go to bed with an incredible amount of anxiety, and then wake up around 1:30 so I could get ready for the next day, and just repeat that over and over again. And did it work? Absolutely not. It did the exact opposite of what it was expected to do. My trading was terrible. I was frustrated. I never thought I would get anywhere, and I would look in the mirror and my face was changing in a bad way. My body looked terrible. Like everything was just a complete net negative, because I had become so ambitious to get out of the industry I was in that I overworked myself to death. I was not being intelligent about it, and I had to become intelligent about it. But that was good, because I was able to share that, makeover and share those changes I made with the rest of the world, and that ended up helping them too. But I had to go through that period of absolute overwork, burnout, physical, mental, emotional stress before I had that come to Jesus moment where I was like, okay, life cannot be like this. This is not ever going to work. I don't care what the prize is at the end of the rainbow. This is not what I signed up for. This is not what anybody signed up for. Yet for some reason I figure, I should be putting my ambition to work, and this is the way I should be doing it. But there is a smart way and a dumb way to approach just about anything, but especially something like this.
Patrick, this reminds me of an analogy that a trader just gave me last month, and I loved it. And he was talking about being patient. He's like, I'm working on being patient because when a lion or a tiger hunts, they're not out there hunting all day long because they get exhausted and they've got to be ready to pounce. They have to expend this short burst of energy that is very intense for that moment. And then they go back to sleeping or sitting 22, maybe 23 hours a day and sleeping. And he talked about how in Forex, how the market's moving, but he doesn't want to waste his energy. He's saving up his energy for when the moment comes, he can truly pounce and truly get there and get in and make his trade and get out. And then he goes back to that resting phase. I love that analogy, and I want everyone to think about themselves as that lion, as that tiger, that, hey, you can't be out there running around all day long. You've got to rest. You've got to conserve energy. You've got to get ready for that burst of activity and that flurry. I just think it's a great analogy to really help out this whole thing of ambition, of thinking, I need to be hunting all the time. Save up your energy.
I would say it's a pretty good analogy. I mean, there is a lot of work you have to do to get yourself to that point. Don't ignore that, at least. I don't want people, I don't think they will, but I don't want anybody hearing that and thinking, oh, I just got to work, a very short amount of time per day and then I'm done. No, there's a lot that goes into it. But yes.
Well, let me clarify that. It's the trading portion should be like that. It should be like the hunter. The training, education, and stuff. Yeah, that's spend 7 hours a day back testing. I don't care. I think that's a beautiful thing.
Yeah, and for what it's worth, I have to add it because I'm here and it's what I do. But if you trade the no-nonsense Forex way of trading, this will absolutely happen. And even better, you will know exactly when that gazelle or wildebeest is going to cross your path because it's the exact same time every trading day.
All right, let's move on to the next one. And this is the one that I really want to get across to you. So I know you've been sort of listening, sort of not, just kidding. But this one I really want you to pay attention to. Short-sightedness. This is one of the problems, and this really ties in with the get rich quick, is that I was truly unable in my early 20s. And I don't think anyone is able, I just don't think it's possible, to where you really see a life for what it truly is. Now I'm in my 50s, and I remember hearing people say, oh, I would never go back to being a teenager. When I was a teenager, I thought, these old people suck because being a teenager is so much fun. And now that I'm older, I have to say I would never go back to my teenage years because you get it, you understand it. And so in my 20s, my ambition led me to shoot myself in the foot a lot of times. It caused me to, again, push too hard and overtrade and sometimes overposition size. And it just caused, I slowed down my process in my early 20s for sure with my ambition, for sure, because I wanted it too much too fast. And I remember a moment where I looked at my results. Again, I had good results, but remember, I wanted to be Bill Gates. I wanted to be Bill Gates. I wanted to have hundreds of millions of dollars by the time I was in my 30s. I looked at my results and I said, I guess that's not going to happen. And I remember my dream died at that moment. And I remember telling myself, I guess I'm just going to have to work my whole life to become wealthy. And from that moment on, I just put my head down and just day after day after day after day, I just worked and followed my system, did my thing, built new systems, tested it, did my thing. And I remember about, let's call it 5 years later, I actually stopped, looked around, and said, holy shit, I think I made it. But that's all I did. And then I put my head back down and kept working. That is what age and wisdom brings. And I wish that I could just give that to you if you're young. I wish I could just show you, go into a compounding interest calculator and just see what 25% a year will do for your life. It's amazing. But if you push too hard and you can't get that 25%, it doesn't mean anything. So the one thing I really want you to take away from this is that it's not going to happen for you in the next couple of years. It's just not. And guess what? If it does, great job. I'm going to pat you on the back, but don't set yourself up for that trap. I need you to just realize you're just going to have to do this for your entire life. And I don't mean just this as in trading. I mean this as your other responsibilities. This is your other stresses in life. This is your other thing. It's just how life is. And the sooner you can kill off that delusion of grandeur that you're going to be the next Bill Gates or you're going to be the next Warren Buffett or Elon Musk, the earlier you can kill that and just realize, hey, I just want to have a good life, it's going to help you out so much. Just put your head down, keep working, keep growing. One day you'll look up and say, holy shit, hey, I think I did something here. And then you're going to say, I don't care, I'm going to keep going. That's what I really want you to take from this podcast.
Yeah, and I'll throw in a takeaway too, and I'm really hesitant to do this because this idea is on the spreadsheet. Maybe this should just be the next episode you and I do, Rob, and just kind of continue off of what we've been talking about. But it's an absurd idea to somebody with a ton of ambition in their 20s because this is not what they want. But it doesn't matter. This is what it has to be. Every day I wake up, I'm not doing anything for myself for the right now. I am either doing something for myself either 1 year ahead or, as is more often the case, 5 years ahead. And I've had this conversation with friends, and they're like, well, yeah, Patrick, that's your problem, is you're not doing anything for the now. You're always doing things for the future. And I'm like, you know what? You're right, but you also know what? One day that future comes. And I am super, super happy that my 5 years ago self had the foresight to do things for me in the future. Because man, is it paying off nicely. And so, again, when you're all geeked out on ambition and you're young and you want things now, this is not the way to look at it. But man, oh man, if you can just start putting down the pieces in place right now and play the setup game instead of the instant gratification game, oh buddy, it gets really, really good when that time comes. I can't explain it to you. It won't make sense to a lot of you, but I can't think of a better way to explain it, and I can't think of a better process because it just keeps on paying off over and over again. And then once it finally does, you're still in that process of doing things for yourself 1 to 5 years down the road. And so it's almost like Christmas every year. Something you did in the past will be paying for itself for you every year of your existence. And it's fantastic. It's like just getting paid for really smart things your previous self did. So if that sounds good to you, use your ambition for things like that. Not for what's going to happen to you today, but for what will happen to you in the future. Because like with Rob said, I used to fear older age until I got there, and then I found out how awesome it can be. But the only reason it's awesome is because I did things for the mid-40s version of VP when I was in my 20s, when I was in my 30s, and when I was in my early 40s.
One of the things I always used to tell my kids was where you are today is a result of what you did yesterday. Where you'll be tomorrow is a result of what you did today. I have about 5 nephews, and I've all sat down with them and talked to them when they were 19, 20 years old. This is the advice I gave them all. Figure out what you want to do in your life as fast as possible. Figure it out in your early 20s. Then you need to spend 5 years throwing everything you have at it, becoming an expert with no expectations that you're going to make any money doing it. But after those 5 years, when you then get into your 30s and you've got 7 or 8 years of really good experience and really 7 or 8 years of really just eating up every single bit of expertise you can, then you're going to be able to go out in the marketplace and you're going to make a lot of money for the rest of your life. That's the advice I give all young people now, is figure out what you want to do as early as possible. Spend 5 years working at it with no expectations of making any money. Or if it's a job, if it's a career, you're going to make the lowest amount of money that someone could possibly make. That's not your goal. Your goal is to build the skills to be able to pay off in your 30s, 40s, 50s, and 60s. I didn't understand that. So play the long game. One of the ways that I found out how to play the long game was, instead of just looking at my trading account, I started looking at all my net worth, all the other things that I was doing at the time. And I thought, oh, okay, let me focus on my net worth, not hyper-focus on my trading. That helped me so much, to where now, yes, I had all this ambition, I had all this energy, but it wasn't hyper fixated on my trading. It was hyper fixated on growing net worth. Patrick, what do you think about that?
I don't know how I feel about that, because I think we all start at a place to where our net worth is really small. And it's like, well, how do I even get off of zero? There's other things that you have to put in place just to simply get off of zero. And the big question is, how many years does that take? It might take 3 to 5 years just simply to do that. So I know exactly what you're saying. And at this point in my life, I agree with it. But I just, if I'm giving advice to somebody who's younger and has a net worth of either zero or in the negative, how do you square that circle?
Well, I think the way you square it is by setting achievable measurable, and obtainable goals. So let's say there's someone who's 21 years old. Let's say they're at zero, or let's say they're even at negative $2,000 in credit card debt. Okay, so the first goal is, hey, I need to, obviously, there's two components of cash flow. There's income and there's expenses. You can change both. So if you're looking at this saying, okay, well, my rent is $1,500, this is this, and my job pays me $2,500 a month. Well, guess what? If there's nothing left at the end of the month, then you can't do anything with the math. So you've got to change those. You've got to change those numbers. You either have to decrease expenses or you have to increase your income. Or why don't you just do both? Things like, hey, I'm going to move back in with my parents, save this $1,500, and I'm going to pay off my credit card debt and save up that rent that I would have been spending. Then I can go out and get started with X. Again, it's setting these little goals. I know we all want to be that Warren Buffett or Bill Gates. Maybe you don't. But guess what? They got there just one step at a time as well. They had to take all the steps. So make sure that those goals are just, as long as you're growing, and let's say that you have a goal to grow your net worth by 10% a year. Okay, so the first year you're at $100, next year at $200. Hey, good job. You doubled your net worth. And then you go on from there and there. So that's what I'm talking about, playing the long game. Playing the long game and just taking step after step.
And I like that you brought that up because so many people, especially if they're young or, and I'll say this too, especially if they're from a very poor country and they themselves are in a bad situation, they tend to think that once they find trading, that they will be able to trade their way out of this bad situation. And maybe that's the case, but it's going to take a long time, especially for them because they have so many negatives in their life, so many things in the minus column that have to get fixed first. So I tell people, look, study and learn trading, and you probably shouldn't be putting any actual real money towards it for a while until you work on those negatives. That should be your main focus. So maybe don't get all starry-eyed with the upside until you at least shave off some of that downside first. Because that's just, it's almost trying to like winning a race with, a 50-pound backpack on. You're not going to be able to do that. You have to lighten that load somehow. And I guess people don't think that that's really exciting to focus on reducing negatives. But I think that's tremendously exciting because that's just less money I'll have to waste in the future. And that can go from the debit column to the credit column. So yes, be excited about trading. Focus your energy on learning the game and getting good at it. But when it comes to actual money, which is probably why you got into this game in the first place, do what you can now to drop a lot of that negative weight because, again, like we talked about before, that is going to do nothing but set you up for success in the future 1, 3, 5 years down the road.
That's really the message that we want to leave you is just grow. It's just growth. It's just growth over your whole life and just focus on each little step. Focus on putting one foot in front of the other. One of my favorite sayings is the only difference between successful people and unsuccessful people is when they fall forward. So when they get up, they've gone somewhere. So just keep moving. And to wrap this whole thing up, I want to finish out my Bill Gates story. It was somewhere in my late 20s. Bill Gates was on a talk show. And they asked him, is it true that over the past 20 years, you've only taken off 3 days of work, including weekends and holidays? And he said, yes, that is true. And I remember watching that. And I remember having this ambition. And I remember thinking, F that. I don't want any part of that. And now when I look at these Elon Musk, these Jeff Bezoses, I don't want to be them anymore. I don't want to be them at all. That looks fairly miserable. If you've watched the show The Crown, The Crown where the royalty of England, how wealthy they are. I want none of that. I want zero of that anymore. I just want to have a good life with enough money. I want to do some travel, take care of my family. That's it. That ambition was tamed when I really saw what it took to get there. And it really helped me focus on my true goal of just, I want to be happy. I want to have enough money to do things. And that's it. So I wanted to leave that story at the end with you just to show you, you know what? You don't need to be Bill Gates. You don't have to be Elon Musk. You don't have to be the greatest trader in the world. Just get better day after day.
Yeah, and that's Scott. I know we're towards the end of the show, but that goes in such a different direction as far as what it takes to be a six-figure guy, to a seven-figure guy, to an eight-figure guy. And the moral of that story is the higher up you go, the more you're going to have to sacrifice on the other end. And some people just aren't built for that. But everybody has varying levels of ambition. I would bet you listening to this podcast right now, you do have a lot of it. And I hope the main takeaway from what you got from this episode is it's great and it's essential, but it just has to go to the right places. And there has to be an understanding before you start deciding where that ambition is going to go. And I think if you can do that, you are well on your way. But when I say well on your way, it's going to take a while. So just know that. So if we can leave you at that, thank you everybody for joining us here on the Trading Psychology Podcast. Rob and I will both see you in the next episode.
Goodbye.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, he wakes up every morning and plants excellence. That's what he does. It's Rob Reinhold.
Well, thanks, Patrick. First thing I do is I plant my feet. Then I plant excellence.
And if you saw the title of this episode, you either know exactly what it is or you have no idea what it is. This is one of my episodes, so I'll go ahead and kind of kick things off here by defining terms. And the term planting bamboo is a really interesting one. So this one hits home with me a lot because when I first heard about it, I was still kind of on my way. I was on my journey, and things had been going for a few years, and they just weren't working out. But I kept at it, and that was a really hard thing to do, but I just didn't see any other choice. And I see this video pop up on YouTube with this Nigerian pastor talking about planting bamboo. And I'm like, all right, well, I'm bored. Let's see what this is about. And he told the story, and this is going to be hard to believe for a lot of people out there, Mr. Roboto here, Mr. Made of Wood. But I shed a tear, one isolated tear, when I listened to this. And the story goes like this, if you don't know. There's different variations of it, but they all kind of go the same direction here. There's a man who lives in his house, and he goes out to the front yard and starts planting bamboo in his front yard. Now, bamboo, if you didn't know, does not grow at all for 5 years. But when it does grow, it grows a lot right away. And so he knew this, but most of the world doesn't know, unless you're in East Asia and you're familiar with bamboo. They don't know what bamboo does or the growing cycle of it. It's very unique this way. So he's out there and he's planting the seeds and he's out there watering dry ground every day. And nothing's growing. And obviously his neighbors are coming by, and after a while they're like, what are you doing? He's like, I'm planting bamboo. Like, but nothing's growing. He's like, no, you just got to keep watering it. And so, then obviously the neighbors start to talk, and then his family hears about it, and then they start to talk, and they start having a little bit of an intervention, and because they honestly think this man's going crazy, going outside every day for 4 years, watering dry ground. And so the time finally comes when the bamboo starts to grow, and then it grows 20 stories high. And so the moral of the story is, of course, anytime you start any type of endeavor that has the potential of securing your future, this is kind of how the process is going to go. And it might not even be 5 years, it might be longer. But you just got to keep going outside and keep watering dry ground, despite what other people might say or think. And I was going through this too, Rob. I had family coming to me, I had friends coming to me, said, hey, why don't you're a restaurant guy. This is what you understand. This is what you're good at. Why don't you just go into management? And I didn't want to say it out loud, but I was like, I don't want to work 70, 80 hours a week and give up on the thing that I'm building just to work a job that I know I would hate. Like that's always sounded like a death sentence to me. And so, as usual, everybody thought I was just crazy until the day came where I wasn't anymore. And so something like this really resonated with me, and I wanted to make a dedicated episode to it because, Rob, I just don't see any other path forward for most people. And in order to take this path, they have to, one, choose the path, and then two, really, really embrace it for a long time and eat a lot of shit along the way.
This reminds me of a saying: everyone's jealous of where you are, but nobody's jealous of how you got there. I love that saying. That, once you make it, people look back and say, oh, all that work was worth it. But when you're out there every day watering the ground, no sprouts are coming up, and not only are you wasting your time, but people are like, you're wasting your money because that water had a cost. You're wasting your time and money watering this thing that nothing's happening. Just with the faith that it's going to grow in 5 years, that's exactly what success is like. Now look, some people, they hit it big, they hit it quickly, and I love that. I love that story for them. But for the vast majority of people that end up being financially successful in their life, it started exactly like this.
And most people don't choose this path for a couple reasons. One, I think people are just generally short-sighted, and they just kind of do what's good for them right now. And if they do put something away, they kind of do it with investments. They hand it off to somebody else, and they just kind of hope they'll have enough to retire. And usually, unless you were already rich to begin with, you don't retire with very comfortable money. I'm seeing this with my parents, my aunts, and that whole generation. They retired, but it's not like they can't do all the things they want to do. So, but this is just what normal people do. And I'm talking in the United States, where people are more entrepreneurial and they take more chances than people in a lot of other countries. And you still really don't see it in the U.S. And I understand why this is hard. Because, okay, you do something like this, one, not just really for the future, but to get out of a bad situation. A situation with work or your living arrangements, whatever you don't like. And who wants to work now for a situation they can get out of 5 years from now? That just doesn't sound very appealing to me. And I think this is the number one reason why people don't even start. Would you agree, or do you think there might be another reason?
I definitely agree with those psychological reasons, but this is also just a mathematical equation. The biggest thing that makes a difference is compounding interest, period. And that's why this Growing Bamboo episode is such a great one, because this is literally about exponential growth. How at first it seems minuscule. It seems like you can hardly see the growth. Let me just give you an example. Let's say someone at age 20. So let's say someone at age 20 decides, I'm going to put $1,000 a month away in savings. Now, look, I know at 20 that's probably hard, and I know that's not realistic, but I'm just using even numbers for the sake of math. So at the end of the first year, and let's say all they did was put it into a 5% dividend paying stock or a bond, or just something that pays 5%. So at the end of an entire year, they will have contributed $12,000, and they would have earned a whopping $600 in interest. So at the end of that, they'd have about $13,000. Just think about all you had to give up for that $1,000, and at the end of it, you've got $13,000. Well, at the end of 5 years, that person's going to have probably right around 80, 90, let's just say $100,000. Let's just round up $100,000. Okay, $100,000 earning 5% a year gives you $5,000 a year, or about $450 a month, or $400 a month. That's not great. Look, that's great. If someone just gave me $500 of income a month just from the savings I did, that's great, but that's not life-changing. That doesn't do anything. hardly, that's not even a car payment in the US anymore. But let's keep going. Let's go to year 10. Year 10, when it's somewhere around $200,000. Now it's $10,000 a year or closer to $1,000 a month. Now we're starting to be able to pay for some stuff. This is after 10 years of sacrifice, of putting that $1,000 away, and that's all you've got. And then you go to 10 more years. It's now $400,000. This person is now 40 years old. They've been doing this for 20 years. That has grown to about $400,000. Now they get $20,000 of interest. Okay, now they're getting about $1,600, $1,700 a month. Okay, that covers half of a mortgage payment in the US. That starts to cover some things. And then we go forward to age 50. They now have $1 million. They now have $1 million, maybe a little bit more as we're adding in that $1,000. Now they're making $50,000 a year for doing nothing. You take that to 60, now they're making $100,000 a year doing nothing. And now they can be like, oh, I want to retire. This is why it works this way, is that this is the longest game you can ever play. It's a long, long game. And at age 20 and 30, to have the perspective, I didn't have that perspective to look forward to what it could grow to. Until you live compound interest for yourself, you don't really get it. I thought I got it. I'm telling you what, I didn't. When you have millions of dollars and you're making 10% a year, if you have $3 million, you're making $300K a year. A 10% return is very doable just with basic investing things. You don't even have to trade. You just have to do basic investing. Compound interest is the real key to this.
Yeah, and I've touched on this numerous times on my other podcasts. There's people who listen to this podcast that actually don't know I have another one. It's an investing podcast. It's called The 10-Minute Contrarian. You can also get it on whatever platform you're listening to us right now. But what I say there is, we do talk about the rule of 72, which illustrates on more kind of black and white terms what you were just talking about, Rob. And I always tell people too, I was like, look, all the money I save as far as cash and all the money I spend, I get paid for it. I make sure all of my cash in the bank is earning interest somehow, whether it's on the blockchain, whether it's through a bond or a money market fund or a bond ETF, something that actually pays me for having the cash there. And then when I spend money, I always make sure I am part of some like loyalty program with wherever I'm at, which grocery store, whatever the case is. For some of you guys, it's gasoline. And I'm also using credit cards that give me points. Now, when you talk about this to somebody for the first time, they kind of do the math in front of them, and they're like, oh, well, this really doesn't seem like a whole lot. But they're missing the point, Rob. The point is what you talked about. If you keep doing it and just do it all the time, that little number you're looking at in front of you gets a lot bigger over time. And so this is really hard for people to understand. So that's another reason why I don't think a lot of people start. And I also think there's a couple more reasons that are really preventing anybody from doing anything like this. Before I get to those, do you have any you want to add or an extension to what I just said?
Yes, Patrick, we have never talked about this before, and you have opened up Pandora's box. I am the most annoying person. If you meet me in real life, within 10 minutes, I'm going to be talking about credit card points with you. I guarantee it. It's like that really annoying religious person where you have any conversation with them and you end up talking about God or Jesus eventually. I'm like that with credit card points. I love credit card points. I am completely devoted to playing the game. I travel the world and spend little to no money on flights and hotels. And I go on big trips. I go down to Australia, New Zealand. I go to Europe. I go wherever I want, most of the time business class, and I use points to pay for it. So when you total that whole thing up, and actually, Patrick, I put this into ChatGPT. I run everything through ChatGPT and it tracks all of my credit card points, and it tells me how much money I'm saving by using these points. I just took my family to New York That New York trip would have cost $9,800. I ended up spending about $2,000. So I'm sorry, I told you opened up Pandora's box. I know this is not an episode on credit card points, so I will shut my mouth and let you take over.
It's not, but it needs to be said. I mean, the more we can glorify something like this, the better, because this is a perfect example about how people see what's right in front of them and they're not interested, but they have no idea how it can affect them in the future. But I will say that our example with interest and credit card points and the example of planting bamboo both have one thing in common, and that is they have definitive outcomes. A big reason why a lot of people don't even start is because there is no guarantee that anything's going to grow in 5 years. It could take longer than that. It might not grow at all. There is a real chance of that happening. You know, a lot of it has to do with how much work you're actually putting into it, but this is a real problem for a lot of people because there is no guaranteed outcome. And the one thing I guess I would say to them is, well, there is no guaranteed outcome in life, but at least you're giving yourself a chance. You know, you tell me, sir, madam, what's the alternative to that? That would be my biggest question.
And you're exactly right. The alternative is to not do this. Let me tell you a little story. I've never told this story really on any podcast before, and very few people know about it. But back in about 2003, 2004, so I've been trading for about 7 years, and I started to have a good amount of capital, and I started a development. So my buddy and I bought a property, and we started to develop, I think it was going to be like 18 lots on this property. It was in a historic district in my city, so we had to jump through lots of loopholes to, get city approval and all this stuff. And I knew that the market was going to turn. And we needed to get it done within the next 2 years. This was like 2005 in the US. It ended up taking us 3 years. When we finally got city approval, it was 2008. And do you remember what was happening in real estate in 2008 in the US?
It wasn't great.
So we ended up holding on to the property, but I had sunk like $300,000 into development costs. And by the time we finally sold it a couple of years later, we sold it for less than we bought it for. That set me back quite a bit. That one event right there, when I take a look at my compounding interest, if you take a look back at like my equity curve of my net worth, that slowed me down quite a bit. Do I regret it? No, not at all. Why? Because I've done other stuff like that that's been a great success that did the exact opposite to my equity curve. The only alternative is I didn't take any risks. I didn't take any shots. And if you live a life like that, you can get a wage, you can save up, and hopefully you have enough, but you'll never have that life that you dream of.
Yeah, and honestly, there's two sides to this. The one is the aspirational side, but the other one, and I don't like using this angle, I would rather go pure aspirational, but there's a fear angle too here, Rob, because I just don't think people have much choice nowadays. What's going on in the world, and I explained this on a podcast episode 2. If you go since the year 2020, start there. So we're just talking this decade. The United States dollar, according to government inflation statistics, has lost just a little over 25% of its value. That's a quarter of people's earning power that's just not there anymore. And inflation doesn't really go the other way to where you get that back. It's just a matter of, do you lose more or do you lose less every year? Now, you and I can probably talk about this for a while, Rob, but we know from being traders, we have the CPI news, and the CPI doesn't factor in things like housing, gasoline, the things that most people the things that make up most people's expenses. So there's a company out there called Shadow Stats, to where this man attempts to figure out the real inflation out there, and he has his own numbers. And so I put it into AI and said, okay, Tell me what this number would be, not by using made-up government statistics, but tell me what it would be using shadow stats, their statistics, in the last 5 years. The number jumps from over 25% to just over or almost 65%. 65% of people's earnings, what they're able to buy with their money, gone in the last 5 years. Now, the real number is probably somewhere in between those two, but even that 25% was scary as shit. And it just, we have accelerated the path due to the amount of spending we do now compared to what we used to do, and how much we wasted, trying to solve a problem back in 2020, to where it's not going to get any better. And on top of that, if it wasn't scary enough, there's a good chance for many people out there that AI is going to take a chunk out of your workforce. Whether it's you, whether it's your friends, whether it's all of you, it's probably going to take a chunk out of some of you. It's coming. We know it's coming. And even people who think they're insulated probably aren't going to be. So, again, I can understand just maybe not having the aspirational side and you really don't care and you're just kind of living for the now. Rob, I don't think now you have the choice to just sit there and go about your day like most people do all the time.
Totally agree. And I know this isn't an episode on inflation, and maybe we should do one on inflation. But, I've really jumped into these inflation studies and how they calculate inflation. And what you need to understand is the way that, again, this is getting way off the topic, but I think it's so interesting. I want to talk about this so everyone understands how they calculate inflation. If you were to buy a computer today for $1,000, and then next year the government goes out and says, okay, how much does a computer cost? If a computer costs $1,000 next year, but it's 10% better than the computer was before, they mark that price went down 10%. So that's really the big reason, and it's, we could debate of whether or not we should do it that way, but that's the big reason why we have this artificially low inflation rate, because they're saying, oh, computers got 10% cheaper because you got 10% more computer for the same price it cost you last year. Technology and the advances in technology will only increase this difference between the real costs and what the government numbers are. Again, I know this is not about psychology whatsoever, but I think it's just such an interesting thing because you're exactly right. Inflation really doesn't matter as long as your income goes up more than it. Let's say that inflation was 10%. That sounds horrible. But let's say that your wages go up 20%. You are richer. You're richer. That inflation didn't hurt you. In fact, part of the reason your income went up was likely because of inflation going up. It actually helped you. But here's the problem. In America, especially if you're in the bottom 50% of earners, wages have absolutely not kept up with inflation. And every year you go to work, you go to your job, they give you your 3% yearly raise, and inflation goes up 5 or 6%. You're right, Patrick. This isn't about being aspirational. This is about survival. So the question is, how do you increase your income faster than inflation? And to do that, you've got to do something different than everyone else is doing.
Yeah, and I'll even argue too, if that number is closer to 60% or even somewhere in the middle, even the higher wage earners, only a very small amount of them actually had their wages keep up with inflation. I really do think this is affecting almost everybody. And, people will come back and say, well, okay, well, that just means that I need to put my money into things like gold or into things like Bitcoin or into things like assets. Because, people say, oh, we're doing so well. Look how great our stock market is. It's just like, well, yeah, that's also a byproduct of a weakening currency. It's like, well, there's one stock market doing way better than ours, and that country's name is Venezuela. It'd be great if you had stocks there, but most people there don't. So this divide just keeps getting bigger and bigger and bigger. So, yeah, okay, and you want to save in Bitcoin and gold and assets, that's fine. That's a good idea, but you need money to do that. And you're just, at the end of the day, the big solution is to make more money. Make more money somehow. Now, you can do that by working extra jobs. I've done it. It sucks. You don't have any time to build your dreams or anything like that. Trading becomes very hard, but that is an option. Or you can start planting some bamboo. Now, here's the thing. Most people listening to this podcast, they are already trading. So they think they are in good shape. I will say to you, dear trader, you need to do more. You need to plant more bamboo in other places. Have multiple streams of income in case one just doesn't work out, in case multiple don't work out, or in case over time you have all three going, but these things aren't necessarily consistent. You're going to have times where some of your income streams don't pay you much, but the other one will actually start footing the bill, and covering, and then vice versa. These things fluctuate. As somebody who has a lot of different income streams, trust me, they go up and down with the tides. But you need to build them first. And so you need to start now so you can build these income streams, make more money, and then you can decide how you protect the fiat currency you're actually making. But step A has to come before step B.
Getting ahead, Patrick, is just simply a mathematical equation, and it's simple. Now, simple and easy are not the same thing. It's simple. It is absolutely simple. What you just talked about, this inflation thing, the only people that beat inflation were asset holders. Anyone who was not an asset holder, they fell behind. If you owned assets, if you owned a house pre-COVID, you killed it. You killed it. Just by buying it, you killed it. Your house went up 50, 60, 70%. That's real money in your pocket. You need to be an asset holder if you want to beat inflation. Because I'll tell you what, inflation's not going away. It's going to be dragging at you your whole life. You must be an asset holder. So, if you don't have assets right now, it's a really simple mathematical equation. How much money do you have coming in? How much money do you have going out? If you don't have more money coming in than going out, you have no ability to buy assets and become an asset holder. It's a very simple equation. You must have money left at the end of your monthly budget that you can allocate towards investments, or else you will never get ahead. You will always be falling behind. So, in this episode, we're talking about bamboo. We're talking about both income. We can even talk about cutting expenses, and we can also talk about growing your assets. I hope everyone can see that in their brains so clearly. You have to have more money left at the end of each month than you spent. If you don't have that, you got to fix that first. Then you take the extra, you put it into assets, and you do that over and over and over again your whole life. And then you grow those assets, and one day you'll have bamboo coming out from everywhere.
Yeah, but the main focus I really personally want to preach this episode is the make more money part, because like we just said, that does have to come first. And you are going to continue to see as this divide gets bigger and bigger and inflation gets worse and worse all over the world, these stories of how your everyday person just can't do anything anymore. And it's going to be very sad, but I guarantee you at the same time, my sympathy is not going to be as high as some others, because those people had the chance to take a chance and to try and plant some bamboo on their own, but they just didn't. They were either too afraid of the risk. I'll bet a lot of people were too afraid what their immediate family was going to think about them. And I get that. These are the people you have to cohabitate with every single day. You can't have them thinking you're crazy. You can't have them losing faith in you to provide. I get that. But there's going to be a host of reasons why they didn't even start. And then there will be another cadre of people who did start, but after one or two small setbacks, they completely quit. So my message to you, dear listener of this fine podcast, is to make sure you do not end up like either of these two people. You must start and you must keep going. And I will add the third that I said earlier. You must also make sure you have more than one iron in the fire. Because the best case scenario is the bamboo starts growing in all of them. Worst case scenario, none of them do, but at least you really upped your chances of something good happening by having more of those irons in the fire. And so this is going to take a lot from you. I was just planning one thing of bamboo. My other businesses didn't come around until a little bit later. But I can only imagine, starting 3 different projects that aren't going to pay off for a while also working a job, while also providing for yourself and family members. This is not going to be easy. This is hard, but like all good things in life, it's supposed to be difficult. That's the only thing I can really say about this is, at the end of the day, I just don't think you have a choice but to put your head down and do this multiple times in different ways. The good news, one of the things I can say at least right now is, Rob, tell me if you agree, but with AI, I think the opportunities have actually gotten better here, not worse, just in terms of, 1, finding these opportunities, 2, using AI to leverage these opportunities once you get them. I am using AI in every single thing I am doing right now, and it has been to my benefit so far.
I just had more time, Patrick. I would own 10 more businesses that were all run by AI. And I keep telling my daughter, you need to run this business for me. Here's the idea. You need to do the work. I don't have the time to do the work. You need to do the work. It's just not who she is. She's listened to a few of them. But I did want to tell one story that I used to tell my kids. One night, my daughter and I were talking about something that she was trying to do. And she was telling me all the steps that she had to do and all the work she had to put into it. And she's like, Dad, it's so hard. And I said, oh my gosh, that's amazing, because that means it's going to be awesome. And I remember her looking at me and thinking about that. And I said, I'm so glad it's hard, because when you do all that, do you know how rewarding that's going to be? Do you know how amazing that's going to be? And she was looking at it like, oh my gosh, it's so hard. It's going to be so much work. It's going to take so much time. And I really wanted to reframe that into, can you imagine how amazing that's going to be? And I told her, when things are hard, you know they're worthwhile. That's how you know something's worthwhile. Is it hard? And if you find yourself in a situation where you're like, oh my gosh, this is hard, remember this lesson. It's going to be amazing once you get through all the hard work. So I think absolutely everything you're saying, Patrick, spot on. And when you said earlier in this episode, you said you think people have to do this. It's not even a choice. At first, when you said that, I'm like, maybe, maybe not. I'm with you now 100%. You have to get in front of the inflation curve. You have to make more money than it costs to live. And you've got to invest it in things that go up in value. You have to do this. There's no choice.
But here's the good news. Once the bamboo starts to grow, you don't have to worry about just surviving. Things can actually get really good. For example, like I said, I'm not this multimillionaire success story, but I am financially free, and I can say that all the money I earn right now is because of things I did 5 years ago. And this motivates me every day to work hard right now for the future version of VP 5 years from now. That is tremendously exciting to me. It wasn't before, because 5 years was a long time ahead. But now that I see how it works, and now that I'm getting paid for my previous work now, all I want to do now, Rob, is just keep doing more things and keep learning new methods and techniques and ways of investing and taking on new jobs, just so I can pay myself even more and better 5 years, 10 years, 15 years down the road. Now that I see how this works, I mean, guys, once you get it, you get it. And that engine just never, ever stops. I can only speak for myself here, Rob. How do you feel about it?
You're exactly right. And first, at the beginning, everything is sweat labor, or sweat equity, let's call it. If you've never heard of this term before, sweat equity is like, let's say you buy a really dumpy house. Let's say you buy a really dumpy house that needs lots of work, and you buy it for $200,000, and you put a year of your life into it. you spend $30,000, $40,000 and you fix it up, and by the end of the year, the value is $300,000. You created that equity through sweat, through your hard work. You're going over there night after night after night and patching holes in the wall and repainting and doing all the stuff. That's called sweat equity. Everything in the beginning is sweat equity. It's 100% sweat equity. As you start to grow that nest egg, your nest egg starts to take some of the pressure off. And all of a sudden, you start to see things that aren't sweat equity. It's actually just compounding interest growth. And then once you get, as I said, a large account, trading a $1 million account is so much easier than trading a $10,000 account. Why? Because you're free. You're like, I'm going to put a little bit here, a little bit here. And it's just easier. And when you only make 15% a year, that's $150,000. When you're at $10,000 and you work your butt off, you work and work and work, and at the end of the year, you've made $1,500 for all that effort, that's really hard to look at that sweat equity and say that was worth it. But remember, once you grow your assets, the same amount of effort is going to create larger results. That's what I love about this bamboo analogy, is that it just keeps compounding and compounding and compounding. And it just came from a little seed and 5 years of sweat equity.
Now, speaking of, it's not quite bamboo, but I guess it's in the same family, Rob. You were telling me about your new middle-aged man hobby, which I found to be tremendously interesting and actually very relevant to this episode. Do you want to tell everybody now, or should I just edit this question out?
No, we'll talk about it real quick. It is bonsai. And you're right, it is a very cliche thing for a 51-year-old man who has a little bit of free time and money on his hands to get into. I got into it earlier this year, and when I really started to learn about it, I realized it takes probably about 10 to 20 years to start a tree from scratch and finally get it into its final pot. And there are trees out there that people have been working on for 40 years. Can you imagine? And that's why bonsai is just so mind-blowing, is that, can you imagine planting something 40 years ago, watering it every day, making sure it's getting the right sun? Every now and then it's losing some leaves and you got to go do some emergency stuff to try to get it to survive. And then 40 years later, you finally do your final clipping, your final potting, your final wiring, and it's now a showpiece. It's amazing. And so I'm starting this process, and now I got a bunch of trees here in my office and outside, and I'm excited for those days. I can't wait for 40 years to finally reshape these trees, but I finally understand what it takes. In my 20s, I could have never done this in my 20s. I just couldn't have done it. I didn't have the patience. Now, I'm looking at all these trees being like, you know what? I'm so excited. If I water this thing every single day and I take care of it and I fertilize it like it should, I can't wait for in 15 years for me to bear the fruits of my labor. It's awesome. Take this analogy, put it into your life, and just build and grow.
And so for the majority of us who don't have Rob Reinhold money or time, I guess the solution would be me repeating what I was saying earlier, is that, whatever motivates you here, whether it's aspiration or fear, let them both motivate you, because it's both true. The light at the end of the tunnel here is really awesome and is worth any time or shame or setbacks or heartache you put into it. But also, there is going to be a real and very ugly dichotomy, I'm afraid, in 5-10 years, maybe sooner, of the haves and have-nots. And most of the haves are going to have some type of bamboo they planted somewhere. You can't just invest your way out of this. You got to have the money to invest in the first place. So do whatever it takes to get some of these things started now. Multiple things apart from just trading. It's great that you already got this far with trading, but this is also a great thing because you are obviously the type of person who's not afraid to plant a little bit of bamboo. So go out and plant more. And hopefully in a few years, or maybe even sooner, these things will really start to proliferate, because it doesn't always have to be just 5 years. there is a chance it could happen sooner. Don't expect it, but it certainly could. But again, none of this stuff even matters if you don't get started with something as soon as possible. So, Rob, do you want to leave them with anything?
No, I've left them with everything I can think of.
Yeah, we left it all out in the field this episode, traders. But thank you for joining us here at the Trading Psychology Podcast. And on that note, Rob and I will both see you in the next episode.
Bye, everybody. Go plant those seeds.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, is the man who never gets fatigued. He doesn't go to sleep. He sleeps standing up. He's the GOAT, Rob Reinhold.
Thanks, Patrick. I actually wish that was true sometimes. In lots of times in my life, I wish that I didn't have to sleep. And I know a lot of people love sleep, but to me, I always think, how much could I get done if I didn't have to sleep? It's almost like a chore that I need to give my body rest. So yeah, I would love to run through life that way. And you say never fatigued. That's actually not true, because I try to run through life without sleeping and end up getting fatigued. It's weird.
Kind of the opposite of me. When I'm awake, I go, but I cannot wait until my head hits that pillow. I still take naps. And I will probably always take naps. But anyway, this episode, Rob, it's more about something called decision fatigue. Now, listeners at home, if you haven't figured out at this point, we either come up with something brand new, like we did last time with planting bamboo, or we take episodes from the past and take certain concepts of those episodes, or combinations of concepts from those episodes, and drill down even further into episodes that I think are very relatable, that people can actually kind of wrap their hands around and say, oh yeah, I suffered from that before, or I suffered from this now, or I still see some of these things creeping into the way I trade, and it's concerning. And I think this one is pretty common, if we're being honest with ourselves. So pay very close attention to this episode as we go ahead and start, as we do with every episode now, and define terms. So Rob, this is your creation. So go ahead and define terms in your own words, and I'll let you know if I agree or disagree. I'll probably agree.
All right, thanks. Decision fatigue is an actual thing that's been studied quite in depth. I mean, if you type in, decision fatigue in Google, you're going to be led to actual studies where they've really studied this, and it's a real thing that causes people to underperform. So I'm just going to read the definition here. Decision fatigue is a state of mental exhaustion where the ability to make further decisions is impaired after a series of choices. It's the feeling of being mentally drained and overwhelmed when faced with numerous or complex decisions. All right, so numerous and complex decisions. That absolutely hits trading, and that absolutely hits people that are shorter term in nature, who have larger stakes going on. So again, if you are over position sizing and you're doing a lot of trades, boy, it's really going to lead to the point where you just don't have the capacity to make the right decisions. It's why we at Maverick are not big fans of scalping and day trading. Theoretically, it can be done, but can it be done at a high level for years? And this one right here, decision fatigue, is absolutely going to be a drag on that.
But this goes both ways. This pertains to people who scalp. It also pertains to people who trade on the daily chart. And I am living testament to this. I have a very busy day. Sometimes, and I know at a very certain time of the day, a very exact time of the day, I need to be in front of my charts and start making decisions. Problem is, life doesn't always cater itself to that schedule. But I know if I'm going to do things optimally, I have no choice. So that can be very stressful in its own right. I can be making all these stressful decisions minutes leading up to that time where I have to turn my charts on and start making real money decisions. And I am not in the best headspace at all. There's no way I'm not still thinking of the 5 decisions I just made for that day and the consequences of those decisions, and the decisions I have to make still before the day's over. And I know a lot of you have full-time jobs. A lot of you maybe have several jobs, and you're making a ton of decisions too, not only at work, but when you're off of work, completely independent of having to sit down and trade. So this goes for scalpers. This goes for daily chart traders too.
And it also goes for anybody who's human, because life is complex out there. You know, the times of my life where I've had this decision fatigue has always been like, I feel like I can keep trading under wraps, I can keep my business under wraps, but then when the personal life gets involved, the family, the relationships, that's when it gets really heavy. And I definitely am not in the right state of mind to trade.
100%. And so now that we have defined the actual terms and showed how it relates to different types of traders, let's make this even more relatable, Rob. What are some of the signs, the actual symptoms and signs that we need to look for in terms of what causes decision fatigue?
I think the most common one is a feeling of being overwhelmed. I think that one is just such an easy one to say, oh my gosh, I might be in this place of decision fatigue because I am absolutely overwhelmed. So any of the times you've felt overwhelmed, I think it's a really good time to stop and step back and say, maybe I'm not in the right place to make good trading decisions. That to me is my number one way to tell if you have it. So then we can just break down, okay, what does feelings of overwhelming, like what does that mean? You can be irritable to where like, if I have to make one more GD decision, I'm going to lose my mind, that kind of stuff. Irritability, brain fog, where you say, I just can't deal with it right now. How many times in your life have you said that? I just can't deal with that right now. Like one more thing, I can't deal with it. That comes with mental exhaustion and decreased willpower. So these are the things that they've studied. They've actually studied these things and said, hey, when you hit this point of decision fatigue, these are the things that are going to happen to you. Sometimes people get headaches, but it really comes down to, sometimes it is just apathy, where you just don't care anymore. So these are all the signs to let you know that you're not in the right place for trading.
I can remember vividly having this and some of the really bad decisions I made as a result. You have those days where there's so much going on and it's stressful and you're just having a bad day overall. It started bad. It's still bad. You woke up with a headache. You still have a headache because now you're stressed. And all of a sudden, here comes trading time, and you can see it on your clock, and you're like, fuck, it's the last thing I want to do right now. So what I would do, I would open my charts, and Murphy's Law, my charts would be giving me like 6 or 7 signals, and like 4 of those would be on the euro. So now I got to do math and divide my risk and stuff like that. And I'm just like, you know what? Fuck it. I'm going to pick one trade, and that's the trade I'm going to make, and I'm going to ignore the rest. Optimal? No. Stupid? Probably. But that's, you know what? I was so angry at the fact that I actually had to sit down and trade, even though it's literally only for 10 minutes a day. It was just too much. And as a result, I ended up making a pretty poor decision. I don't even know how that trade ended up, but I know that that is not the optimal way to trade. And the margin of error in this game is so small that if you're not trading optimally all the time, I'm not sure what you're doing. You're probably wasting your time in this game if you're not doing everything you can to optimize. And if you're going to sit there and make one trade when 6 were on the board just because you were all tired and pissy, absolutely the wrong move. And I am guilty of it too, but it does not make it right.
Well, Patrick, that is the theme of this entire podcast, is that the things that are going on in your brain, whatever it is, and again, we've done a bunch of episodes where it's almost endless, creates these feelings and impulses that cause you to make non-optimal decisions. And that's why this decision fatigue is so bad, is because again, these are all the things that they've studied. They say it depletes your self-control. So your self-control that you had yesterday or last week, you no longer have it. So the decisions you make, it could be very impulsive. Or on the flip side, they could also be very conservative. And this is the one that I actually have seen more often than not, is that people say, you know what, I'm going to be conservative, or I'm just going to not do it, or I'm going to be safe. I'm going to sit this one out. I actually see that as more common than the impulsive actions. And we've all talked about the impulsive actions, but these conservative ones where you say, I'm going to err on the side of safety. I'm not going to take this trade because of this. I actually see it more in being more conservative than impulsive. What do you think about that, Patrick?
Well, that's really interesting because I think the example I gave, even though I was being rushed and stressed, that I still ended up making the more conservative decision by under trading. So I guess my question back to you, Rob, is that's the answer you really don't expect. So why do you think it's that way? Why do you think that is?
I think it's because of binary outcomes. And trading has a very binary outcome of win or loss. And every trade we make, it is binary in nature. You win or you lose that trade. So when you are looking at this decision and you have this binary choice, binary choices have a lot of stakes involved. They've got a lot of emotion, and especially if you've got a decent amount of capital on the line, all of a sudden that becomes a very big decision, and a lot of personalities. It actually leads to inaction. Now look, for me, it leads me to action. I'm one of those where I'm going to make the impulsive decision. Most of the traders I see, though, it's going to cause them to pull back because of that binary nature of right or wrong. You know what? It's too much for me to handle right now. I'm too overwhelmed. I'm just going to step back. That's where I think is the most likely situation.
Yeah, and some people might be sitting there right now and saying, well, might that be a good thing to kind of dial it down a little bit and make a more calmer, more rational decision by trading less, by not making an impulsive decision? I would say no, it's not, for the reason I just stated before. Optimal is optimal, right? And if you at least trade the no-nonsense Forex way and like the Maverick way, and with any system that has, logical money management attached to it, missing out on a big winner affects your account more than taking a loss would. And so if you're going to get overly conservative and purposely pass up on potential long-running trades, I don't see that as a formula for success at all. And why? Because you weren't feeling good that day, because you were stressed. It's like, come on, get over it.
For me personally, I saw this a lot when I was a young trader. I started back in the 90s where there was not nearly the trading community as there is today. There was a few books, and we were all just trying to figure it out on the fly. And a trading system or a trading plan was literally just what was in your brain at the moment. And this is where I personally saw this decision fatigue, where again, I was day trading. I was putting myself in these situations that were really, had too much position size. They were binary in nature. And by the end of the day, I remember my first day trading, I went down to the Maverick trading office, went there, sat there all day, made one trade. It was on Sienna. I still remember it. And I sold it for like a $20 gain. And I drove home and my wife asked me, hey, how did it go today? I said, I'm exhausted. I got to take a nap. And I did take a nap. All of that because I was simply trying to make every decision that day on every stock that I looked at every chart I looked at. And by the end of the day, I was completely wiped out. That is just decision fatigue right there. And then early on in my career, I also ran into getting stuck. Now, we've talked about this, and maybe, Patrick, we should do a whole episode on getting stuck in a trade. I shouldn't say we all, but I think most people who have got into trading, you have gotten stuck in a trade. What it means is that you got in, it went against you, you should have gotten out, and you didn't. And you're stuck. And as this thing continues to work against you, you know that you should be getting out of it, but you literally can't click that button. You can't click that button because every single tick that thing is going lower, you're now making another decision of, oh my gosh, it just went 10 pips lower. Should I get out? again, you're making these decisions and then it just went another 10 ticks lower. Should I get out? All of a sudden, you get stuck. And what usually happens when people get stuck is the thing goes against them so far that they finally say, F it, I want out. I can't take this anymore. And they bail. And they bail at the point where the emotions are the highest, which means it's the point where the market is the most likely to reverse. I see this all the time. So getting stuck is definitely tied up in this decision fatigue because you've been making so many of these little decisions of should I get out? Should I stay in? And you've been making those and you've been conservative where you didn't want to take the loss. And finally, at some point when the emotions are the highest, you literally can't take it anymore. And so you just bail. I did that several times as a young trader, and you could have almost marked my exit with the bottom on the chart. Has that happened to you, Patrick?
It has, but when I was much younger in my journey, and I'll explain why. But first off, before I forget, when it comes to getting stuck, I want to hear people's stories about this, especially if you're a no-nonsense Forex trader. Now, the vast majority of you listen to this on audio, but this also goes to YouTube. If you want to go to YouTube, you can look this episode up and go down in the comments and tell me, as a no-nonsense Forex trader, a story about you getting stuck and what that was like. Because, and the reason I say this is because I've traded with indicators most of my trading career. And I started off trading overbought, oversold like most people do. And that's when I would get stuck. Because if you guys understand overbought and oversold indicators, really what you're waiting for that thing to do when you're in a losing trade is to turn back over. And if you can just get that indicator to turn and not stay in that territory all fucking day, that's when you start making your money back. And so sometimes you just sit there and wait for that to happen. And then sometimes it just never does happen. Or it does, but you've lost so much money, you're like, okay, now I got to wait even longer for this trade to go more my way, and I can come closer to breaking even. And then, like you said, Rob, right as soon as those words come out of your mouth, the indicator turns back into overbought territory, and you just continue to lose more and more money. And then what do? In my case, it was I let the whole thing run to zero, and that's exactly how I blew out a couple of my accounts. So that was a really big problem. Once I moved into trend trading, it no longer happened because if it was time to exit a trade, my chart would scream that at me. And that made it a lot easier for me to say, okay, I got to stop thinking I'm smarter than my charts because that's exactly how I blew accounts out in the past. So for me, that transition from reversal trading to trend trading saved me from getting stuck. But I'm really curious to hear stories from some of you guys if there's another way you can get stuck in a trade based on such a clearly defined system with clear rules. So I know I just kind of half answered your question there, Rob. I did. I don't now, but I do remember when it happened because, man, I don't think I'll ever forget those times. Sitting there waiting for that indicator to turn and it just doesn't it's absolute torture.
This is the best case for a young trader to be trading in a prop firm because you have that risk manager or risk management system that will boot you out of a trade to where you can't get stuck. And I know that sounds harsh. We call it forced discipline at Maverick. And we pitch it as this is good. You need this sometimes, especially in the beginning when you don't have your discipline down. You need someone, the big bad guy, big brother, to come in and kick you out of your trade that you're stuck in. I know it sounds brutal. I know it sounds mean, but it is the best case for why you need risk management behind you.
And I will even go as far as to say that this is why you need a prop firm like Maverick. Because I don't think, honestly, Rob, you've been in your system for so long, I don't think most prop firms nowadays do this. I think they're only there to make money off of you. And as soon as they're not making money off of you anymore, or they see that you're losing more than the desk fees they're collecting, they just simply let you go. You're not a person, you're a number.
Well, actually, I'm going to add into that because they are actually better at risk management than we are. Like we'll let traders go into our capital and we'll make the decision to write it out or to exit it. Theirs is all automated. Like they just cut you off without any remorse, without probably even an email. It's just, you're done. See you later. Goodbye. Now look, that is getting you out of a stuck position, which is really good, but it's really not kind and it's really unforgiving.
Yeah, and at the end of the day, is that best for the trader? It's best for the institution, probably, sure. But that's the question you always have to ask yourself. Is it better for the trader themselves? You know, in my case, because everybody knows my story, as soon as I joined, I started losing my ass. But, I eventually came out of it over time. If I was with a firm that would have cut me off right away, that might not have been the case, and I would have been devastated. And who knows where I would have gone after that? I might have stopped trading. Who knows? So yeah, the right prop firm with the right systems in place, I agree, really, really makes a difference. But if you're not part of a firm like that, or if you're not part of a firm at all and you're just trading on your own, you're going to need some type of solution, some type of self-governance here. So Rob, we have a few listed. What's your favorite way in terms of how we accomplish that?
Well, the first one, and really the only one we need to talk about, is you just follow your system. But our entire podcast is about all the times you don't follow your system. And so to just say, don't do it, follow your system, be robotic, we need to have a little bit more than that, because it's why we have our podcast, is because it's really hard to follow your system all the time. So that's really the only answer of how to fix it. Whatever your system is, just follow it, because you've already predetermined all of your actions. That's what a trading system is. You have predetermined everything you're going to do, so when you get in that situation in the market, you don't have to think about it. You just have to act. That is what a system is all about. Because we are imperfect people, then we have to talk about the extra things. But the only answer is follow your system, period. But since we're human, here's the one I like. Don't think in binary outcomes. When you get into a trade, and again, that trade, you're either going to be in profit or in loss. That's the only outcome that can happen. Okay, break even, but let's just call that a loss for commissions and stuff. So it's binary. We talked about this in an early episode about not thinking in individual trades, but thinking in blocks. Thinking in blocks of 10, thinking in blocks of 25 trades. Hey, I want to have this win-loss and this profit factor over my next 10 trades. All of a sudden, do you see how that gets you out of that decision fatigue, where like you don't have to make these really big decisions because you're looking at these 10 trades, these 25 trades, and say, hey, I've just got to make good decisions on more than I make bad decisions on, or follow my rules on these. So for me, stop thinking in binary nature. Start looking at things holistically. Start looking at things over the year. Hey, I want to make this percent a year. It's much better than looking at every single trade as the biggest thing you've ever done. And that's hard to learn as a new trader. I remember my first trades were the only thing that mattered in the world. There could have been a world war and I wouldn't have cared. I just cared about that trade. But once you've traded for a while, then, look at this big picture of, you're going to do this for your whole life. You're going to make, whatever amount of trades you make every year. You're just trying to get positive expectancy.
Yeah, and along those lines too, we talk about the absolute non-negotiable importance of having a trading journal, and of how the comments section is the most important part of that journal, because that's where you chronicle how, where, and when you messed up. Over time, I began to become petrified of having to put in any kind of entry into that comment section. And I would make sure, no matter how I felt that day, how rough my day was, that I would do everything I could to make sure I did not make a mistake that would later have to get put into that trading journal. So fear of my own journal entries really kind of got me out of this, I think, is one of the things. Maturity might have been another one, but one of the things that immediately got me out of this this cycle, because I would experience this all the time, even though I was trading the daily chart, because I put a lot on my plate. I still do. I put more on my plate today than I've ever been. I figure while I'm young and smart and have the resources, I want to try to build and grow and make as much money as I possibly can, just in case a really bad downturn comes, or in case there comes a time where I'm not able to do it as much anymore. I'm striking while the iron is hot. And so every single day when I sit down to trade, I've told you guys this, I'm like, I don't want to do this. So I'm already in a negative headspace. One of the things that also helped me, and consistent listeners of this podcast, you already know that I'm doing this. I have kind of become forced to move to the weekly time frame. And, I did it because I was missing entire days and sometimes 2 days at a time of signals, and that is super suboptimal. So even though weekly has its own problems, I'm giving it a try because I think it's overall going to be better overall than a guy like me trading the daily. And let me tell you, from a mental perspective, it is like I'm on vacation. I check in on Friday. I don't even have to check in Friday right towards the end, because what's a weekly candle going to do in the last 3 hours on a Friday? Probably not much. So I have this nice wide window, 1 day a week where I have to go place trades. Sure. I'm in the greatest headspace possible. It's phenomenal. And, a lot of people get really nervous and concern themselves with news avoidance in our system, rightfully so, because it's always changing. I pretty much ignore all of the news, minus maybe a presidential election, in the weekly chart. And I have not, so far, a small sample size, I have not been any worse for wear as a result. So the mental toll it has taken away from me simply by moving one time frame higher, wherever you are. If you're trading the 15-minute, move to the hour to the 4 to the daily to the weekly. That could be just what the doctor ordered. If anything, it's going to take a lot of pressure off of you.
Yeah, I absolutely agree with that. And I think, with this concept of decision fatigue, the less decisions you're making, the better you're going to make the decisions you do. I 100% agree with that. And then our last idea is automation. We had a whole episode on automation. We're both quite positive about it, but we had our caveats of, hey, make sure you do it right. But this is where automation just rules. You are no longer making decisions in the moment. You've completely removed yourself from the equation. You are going to trade your system perfectly because you've literally programmed it. There are no decisions to make because they've literally been predetermined and pre-programmed to happen. So if this is something, again, you're struggling with, look into automation. And frankly, everyone has done some automation, like a stop order is just simply automation. A trailing stop order is some sort of automation. Automate as much of your actual orders, the getting in, the getting out, and you've removed a lot of the decisions that you're going to have to make and potentially make some psychological mistakes around.
And I will say, as correct as this solution is, I think it was episode 50, we did a whole episode on how there are advantages to it, but it is not perfect. There are certainly caveats, and there are certain deal breakers with an automated system that some traders just don't want to deal with. On top of that, I doubt that if you're running an automated system right now, especially a fully automated one, you don't have much of a need to listen to the Trading Psychology podcast. So I'm going to be willing to bet that most of you don't do this, and you're discretionary traders like I am. So things like this could be very helpful to you. So I hope that Rob and I were able to explain and identify the pieces of decision fatigue, because I will bet it affects every single one of you to a certain degree. And so identifying it, realizing the symptoms, realizing why it's bad, and most importantly, it's the solutions you can use to help either fix it all together or just maybe alleviate some of it. A little goes a long way here. I hope we were able to do that for you in this episode. So on that note, thank you all for joining us here at the Trading Psychology Podcast. Rob and I will both see you next episode.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, hipsters call him detached. It's Rob Reinhold.
Well, thanks, Patrick. And these hipsters, were they making and churning their own butter when they're saying this? Or were they riding one of those ridiculous bicycles, that has one wheel that's way bigger than the other?
The fixed wheel or the high wheel, yeah. They're also making craft cocktails, so maybe they care more than we think they do. But either way, this, if you haven't figured it out, this is all about detachment and how important it is, and how I think really, Rob, this is a natural progression traders go through anyway. Especially if they actually get good at this over time, God forbid. So I feel like if we can accelerate the process here and just tell you, look, coming out the other side, as you and I both have, and getting to this level of detachment has been not only tremendous for our overall trading, but for our well-being at the same time. So let's go ahead and define terms here. I've always thought, I feel like it's pretty simple. Detachment is just simply detaching yourself from the outcome of something, outcome independence, not caring. And just, the results are going to be what they are no matter what. Me caring more or less is not going to affect that. And if anything, me caring too much is probably going to affect it in a negative way. So the best thing to do, obviously, is just to simply detach myself altogether.
The biggest problem with that is, and I've said this for years, and I've learned this throughout my life, how much something matters to you is directly proportional to how much time and effort you put into it. And I always use this for kids. If any of you have had kids out there, kids are hard. They take so much work. They wake up in the middle of the night for years. They throw up on you. They leave messes. You have to change diapers. It is so incredibly, we're talking like 2 decades that you're raising these kids, 2 decades. And every time they talk back to you, they flip you off, like all these things. And you put so much time and effort into it. It's why parenting is so great, is because when they actually do something or turn out to be great human beings, like, it matters so much to you because of the time and effort you've put into it. Now, I put in the most time and effort into being a parent, but second, I put in the most time and effort of being a trader. And trading matters a lot to me. It matters so much. However, if I really, really have that, again, where it matters, I am definitely going to make some mistakes because of it. And that's really what this episode is about.
Yeah, I have some thoughts on what you just said, but I feel like it's better suited for the solutions section. So spoiler alert, we will get there at some point. But as we finish defining terms here, you wrote something on the outline that I really like here. It says you're going to make thousands of decisions in trading. And your goal really is to make slightly better decisions 50% of the time. Now, the good news here, Rob, is you should have some type of system in place that will make these decisions for you, which I think makes it even easier to detach yourself from everything.
You're exactly right. But again, we still have to make that decision in the beginning so we can then back test it. Then we can demo test it, and then we can actually test it. So at some point there is a decision, and it's in the end, you want to be very robotic. But in the beginning of trading, you have all these decisions to make. What time frame are you going to trade? What setups are you going to trade? What type of style of a trader are you going to be? There are so many decisions to make in the beginning. It can be really overwhelming.
Yeah, and I like what you said there, because especially in the early days when I was building systems, not only did I have this personal attachment to them because they were mine and nobody else's, I also, you sit there and back test and you do it by hand. Like this is before I knew how to do it automatically. And you just get so excited at the possibility of what could be. And that excitement absolutely carries over into your actual trading, because now you have all these crazy expectations. This is a really bad combination. So I think this episode applies to a lot of people in different stages of their trading development. So let's go ahead and transition that into the problems that everybody either has right now or is going to have absolutely when it comes to their trading. And the very first one you put on here, Rob, was screen watching causes feelings and emotions. And I not only thought about this when it came to trading, but it's kind of a generational thing. So many people nowadays, especially the younger generations, love to go on social media and do something called doom scroll, where they take in all of these inputs and all of these horrible realities or sub-realities or complete misinformation, whatever it is, and they just do it to get some type of feeling out of it. And I guess we've been doing this for a while. We just didn't put a label on it. But either way, it's pretty awful. I can say from my life, when I detach myself from all types of media, I am generally happier, and things don't affect me nearly as they would otherwise. What can you say to that?
I think that is a perfect analogy of detachment. Things are happening out there in the world, and politically, religiously, your friends and family, whatever they're doing, all these things are happening out there. And the more you feed it, the more you watch it and get into it. And it's just like, let's take something that I think everyone can understand. Let's say you've got some family drama. You got a mother and a aunt who are fighting or something. You can get into that drama and you can be part of it. But that's so negative for you. And I know a lot of times we get dragged into these things where we don't want to be in there. But it's not going to be good for you as a person. So detachment is how do you extract yourself from that situation? How do you extract yourself from a situation that will cause you emotional pain? And this goes into social media. I remember hearing years ago someone say, oh, you know what? I just had to take a break from social media for my mental health. And I remember thinking, how hard is it just to turn it off? Like, duh, just turn it off. And then literally like a year or two later, I'm like, I need to take a break. This isn't good for my mental health. And I realized that, feeding it, the more you feed it, the more you are sucked in there and the more you care about it. And bringing this back to trading, the more you watch that screen, the more you're feeding it.
So true. And I think the problem comes, at least on the social media side, let me tackle that first, is a lot of us have made this such a part of our day that it's what we do as soon as we wake up. It's what we do when we're on the toilet. It's what we do if we take public transportation. Because, we used to not really be able to fill that gap. We used to use our imaginations to come up with whatever because we didn't have what we have today. But now it fills that void just almost too easily. And so detaching is really hard. And I want to say, too, when the example you brought up about family issues, deciding to detach doesn't mean you don't care. And I think that's why a lot of people choose not to detach, is because they would seem like, they're not invested and they don't really care about the situation. You can still care about it. Sometimes the best thing to do is to take yourself out of it and make the situation less complicated. Because, I don't know about you, Rob, I often have very differing opinions from family and friends. I've always kind of been that odd person who has this different take. Is that opposite contrarian take normally appreciated when emotions are high? No. It's absolutely unwanted. So I know that if there's ever a dispute going on, taking myself completely out of it is 100% the right way to go. Do you have anything to say to that? I'm curious before I get to the trading part, because I did spend a bit of time on that.
Yes, and this just reminds me of saying I heard a long time ago, and I actually think it was from Dr. Phil. That's how old I'm dating myself. I know Dr. Phil's still around, but he hasn't done his show for years. But Dr. Phil said, it takes two people to fight in an argument. And he said in one day he just stopped fighting. And he never had any more arguments. And it's like, oh my gosh, that is so true. This is detachment. This is absolutely detachment to protect yourself from these situations.
Yeah, and I can say just a little sidebar here too. In dating relationships, it usually comes down to whoever is the least attached wins. I'm not going to take it much further than that. All I can say is being outcome independent has served me very well, to where I was very outcome dependent in the past, and I would always wonder why my relationships never really took shape the way I wanted to. All it took was for me just to stop caring, or at least stop giving off the idea, that I really care this much. Even if I did, going back to the whole family thing, you might care about what's going on, but that doesn't mean you should be in it. And so this applies to so many different aspects of life. But trading, I agree. And I go back to when I was, trading the 15-minute and 30-minute chart. And, you start seeing price move. And you see it moving a lot. That really triggers something in you, whether it's going your direction, whether it's not, whether it's about to give you a signal. No matter what, that shit is exciting. Being a part of the financial machine and watching it in real time and having it all queued up on your chart, that was really such a rush for me. But man, did it never do me any favors long term. And I feel like that exact phenomenon has affected everybody at some point in time.
Hey, Patrick, I'm going to get back to your dating history, if you don't mind.
Go for it.
All right. I really wanted to cover this because I actually think it's a really great segue into trading. Is that, when you're dating, you have all of these fantasies and you have all of these predetermined outcomes that you want. We all want to find someone to fall in love with. We all want to find someone who we find attractive. We all want to find someone who has shared interests and hobbies. And so we have all these expectations of what is going to happen. And a lot of times, people care more about those expectations than they do about the actual human being that they're in a relationship with. And I remember my brother, when he was in marriage counseling, he was talking about all these expectations. And the therapist said, yeah, those expectations, they're a real bitch, aren't they? And basically, they told him that his expectations were unreasonable and that he just needed to focus on who that person was. And I think in dating, if you just put all that aside, all the things, hey, I want 4 kids, I want this, I want this, I want this, and just focus on the person in front of you, I actually think you'll get all those things. Segue this into trading, because I think it's a great segue. We all got into trading for all these reasons. We wanted freedom, we wanted to be travel, we wanted to do all these things. And when it comes right down to it, when you're focusing on those expectations, you lose what you're actually trying to do. When you just focus on the moment, focus on the not person in front of you, but the market in front of you, you really can get away from a lot of this issues that causes you to make mistakes.
Yeah, so many people on my channel would ask me, what my expectations are year after year. Like, what percentage gain should I shoot for? And I told them, you shouldn't shoot for anything. I mean, I said before, I like to try and beat Buffett's average, but if I don't, I don't. Sometimes the market's not going to allow that. 2019, I guarantee you, there were 0 trend traders out there that beat Buffett's average. It just wasn't there. There's nothing you could. Maybe if you were a scalper, maybe. But if you trade the way I do, the market's only going to give you what it's going to give you. It's up to you to maximize it, right? And so once I realized that, it took the sting out of having a down year, like I did. It wasn't negative, but it was very disappointing in 2019. And I was like, all right, I don't think this is going to be the way things are going forward. So I didn't have any expectation there. And I said, let's just keep on trucking and just keep doing it and see what happens. And over time, as anybody who's been in the game for that long knows, it did get better. So yeah, the whole lack of expectations thing is really huge. That's something else I did when I was younger. If we were just going up like on a weekend trip or something like that, I had all these crazy expectations about how awesome it was going to be. And if the trip didn't meet every one of those expectations, then I was upset about it, because I didn't get to take a whole lot of weekend trips. So I thought, all right, this has to be this. And the problem is you're relying on all these other people to make it that way. And people have different desires and interests and levels of motivation than you do. And it's so unrealistic. So yeah, like we're kind of saying, don't focus on a hopeful outcome. Just do the damn thing and see what happens at the end. If you've done your testing right and you're doing everything right on your end, over time you should be just fine.
This reminds me of one of the very first trading books I ever got a hold of. It was called The Wall Street Money Machine by Wade Cook. Don't look Wade Cook up. He does not have a great reputation, but he's the one who really got me interested into trading and to learning about all the things I could do, especially with options. He wrote a book, and I loved this book. It said, don't set goals, just do it. And this is kind of the same idea. And he talked about how when people sit around and setting goals, they're thinking about all the things that are going to happen. And he's like, no, you're missing the point. Just do it. Just do the actions. And that's how you get the expectations. And Patrick, I love when we start these episodes and we kind of have a framework and then it actually goes off the rails, but in such a great way. I mean, you could just do a subtopic of this called no expectations, because that actually is the key.
And I thought about it. I was almost like, Rob, let's cut that part out and make it an episode. But I think it fits really, really well here. I think this episode wouldn't be what it is if we didn't include that as well. And expectations are so hard too in this type of trading, because you take so many losses in trading, and your account, as soon as you think you're going to be on par for this type of year, that's almost exactly when a string of losses comes and just pulls you right back down to earth. And what does that do to you? You can't let this affect you. Just like we said when you were just talking, Rob, it reminded me of our episode Systems Over Goals, which I've gotten a lot of very positive feedback on. That's kind of what this comes down to. If you let the system trade instead of you, that's the game right there. That's how you detach. And so I want to have that kind of transition into the solutions part of this episode. Before we do, Rob, do you have anything else to say on the problem side? I feel like we've covered it pretty good. Lack of over screen watching. Obviously, we know emotions kill results. How do we do that? The problems such as setting expectations, which is never, in my opinion, ever been a great idea. Understand you're going to take a lot of losses in trading, so how do you handle that? I feel like that's a good transition into solutions, but I want to make sure we have everything covered.
I think you covered everything, but just to wrap it all up in a bow, is that this is something we all care about deeply. We care about it so much. And especially if you've been doing this for years and you've put in lots of time and effort into it, you care a lot. How do you guard against that caring undermining your results? And that's really the problems, is that you're going to care so much that you're going to make pretty much every mistake in the book. So how do you detach from that passion, that feeling, that want, that desire, that ambition? How do you detach from those to where you can actually run a good system? So let's get into the solutions.
Yeah, and here's the thing. I feel like this is a battle that I have won a while ago, because on my side, honestly, and I've mentioned this on the show before, I really don't care anymore. And so I really have almost no emotion at all towards my results. And we're going to go over some of the reasons why here in the solutions. Now, the first one, and this is something I actually came up with on the show over time. I was never able to articulate this as well as I wanted to, but simply going into your trading and just treating it like a random, low-paying, soul-sucking data entry job. Just look at the information. It'll tell you what you have to do. Enter the data, close up, and leave. Simple as that. If you can just it's so easier said than done, I know that. But if you can just take this approach to your trading, the quicker you can get here, in my opinion, the better.
Yeah, I think that's great advice. And the market is going to do what it does. And I think one of the big keys to basically clocking in, putting in your work, and then clocking out is to really just understand that the market is the market. And sometimes the market is boring, sometimes it's exciting, sometimes it's up, sometimes it's down, sometimes it's choppy, sometimes it's smooth. To understand all of these things, and I wish that you could just understand them right away. This is now my 28th year of trading. Every day I wake up, I turn on CNBC, I jump in the shower, and I get caught up with what's happened. I've been doing this for 28 years. I have seen crashes, I've seen panics, I've seen bubbles, I've seen slow markets, I've seen fast markets. And I've always told our traders that once you view trading as boring, you've made it. And other than just going through it and seeing it for yourself, I can't impart any wisdom on you. But the quicker you can get to understand that markets are markets, everything is the same, really. Even though we have new things like AI is new, guess what? Stocks still just go up, down, and sideways. Forex just goes up, down, and sideways. That's all it's ever going to do. The stories are a little different, but it's all the same. You are just trying to fit your strategy into the current market regime, take some money out of it, and move on to the next one. To understand that perspective, like I said, I wish I could give you wave some magic wand to make you understand it, but just as you've been doing this for a couple of years, it's all the same. It's all the exact same thing, so you don't have to get excited about anything.
And speaking of people who detach very poorly, I've always gotten great joy and happiness in watching CNBC anchors flip out when the market turns down, as if that's not supposed to happen, as if the market is only supposed to go up all the time, and there's something wrong with the time-space continuum when we actually see a pullback or, God forbid, a recession. I don't know, for some reason, that's the only time I watch CNBC, is just to watch this complete meltdown. You know, speaking of people who don't know how to detach.
And that's the bottom. That's the bottom. When there's meltdowns on CNBC, you're close to a bottom.
Yeah, I've always felt like the bottom comes a little bit later when it's, God, what's the word? Defeatism, to where people are saying, hey, this might just be the new normal. And this, we should just expect this to happen for the next few years. And there's really no positive news out there. There's no liquidity in the market, blah, blah, blah. That, to me, kind of the fallout from the move down, that tells me the bottom is at least starting to come in. But hey, you and I could really go back and forth on this for a while.
But let me jump on that, because we have a term at Maverick called capitulation. And capitulation happens on both the bullish side and the bearish side. So when you have a long bull market, and when my perma bears that I just cannot get to jump on the bull side, when they finally say, yeah, AI is probably going to change the world for good, I'm going to get in. I'm always like, oh shit. Oh shit. When the most bearish person who's fought the market has finally decided to capitulate and give in, yeah, you're close to a top. And same thing with on the bottom. So capitulation is a perfect word for that.
And that's the word I was looking for. Thank you for finally saying it. Yeah, this just recently happened with a podcast I really like. This guy interviews people on the Bitcoin side and on the altcoin side. And as soon as Bitcoin started getting more dominant, he started migrating that way too, and almost became a bit of a maxi. And he even went on the record saying, he goes, altcoins may never go up again. And I go, bottom. bottom signal. And no kidding, altcoin season probably started 2 days later. So you're right. When that last holdout finally capitulates and gives up, that's a really good signal to at least start. I mean, even if you're a little bit too early, you're not going to be that early. You know, you could do a lot worse. So moving on here, because again, this is a Rob Reinhold original that we did on the show that I thought was just so fantastic. I think we need to remind the audience, and we have a lot of newer people watching this too. Maybe they didn't see this episode, but trading in blocks and tracking your quarterly performance, and then which kind of begats yearly performance. Can you go over that just briefly one more time and kind of explain what that was all about? Because I thought that was a piece of advice I wish I had so many years ago.
It's the entire idea that when you make a trade, it's going to be a binary decision, and anytime you have a binary decision, there's lots of emotions tied up into like, do I go left or do I go right? And how big of the result is going to be is how big that decision is. And so as new traders, we go out and we fight this battle. Every single trade, this binary decision, or, in or out. Do I hold or do I exit? And I say, stop doing that. Say, I want to win over 25 trades. I want to win over a block of trades. So you're going to make 25 trades, and all you're trying to do is to have more winners than losers. Have a better profit factor on your winners than you do on your losers. And then you won. And all of a sudden, you've taken away that binary fight of every single trade, and it's now about the system. It's now about, I need to make a profit over 5 trades. I need to make a profit over a quarter. I need to make a profit over a year. And then you're not fighting every trade because it doesn't mean anything. It's the best way to detach from the current trade you're in is to have it be a group of 25 that is going to get evaluated and scored after.
And this is really the difference between firms out there, trading and investing firms who have been successful for a very long time, compared to the ones who just don't last very long. It's that the latter sets these expectations on their traders and their investors, which makes them, as you and I joke about all the time, Rob, trade harder, which is never, ever a positive, puts extreme amounts of pressure on you. And at the end of the day, you didn't get there by trading harder, or what you got there probably by taking way too much risk. And this is absolutely going to affect you and make you flame out later. And that's why these firms just simply don't make it, to where the longer ones understand the bigger picture. And so that leads me into a possible solution, because I really like yours, Rob. So many people took that and ran with it when you said it. This one is something I came up with at the very beginning of my channel, and I have since expanded it further, and that is to simply trade on higher time frames if you're having trouble detaching. The best way to spend less time looking at charts is to have a time frame that requires you to spend less time looking at charts. I would tell people too, like, take the trading apps off of your phone, because you're going to sit there and look at them all day. And everybody's like, what? I thought that's part of trading. I'm like, no, it's not. It's totally counterintuitive. I get that. I know the imagery you saw in your head when people were glamorizing this trading lifestyle to you, where that was that guy sitting in front of 8 different screens watching all these things happen at one time and being completely keyed into the market. Oh my God, is that the wrong way to trade and the wrong way to detach yourself? And it even came to the point now, this is more or less like I can trade the daily chart, no problem, but I was having issues missing days and sometimes blocks of days because of my travel schedule. And so I transitioned over to the weekly. And man, if I thought I was detached before, Rob, oh my God, I just have to check in really any time on Friday. It kind of doesn't matter. I like to try to make it in the afternoon, but I can just kind of check in whenever, see what's going on, do my 10 to 15 minutes of trading for the week, and then I'm done. Like, I don't even care what Powell says anymore. I don't care what NFP says. I don't care what Trump says. It's just, man.
How boring. That is so boring.
Right? But I have... and I don't want to bury the lead here, because I kind of have the grand finale here coming up, but I'm totally okay with that for one particular reason. So before I give that reason, do you have anything to say to the higher time frame idea?
I think it's a great idea. And sadly, we all do it the opposite way. We all get into trading and we all are on like a 1-minute chart or a 5-minute chart. And then we realize, this is harder than I thought. Let me go to a 15-minute chart. Let me go to an hour chart. Let me go to a 4-hour chart. Yeah, sadly, it should be the other way around. People should start on a weekly chart or a monthly chart and then go the other way, because it does get exponentially harder because you're making more and more decisions. And if your trading psychology isn't perfect, you're going to be making a lot of errors along the way, which always cost you money. So I love the idea of higher time frames, and I wish the rule was when you started trading, you start on a monthly chart.
Yeah, and like Rob just said, how many people go from the 5-minute chart to the 15 and just get higher and higher in time frames? And then how many people honestly go the other way? Once you go higher time frames, man, you never look back. It just doesn't make sense anymore. You're like, oh, this can actually be a really great trading lifestyle too, and I make more money. Yeah, sign me up. Everybody thinks you're going to make more money by getting in there on smaller charts and getting that quick money and being done with it. No, you can spend less time trading on higher time frames, also have a better quality of life because your emotions aren't going crazy all the time, and spend less time trading, which is the whole reason people get into lower time frames in the first place. They want to make that money in 15 minutes and then leave. Well, you can also make money in 15 minutes and leave on the daily chart and reap all the benefits that it gives you. So transitioning into the last one I had, Rob, feel free to add on if you've thought of one, but the last one we have on our list here is one of the biggest reasons why I don't care about my trading results nearly as much as I did before is because I have built out different income streams, and trading is no longer my ticket out. It hasn't been for a long time. Even before YouTube, I had other things going on, which is why, when I started my channel, or started my blog, I didn't have to run ads on my blog because I hate them. But people do it anyway because it's free money. I don't run mid-roll ads on my videos to this day. I never did before. It's good money. It's easy money. It's completely passive money. Why wouldn't you do it? Because I just didn't want to, and I just didn't need to. I had other income sources apart from everything else I was doing. And those income sources have only proliferated and grown now. So, let's say if I don't do 20% return on my trading this year and it's 13 or 14, it's like, so what? Like, my bank account will still be fine. So that is a big way for me to detach. The whole 8 Mile thing you and I talk about, you don't just get one chance to make it. Trading doesn't have to be your only thing, and it shouldn't be your only thing. It should be one of many things, because that is a perfect way to not only detach, but to also maximize your results, which I have noticed the more I have detached over time, the better and more consistent my results have gotten.
Let me say to everybody who is listening to this the exact same thing that the psychologist told my brother. Expectations are a bitch, aren't they? If you have the expectation that this is going to lead you to mansions and Ferraris and all that stuff, boy, 1 out of 1,000,000 is going to be right there doing it, but there's going to be a whole lot of disappointed people on the way. Set your expectations at the right place with the right ways, and it's really going to help you stay involved in trading and stay profitable.
Yeah, and we've all been there. I remember when I first started trading, I told my mom I was going to buy her a house, because I found it. I knew what I was going to do. I found the magic formula with the magic indicator, and the rest was going to be history. And that dream lasted about a week until reality really hit me in the face. So really, to kind of take it back to everything here, traders, we've mentioned variations of this before, but we really want to hone in on the detachment side of things. Because it really, the less emotion you spend into something, even if it's there, the more you can detach yourself, the better everything is going to be. And hopefully we have laid out a good blueprint as to how to do that. So do you have anything else to add before we sign off here, Rob?
Nope. Just again, expectations are a bitch, aren't they?
They really are. I can't think of one time where they haven't been. So yeah, that's kind of one of the great new things I think we've kind of brought up on this show that we've really never talked about before. So we hope you enjoyed it, traders. And on behalf of Rob here and myself at the Trading Psychology Podcast, we will both see you in the next episode.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, word is he invented the carnivore diet. It's Rob Reinhold.
That's not totally true. I ate the guy that invented the carnivore diet.
5 million years ago. Nice job. All right, so today we are extending a little bit off of a previous episode. If you've been with us a long time, you probably remember the episode where we talk about just how important having a healthy body is when it comes to having a healthy mindset too, and getting yourself ready to trade. I don't personally know anybody who is good at this who also lets their health slide. I think, maybe you know some people who scalp and sit in front of the computer all day, and that's just what they do, and they have the brain for it. But I've just never thought that was the right way to live, and I think if you can put it all together, why sit there and get really good at this and make a bunch of money if your health is just going to suffer? Health to me is even more important than money. And Rob, do you agree? Am I going off the reservation here too much?
No, and when you said that, I remember thinking back to all of our yearly summits. Once a year, we have a summit where all of our traders fly in from wherever they are. We all meet together. We talk trading, but we really just eat and drink and have a good time. And I'm thinking about, was there anyone there that was just really unhealthy? And I'm sure there was, but I just can't remember it. It seemed like everyone of our traders that were there were in good shape, took care of themselves, and I think it is part of being a good trader.
Yeah, I've said this before when it comes to being a nomad and meeting up with other nomads, especially ones who have left and started their own business, already had their own business. I hang out with all these guys. not a lot of fat dudes. They don't exist. I've been to one of the Maverick Summits. I noticed the same thing. I wasn't really looking for it, but now that you say it, I'm thinking of the people that were sitting there in the morning and the people who came later at night. Everybody is in pretty good health. They look good, they look healthy, they look happy. And if you're not there yet, that's fine, but you can start putting this side of things together as you are putting your trading life together as well, because they really, really do go hand in hand. Rob and I, for reference to qualify ourselves, we're both middle-aged men, but we have tons of energy and we're very busy and we do a lot, and we've been relatively successful at those things we've done. And I'm telling you, Rob, I don't know if you can speak for yourself. This is kind of a softball question, but I think health has played a really large part in this whole equation, as far as where you and I both are today. Fair?
Absolutely fair. And I heard a great quote about 2 years ago, and it was just one of the best quotes. And I really am excited to share that with everybody, is that when you're healthy, you got 100 problems. You got a ton of problems. You got all these things happening. When you're unhealthy, you only have one problem. And I've seen that with people. I've seen that from, people that were healthy before, and then they get a cancer diagnosis, and all of a sudden, that's the only problem they have. People that have, unexplained weight loss that just came out of nowhere, they're not really worried about that, car insurance anymore. They're really worried about their health and getting it under control. So it's one of those things that we all take for granted until it's gone. And then it's really the only problem you have. So whatever you can do to keep that away, it's actually really a benefit and a blessing to worry about all of the little things. Because if your health is gone, it's the only thing that matters.
Yeah, I remember it was a CVS slogan one time, and I know it's super corporate, and they do it for a reason, but whatever. But they said, CVS, health is everything. It really is. If you don't have it, you don't have anything. And they're right. Just like you said, once that train stops, it stops. Everything stops. And that's your only focus. You can't focus on anything else. When I was in Vegas, I came down with skin cancer, and I walked into work that day, and I said, look, I'm not going to be able to work. And my boss was like, well, we kind of need you. We're short. I'm like, no, you don't understand. I just found this out, and I don't know how to process it. So I'm going home. And that's just it. And that's what I did. So, yeah, we want to avoid this at all costs, and an ounce of prevention is a pound of cure. So what we're going to do is Rob and I are going to go over our approach to fitness, our approach to nutrition, and at the end, if there's anything out of the ordinary that either one of us does, and that we're going to mention that too. I have one, Rob, you have one, and I know what it is, so I'm not going to talk about it until then. But let's start with our overall fitness routines. Fitness is a big part of your life, Rob. I know that. It's probably not. I probably don't exercise as often as you do. I'm curious to what you have to say here. Maybe it's changed over time, but let us know what you got. What is your typical day like in terms of your actual fitness?
It definitely has changed over time, and if anything, I work out way more than I used to when I was in my 20s and 30s. I've always been an active kid. I was always into sports, played tons of sports, and working out has always been, to me, kind of a retreat from the world. And I was talking to one of my traders, and she blew my mind with this. We talked about meditation, and I just can't meditate. I'm not good at it. I can't get in the zone. And again, maybe I've got some issues. My daughter thinks I've got some issues, but she asked me, do you work out a lot? And I said, oh yeah, every single day. And she said, a lot of men can't meditate, but what they do is they get it through working out. And when I go to the gym, I am gone. I am gone, and nothing else matters. And I was just there today with my wife. She goes and lives with me on this day, and we were doing heavy leg presses. And I actually said the thing I love about this, because we were like dying out afterwards and just so tired. I said, I love that during those leg presses, you literally can't think of anything else because it's so intense. And it's why I really love the gym, is because for me, it is the place that I get away. It's the place that I get 1 hour for me and me only. And I'll listen to music. I'll listen to a book on tape. I gotta stop saying book on tape because that ages me so bad. My daughter laughs at me every time I say book on tape. Audiobooks or podcasts. And it's just for me. So it's been something I've always protected and I've always made time for. Even when I had little kids and life was busy, I always made time because that is my time for me.
Yeah, so for me, as somebody who pretty much has the entire day to themselves, I'm kind of the opposite. Like I tell people, I'm not going somewhere to decompress. I'm going somewhere to escape boredom, more or less, or to keep myself active. Because people might think I sit there and look at a screen for 6 hours. I don't. I can't do that. I need to do something. Plus, I've always had the body type to where I gain weight pretty easily. And I have a skinnier frame, so it just looks terrible, and I feel terrible, and it's a bad combination. And this, no matter what I do, anytime I go away for a few weeks, I gain like 5 to 10 pounds, and it just looks awful. But I keep myself in shape, so I allow myself to do that, so I can come back and and take that weight off, which is what I'm doing right now. I've only been back in Mexico for a few weeks. And it's such a good feeling because it's such a routine. So when I wake up in the morning, no matter what day it is, I have a gym in my apartment, and I get up and I jump on the elliptical machine, and I do 30 minutes with the podcast on, and that's just how I start my day. Dietary-wise, this is something they used to call stoking the furnace to get your metabolism going. This is debated, but it does work really well for me, and that's all I know. Also, why the elliptical? Because 20 years in hospitality, I put a lot of stress on my joints, and I don't want to put any more on it for no reason, so that would eliminate the treadmill. I want something that's softer on my joints. That would also be the bike, but the elliptical at least gets more things moving, and it's a better calorie burn. So that is an essential part of my day. And as soon as I get back in, I do a 15-minute stretching routine. I go to YouTube. There are so many different ones you can pick from. Just type in 10-minute or 15-minute stretching routine for men. If you don't have a mat, you can type in the word standing, and they have videos for that too. But this is also really essential. And this is something I've done for a long time, but it's even more important the older you get, because almost everybody I know who's my age or close to it, or even some friends I have in their 30s, anytime they get up out of their chair or out of a car, you hear it. It's always like, ugh, a little bit of a groan or a big groan. I'm not sure what it is. And these aren't, like I said, these aren't big, heavy-set people for the most part. But you still hear it. And so stretching is how you live forever. So if I can just start that and get those 45 minutes out of the way, to me, everything else is easy. And now, I don't go to the gym every day, like Rob said, as far as actual lifting weights. I do that 3 times a week. Tuesday, Thursday, Saturday. The reason I do that is because if I do go to the actual gym, it's far less crowded on Saturdays. And Saturday is usually my going out day. So it's not like I'm going to go in all hungover or anything like that. But I also make sure I do that too. I don't lift super heavy. I don't try to max out or anything like that. I don't have the body for it. It doesn't make any sense. But I just want to have good muscle and be strong and carry that forward into my older age.
And for me, I generally lift 4 to 5 times a week, and I will do 2 to 3 days of cardio. Not entire days, but 2 or 3 days of cardio. I typically do my lifting Monday through Thursday or Monday through Friday, and let me tell you why. I have 1 hour. I have 1 hour, and that's it. That's how my life works. That's all I have. I can't do cardio because after cardio, you need a shower. And after shower, then you got to re-get ready. That's about an hour and a half process. I don't have that. So for me, it's always lifting. And the time I go lifting is very, very deliberate. Now, my life is wildly different today as an owner of a prop firm and a risk manager than it was when I was just me, a young kid as a trader. I was trading, day trading at Maverick Trading, and yeah, you'd sit there all day long, and I would kill the open. I would be great at the open, and then I would give my money back over the rest of the day because I was sitting there clicking buttons when there really wasn't good action. So I told myself, you need to leave. you have to be gone from 10 a.m. to 1 p.m. I'm in the Mountain Standard Zone, so that is like 12 to 3 Eastern Time in the stock market. You have to be gone. You have to be gone. You cannot be behind a computer. So to facilitate that, I got a gym membership and I got a trainer at that time. The reason I did that, I didn't need a trainer because I'm disciplined. I like to work out. But I got a trainer because before I said, I'll just make sure I go to the gym at 9:30. I'll just leave at 9:30 to go to the gym. And then all of a sudden, it would be 10, it would be 10:30, it'd be 11 and 12. And then it's like, oh, I missed it. I'm not going to go work out today because I had a trade that I needed to be in. So I hired a trainer that I didn't need or even want because I paid money for it and I had to show up. I talked about this in the overtrading podcast that we did. I think it's episode 6 or 5 or 6, if I remember correctly. And I talked about how I needed to get out of the office. I need to leave because if I don't leave, the computer's there, the phone's there, everything's there. I get really distracted. So for me, I must leave the office. I must leave my house. I have to leave in order to get in the right space. The cardio I do is spin class. I went to a spin class probably 20 years ago, just kind of on a whim. I love club music. I love dance music. And so it is a great high energy, just really high energy where you're just all out for 50 minutes. My workouts need to be intense for me. I'm a very, very strong extrovert. They need to be as intense as possible. And I said this in prior episodes. A tired Rob is a good Rob. If Rob is tired, he actually is pretty mellow and makes few mistakes. But Rob that has all this energy bouncing out all over the place definitely can be an issue here. So for me, high intensity is what I do.
So funny what you said about the music, too. In Latin America especially, people like bringing their own music in and blasting it with no regard for anybody else. And they always play club music. You see these big jack dudes that they're playing like Cher and Madonna. I never quite made the connection, but I guess that's what it is. I probably should have said this at the very start. If you're not familiar with Rob and I already as far as what we do in our daily lives, we're very different. And I think that's important when it comes to if anybody wants to take any parts of what we say and tailor it to their lives. Rob runs a brick and mortar prop firm. Rob has a wife and 2 children. VP has none of those things. You know, I have 3 businesses, but I can kind of schedule things in wherever I really want. And so it gives me a lot more latitude that way. And I realize that's not typical. So take the things I say with a grain of salt. That doesn't mean they're wrong or wrong for you, or that Rob's are any more or less right. Just, fit this in as best you can if you're going to use any of our advice, and just understand where it's coming from.
This is the classic extrovert versus introvert. And we've been a really great pair throughout all of our episodes because we really showcase that quite well. What is the crazy extrovert who can't sit still? What do they do? And what is the introvert who is much more thoughtful, more reserved, where you're holding that energy in, and then when that time to release that energy, it's ready. Instead of me, I'm always shooting energy out. I think this podcast has been a great illustration of extrovert versus introvert. So based on who you are, if you're more of an introvert, you should do what Patrick does. If you're more of an extrovert, take a look at what I do.
That's true. I'm a little bit country. He's a little bit rock and roll. And also, too, body types. Rob's a mesomorph. I'm an ectomorph. Different methods for different people when it comes to working out and nutrition as well. Different protocols need to be followed. If I had Rob's mesomorph body and I saw these jacked muscles, I'd probably never stop. But my emphasis is more on staying lean and overall weight control. So let's transition into nutrition. I have some very, very strict rules here because on top of the fact that I gain bad weight very easily, I also have a terrible stomach. I've had leaky gut syndrome ever since college, really. And I've tried everything. There's really no great way to make it go away except for eating right and eating less of the things that really bother my stomach, which just happen to be carbohydrates, in particular gluten and sugar, which is actually kind of nice. This is my body's way of saying, hey, I want you to be healthy, because what I typically do is go very low carb, very low sugar, and then high fat and high protein. I'll do eggs and fruit in the morning, and by fruit, just like a few blackberries, and then a protein shake with all the good stuff mixed in, chia, flax, matcha, cayenne, things like that. And then usually just a pretty lean protein at dinner, and then I'm pretty much good. I don't need too much more than that. If I have snacks around, it's going to be something like low sugar yogurt, or even just a flavored carbonated water. That'll get me by. And that's always done me really well. Now, this is impossible when you are traveling, especially if you're going to be at airports. There's just no way you can get around this. So I kind of use that time to say, okay, let's eat all the things that I've kind of wanted to eat and never did. And that's my time. But I'll tell you what, though, especially when you get your sugar down, so many things you would think you would crave, you really don't. I don't know if you had this experience, or, with your larger body, you just need more fuel. Like, how do you approach this? Do you take any parts out of my playbook, or do you completely have your own here?
Well, good general nutrition is ubiquitous across the board. So I absolutely do some of the things you do. For me, in the morning, I don't love carbs, and I'm so grateful for that in my life. Like, I'm one of the only people I've ever met that doesn't like bread. I just don't care for bread. To me, bread is like cardboard. I'm eating nothing. There's nothing in it. And pasta, there's nothing in it. I like really nutritious, rich foods, and I always have. And so I'm very, very blessed. My wife, she likes all that stuff. And again, it takes willpower and determination. So for me, I don't eat a carb. Not one single carb until lunch. So for me, it is always lean protein and fat. That's it. Lean protein and fat in the morning. And I really find that I'm very alert. Now look, I'm alert as a person, so I'm not sure how much my diet does it. But again, for me, that is the rule. No carbs until after I work out. So once I get home from working out, then it's usually a protein shake, because protein shakes are the best and quickest and easiest way to get those nutritional elements into your body. And a lot of protein powders will be fortified. Fortified means that they've added in all the vitamins and minerals, which means you don't really need to take a dietary supplement, vitamin. If you do one protein shake a day that's fortified, you're getting everything you need. So for me, it's usually a protein shake, and this is where I will put in like a frozen banana, or something like that to get my carb. But it's usually a fruit carb. It's not usually a bread carb. And then for dinner, I just eat whatever I want. We eat pretty healthy, but there are really no rules for dinner. Dinner is just dinner. And for snacks, I'll eat nuts, I'll eat fruit, all that good stuff. But that's pretty much what I do. And it's funny because as you get older, and I hate this because when I was younger, I'd look at all these older people and they're like talking to their friends about their eating routine and what kind of hummus they eat. And I would just be like, oh my God, kill me. If I ever talk about my nutritional routine, please shoot me. And here I am telling you about it, and really excited to tell you about it because it's an exciting part of my life. So it just happens as you get older, you build routines much, much easier. And I remember telling younger traders, it's hard when you're young because you haven't really had enough life experience to build these really rigid routines. And once you build one, it's really easy to do another. Once you get disciplined with your food or your workout, it's really easy to do the other one. It just all falls in line, but it takes years to develop that willpower.
Yeah, and you're right about that carb. You do need some carb after working out, so everything can enter your muscles the way it's supposed to. And that's when, I forgot, I have these olive oil fried potato chips, and I'll have a small handful of that with my shake. But you're right. I'm thinking of all the other things I do that it just all turns back to discipline. For example, I didn't know if I should put this in the first part or second part, But I have a rule on top of this. And remember, I'm going more for weight control than anything. And that is my no plopping rule. And what I mean by this is it has nothing to do with the toilet. It's after you eat, you should do something active. I will usually go walk somewhere. There's usually something around town that I need to go do or need to go get or need to go see. And I will only do that right after I eat. What I will not do is eat and then go sit down, because that is definitely not what our ancestors did. When they ate, they didn't go sit on a couch and watch TV. They ate for the purpose of doing more work. And it's no surprise that almost everybody eats and then goes and sits down, and now everybody's overweight. So that's one other thing I wanted to add. And I guess while we're on this nutrition end, Rob, what is your supplement regimen? Do you have one? Because I definitely have one. And people are on the fence about supplements. I am not. The difference in my health long term is night and day when I have a disciplined supplement regimen to boot, and when there's times when I don't, which is sometimes travel. I'll forget to bring things along and then I can't find them or something like that. It's rare, but man, do I feel it when I don't get the proper nutrition, because our food naturally just doesn't give it to us anymore.
I'm sorry to tell any of you younger people out there that by the age of 40, I guarantee you will have a drawer full of supplements. That's it. Just supplements. Patrick, would you agree with that?
Oh, yeah. And I'll have somebody over to my apartment who's never been there before, and they see the supplements and they think I'm just a manic pill popper. I'm like, no, read the label. That's magnesium. That's not that's not Prozac.
I don't know what happens. Again, it's the same thing when I was younger and I would see old people and all their pills. I'd just be like, oh my gosh, is that what happens? Yes, it is what happens. So yes, supplements are great. I've got to say, I've tried everything. I just love to try things. I love to, what about this? What about this? I haven't really noticed any big difference in any supplements I've taken over the years. So I don't really take a lot at this point. Like I'll do with fish oil. I'll do like some ashwagandha to help with cortisol levels. But I don't notice really any different. Now, with the supplement I do notice is a stimulant. A stimulant like caffeine, ephedra, stuff like that. I do notice it. And I've noticed that I do much better if I wait to take a stimulant until about 1 or 2 hours after I wake up. And I've heard lots of health gurus out there talk about how don't do stimulants right when you wake up, let your body wake up, get into a rhythm, and then the supplements come out. I find that I am more sharp, I'm less on edge. And, anyone who's taken like stimulants, if you've taken like too much caffeine, you get that nervous energy, you get that. And if you've taken pre-workout, you get where your face feels like it's being stung by thousands of bees. You get that rush, and you don't really want that right in the morning. So I really like to time my stimulants, which is really just caffeine at this point, right before my workout. And then that's it. So for me, that's pretty much all my supplement usage.
Yeah, I'm glad you mentioned caffeine, because this is something I struggled with for a while because it was dehydrating me really badly. And I was probably over-caffeinating myself, which is weird too, because I guess it's just how my body processes it. I know people who have 7, 8 cups of coffee and they're fine. I have the equivalent of 2, and I dry out like a raisin. It's weird. But I have successfully managed to go down to, I have the 0-calorie energy drink that gets most of its energy from green tea and a couple other natural sources. And then I also have just green tea. And that has done me pretty well, actually. I just need a little something to get me perked up a bit. And then usually I can just let momentum take me from there. So after I do my elliptical and my stretch, then it's time for caffeine. I think what they're saying is right, Rob. It is best, I've noticed, to not have it right in the morning time, because then I will almost always crash in the afternoon. But if I can get my elliptical, stretch, shower, then sit down and have my caffeine, I'm generally good for the rest of the day. Now, for what it's worth, if anybody cares, as far as my supplements go, I've told you mostly how I eat and what I do. So the supplements that really fit into that type of lifestyle is a vitamin B complex and D3 during breakfast, because you want to have these with food more often than not. And then at night, that's when I take my omega-3, magnesium glycinate, vitamin K2, turmeric, and CoQ10. I've been through all sorts of different iterations. I like to try things like you do, Rob, but this has been what I've settled on probably for the past couple years now, and it's done me really well. Anything else you want to speak to this before we get to the final part here, Rob?
It's interesting that you say you've had leaky gut because my daughter has really suffered from that for years. And we've tried all these elimination diets. She's been vegan for, 7, 8 years. And we've had these ups and downs with her health. And a vitamin B12 shot, I swear, fixed her. I swear that after a vitamin B12 shot, because I was researching, just trying to figure out what can we do. And I actually put all of her symptoms, all of her tests into ChatGPT. And it said, hey, go get her a vitamin B12 shot. So I think for someone with stomach issues, supplements, stuff like that is so important. Have you noticed a big difference with vitamin B?
I actually have not. I was always told B1 was kind of the key with me, and so I tried that and a few other things. I actually paid a guy who deals with the stuff like that, and we tried a few things, and just nothing worked. Like, I liked his ethos, and I liked the reasoning behind what he was talking about. It just, unfortunately, nothing worked. But I didn't go the B12 route, definitely not the shot. So that's something I can easily get here. Maybe I'll try it. Who knows?
I just wanted to mention it in case anyone is dealing with kind of the same symptoms out there. I don't know if it'll work, but give it a shot.
And make sure leaky gut is what you have, too, because there's a lot of different ways that people get acid reflux and stuff like that. Because I've got advice from all sorts of people that just, they don't quite exactly have what I have. Or if they do, just like you said, Rob, not everything works for everybody. I've been dealing with this for almost 30 years. It's just something it's a constant search, and hopefully I'll find something. But that's fine. I manage it just fine. And let's go ahead and kind of go to the last part here, Rob. The last part I have on the outline is there anything that you do, if what we do already doesn't seem out of the ordinary to some people, anything you do in particular that the majority of the world probably doesn't in terms of fitness or nutrition that has really served you well up until now?
I can't say it's served me well, but I do like a long intermittent fast. Now, there's several ways to do intermittent fasting. I like to do the one that gets you into what's called autophagy. So autophagy is a process that the body goes through when you are completely out of blood sugar. So it takes about 16 hours after your last meal of fasting to get to where your blood sugar is at zero. And then there's another, I can't remember now the name of the backup, but there's about another hour of other sugars that your body can use. And then after that, your body has to go get energy somewhere. And one of the places it goes to get it is fat. It'll go now to your fat cells, but it won't go to your fat cells until you cross that line. And then it'll also start a process called autophagy. Autophagy is where the body goes around and looks for old proteins that were not utilized, and they're just kind of like garbage sitting around your body to where they're not being cleaned out. They're just kind of sitting there. And a lot of people think that these proteins are the things that really can cause some cancers. So this autophagy is where your body will actually go search out these proteins and convert them and use them for energy and muscle synthesis. And what it does is it clears out the old garbage of your body. So this is something that I like to do, usually like a 3-day fast. Past 3 days, it gets pretty miserable, but a 3-day fast for me is right about the right time where it's like, okay, I'm getting pretty miserable at the end of it, but I've got my body into that autophagy long enough to where it's going to do some good. So I do that about once a month, and I can't say it's doing anything for me. The science is behind it. Go check out the science on it. But I also like that it is a battle of will. I love that. And I really love to put myself in these situations where can you fast for 3 days? It's not fun. It's not easy. Here's the cool thing. Once you get past about that 16, 17 hour mark, you're not really all that hungry anymore. and it's more of a cruise. And it isn't until day 3 where it's like, so that after that second and third day is actually, you feel great. You feel really good and really alert. And then by the end of the day 3, you're like, I am starving. I need to eat. So that's my one weird thing I do. I don't know if it's helping me at all, but hopefully it's getting rid of those proteins that potentially could cause some issues down the road.
Okay, so I can speak a lot to this. What you were describing when talking about autophagy is the main parts really of the ketogenic diet. Is if there's no carbs to burn, then it just starts, it has to burn something, so it starts burning fat, and then your body produces ketones, et cetera, et cetera. So yeah, all these things kind of do follow a similar path. I will say too, I have done intermittent fasting for about a year now, and I have never felt better. What you were talking about is the 16-8, eat for 8 hours a day and then fast for 16. I went on AI a while back, and I was like, can I do like a 15-9? Is there really any difference between a 15 and a 16? And it said it's actually pretty negligible. So that's what I do. It helps because I do sleep for 9 hours. And so really it's only a few hours before I go to bed, which you shouldn't be eating at that time anyway. And then when I get up, I'm so busy doing my exercises and guzzling water that it's almost time to eat by the time I'm done. It's not that hard because I set my life that way to where this part actually becomes quite easy. But yes, the benefits are awesome. Weight loss and weight management comes a lot quicker and easier. And I cannot recommend enough. If this is something you can pull off, I do it 6 out of 7 days. I have that one cheat day. I do go out on Saturday nights, usually on Sunday morning. I just want a Red Bull and a donut, and that's exactly what I have. and everything I was doing for the past 6 days goes out the window. And then I start anew. And then it's fine. My body doesn't mind at all. So that's been very good. The one other thing I wanted to bring to the table, though, that you didn't, Rob, and this is something that has come into vogue the last few years. So some people just aren't quite ready for it yet, but it's one of the really safest and most productive things I think you can do for your body. And that's red light therapy. Have you ever known anybody to do this, Rob? Or you don't do it yourself, do you?
I don't, but as I've said, I love to try everything. I've been meaning to try this out. The science behind it is phenomenal, and I really believe it's very beneficial.
I'm telling you, you want to live forever. I have a great aunt who's still alive, and she's 95 and no walker or anything like that. And she had these indoor plants with this red light. I never forget this part of her house because I always thought it was so cool looking. And I can't help but think that might have had something to do with it because she was always in that room tending to her plants. But it's very easy. They come in tabletop varieties or like ones you can hang up on your wall. You can even have these stands to where it goes over your bed. It's 15, 20 minutes. And I usually do my stretching in front of it. So I kill 2 birds with 1 stone. Now, I do have these glasses I put on. You can actually look at it, but I'm not ready for that yet mentally. So I have these, put on my little glasses. I know these stretching routines in my head, so I can just do them just by listening to the guy's voice. And I do it right in front of my little red light origin, and I'm good to go. And I don't know. This is one of those things I don't really feel on the surface. It's kind of like supplements. You don't feel them until it's kind of part of you, and then you're just like, wow, why do I feel good all the time? I can't point to anything. But it's one of those things, and there are just so few drawbacks. And I kind of wonder if this is going to prevent me from having any troublesome moles or anything like that going forward. Because all my life I always have, and I've always had to get them taken off before they become cancerous. And I just wondered if I had this before, if it would have maybe prevented that. I don't know. But I'm really excited to see where this goes.
It's supposed to be amazing on inflammation. And as we've learned more and more about the body, we find out that, inflammation in the body, and all inflammation is when something is not perfectly running. It gets inflamed. Like when you hurt a muscle, it gets inflamed. It's injured. And so the body has to fix it. Well, the body has to spend a lot of energy like fixing that muscle because it's inflamed. The inflammation is telling the body there's something wrong. And so like if your kidneys aren't working, they're going to get inflamed. If your liver's not working, it's going to get inflamed. So it's really nice to get that inflammation out of your body because it really makes your body able to allocate resources to general overall health instead of dealing with these injuries and inflammation. I think it's a fantastic thing. I was looking into going into the infrared spas, where it's like a tanning booth, but you're just laying down in an infrared bed. Those are supposed to be really good for you.
Yeah, I think somebody bought one for Joe Rogan, and he used it for like a week. And he used to have to use readers to read books, and now he doesn't. Like the amount of things that this therapy can actually cure in a very short amount of time, it's up there, man. If you don't want to sit down and watch a YouTube video, just go on AI and say, hey, I have these issues. Can red light therapy help? Maybe it can, maybe it can't, but you never know until you look it up, and that's really how I discovered it.
Boy, this podcast just turned into a really good commercial for red light therapy. Did we get any sponsorships before this?
We really should have. I should have thought of that. And I want to tell everybody this is not official medical advice. If you use red light therapy and then you become permanently injured, don't blame us. But I think it's certainly something worth looking up. I've never spoken about it before because it's like anything. I want to give it time. You know, I don't want to use something for a week and then run around and preach about it. But I guess while we're here and while it's on topic, look it up, man. You might be really surprised what it could do for you. So before we get too on our horse about anything else, as we already have in this episode, I hope there is some type of takeaway for you out there. I imagine most of my audience already does pay attention to their health more than your average person does, because like I said, like attracts like. Water seeks its own level. But if there was anything you could have taken away from this episode, I hope it was worth your time. Thank you for spending this time with us. On behalf of Rob Reinhold, this is VP. We will both. See you next time.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, he will fire you from his prop firm if you spell his name with one B. It's Rob Reinhold.
Ooh, that is true. Actually, I'll probably forgive that one, but don't call me Robbie. I have never liked that ever since I was a kid.
Haven't done that yet, but I'll put that in the old toolbox here. So actually, this is going to be a Rob-focused episode times 10, because what we do here on the show is really try to get you ready to trade professionally in some capacity, whether that's trading for yourself, for a firm, anywhere. But the concepts we talk about are generally more abstract. I guess that's fair to say. Today, we are getting right down to it. Rob, if you didn't know, is the CEO, the head of trading at Maverick Currencies, the prop firm that sponsors this very show. Maverick Currencies is a full-scale, full-service prop firm, probably the closest thing you're ever going to find a trading at Goldman Sachs as a prop firm. In a sea of fly-by-night companies, Maverick is the gold standard. You can trade stocks, options, Forex, crypto, all of it. And Rob, anything else you want to say to that end before we actually get started? We haven't talked about the firm in a while. I feel like it's time.
And, sometimes there's some problems we need to deal with, but we'll deal with those when they come.
All right, well, I respectfully decline your offer then. Let's go ahead and move on to what exactly are these risk managers even looking for? Because I think it helps if a new trader's coming in I guess this is where I kind of had a misstep here. I mean, I was drowning in my own paranoia that first year, just wondering what these people were looking for in me, and if I made this move, what would they say? 90% of the time, I'm sure they didn't even care, and they were just looking more at the big picture. So kind of spell it out for new traders coming into really any well-run prop firm. What is the risk manager looking for in their trading? Break it down piece by piece for us.
Let's go ahead and start with kind of the daily grind. The daily grind is you are looking for risky positions. You are looking for traders that are exhibiting behavior that is not great. So that's really the first layer here is, okay, where's the risk of the firm? Where are my, because look, every trader has a different risk tolerance. And we at Maverick, we have very risk adverse traders. We have very risky traders. So really, we don't really know how someone's going to trade until we watch them. And then all of a sudden it's like, okay, this person trades in a style that has some big swings. We need to be more active with that person. This person over here is very risk adverse. We don't really need to check in on them until the month is over and we go through statements. So that's really the very first job, is to be there, ground zero, looking and watching while the markets are open. And in Forex, it's tough because markets are always open. But again, identifying the traders are going to need a little bit more assistance. That is, again, the day-to-day grind of a risk manager. We're also looking at the risk for the firm as a whole. So yes, we are looking at individual traders, but then we have to take a step back and basically group all the trades together that the firm is in. And we have software that does this to where we see, oh, we are really long dollar here. And in fact, we're way too long dollar as a firm. We don't want to go in and hit our traders over the head and say, hey, you need to take down your dollar exposure. We'll actually take down that exposure by, again, selling a little bit of dollar to bring it down. This is the daily grind of a risk manager, looking at individual performance, looking at individual risk, and then looking at firm risk and making sure that we're always going to live to survive another day. So that's kind of just a day-to-day grind. And then we have at the end of the month. At the end of the month, when we have performance, this is where we really dive in. We have trader meetings. We discuss the performance of traders on that monthly basis, and we identify who can we help, who can we assist.
So for all aspiring traders out there, aspiring prop firm traders who have not joined a firm yet, if they aspire to join Maverick, and if somebody is more risk tolerant and that is just their style of trading, that does not necessarily work against them, is what you're saying, right?
No, it's our job to manage them. It's not our job to limit them and to hold them down. It's our job to manage them and help them and make it to where they survive drawdowns, to where they can thrive when they're hot. That's our job as risk managers to do that.
Okay, so that's more of like a holistic overview. So drill down a little further. In particular, what specific things might you be looking for after you've already gotten that first data set from their first 1 or 2 months in live trading?
Well, this is where performance reports and metrics come in really handy, because now we can say, okay, we've got a month under the belt. Let's take a look at their numbers. And this is where we can take a look and say, okay, this trader, they made some mistakes here. They don't understand the software well enough. Let's get them with a coach so they can understand the software better. Basically, we have our trader meetings to say, okay, what can we do with each trader? Now, look, some traders, they just do their thing. They're never in any risk trouble. They make their profit. They take their distributions, and we just give them a high five and say, good job. Let us know if you need anything. But then there's some traders where we actually go in and say, hey, we think we can help here. What can we do to help you out?
Okay, so we got a little more granular that time. Then take it down even further. Are there any specific metrics you're looking at? Because this is the really interesting part to me. What's going on behind the curtain? What are the metrics that these guys are actually looking at? We covered what you're looking for in general, but what are some actual numbers that can kind of get you to that conclusion, if you know what I'm saying?
Yes. But before I get to that, let me ask you this question. And when I mean you, Patrick, but also you out there listening. Imagine you hired a trader to trade all your money, and that trader is going to be trading for you. What do you want from that trader? So imagine, Patrick, that you decided, hey, you know what? I'm too busy with everything else. I'm going to hire one of my subscribers to manage all my trades and my money. What would you look for in a risk manager or in a trader? Sorry, not a risk manager. What would you look for in a trader?
So I don't know if this is a totally correlated question because in a prop firm, they're only trading a small amount of your money. If somebody's trading 100% of my money, I would want nerves of steel. I would want them to be almost completely detached from 99% of the things going on in the world and just be able to look at things in a very mathematical and analytical way. Like there's no room for creativity here. I want a very regimented approach because until I get an actual data set from this guy in the arena, guy or girl, I'd probably hire a girl because they're better at this part arena. I don't really know where else I can go, so I'm going to err on the side of caution here and say fairly low position sizes to start. Let me see how you do under pressure, but without risking a whole lot of my money at the start. Maybe that's not the answer you're looking for, but that's, if it's 100% of my entire net worth was in this person's hands, that's how I would start the first 1 or 2 months.
Let me ask you this question. You've got two traders. You've got one that's going to lose you $10,000 one month and then make you $12,000 in another month for a net of $2,000 of gains. And then you have another one that's just going to make you $1,000 a month and never really have much variation. Who are you going to choose?
At first, I'm choosing person B because I have to see what these swings look like from person A. If I had a more zoomed out view of what these people could actually do, again, in this particular arena, what you can do when there's nobody over you and when you're not trading anybody else's money, and what you're doing when you are trading somebody else's money are two completely different things. So until I had that data, I'm going the safer route against my better judgment. But in normal circumstances, I would actually take person A because I take a long-term view. I know losses are part of the game, and I want the most bang for my buck without taking unnecessary risk. So I know that's not a direct answer to your question, but early on, person B, down the line, if those numbers prove to be consistent, person A.
Well, in my example, they both gave you the same return. So I'll just go ahead and say for me, I'm looking for the lowest bit of drawdown I can possibly get.
Now, wait.
That to me is way more important.
Sorry, Rob, objection. You said person A was minus 10,000 plus 12,000, and person B was plus 1,000.
Oh, sorry. I meant plus 1,000 per month.
Oh, okay. Well, if that's the case, then yeah, just give me the person who has zero drawdown, and I'll ride that mythical unicorn to the stars.
Okay. Wow, we just wasted a lot of time with that misunderstanding. My apologies. But look, and you were even right. Let's say that it was a lower return with Trader B. At first, you would choose them because you didn't want that kind of roller coaster ride. You wanted to, again, get comfortable with the person, see what they're like, see how they handle themselves, and then maybe you choose person A after being able to watch them for a long period of time. I totally agree with you on that one. So I want you to, at home, I want you to think about this question. If you hired somebody to manage your trading, what would you want them to do and how would you want them to trade? That is how you should be trading. Here's the irony. Many of you aren't. Many of you, if you were looking over your own shoulder, you would have a meltdown. You would have a heart attack because of too much risk. Or you might actually be on the opposite side. You might be so boring, you might be so safe that it's almost impossible for you to make money. I remember years ago, we had a trader in the office, and I've never seen a trader so disciplined. I've literally never seen anyone this good. The problem was he never made any real money out of this. He was always perfect. He was always patient. He was waiting. Everything was perfect, but he was so risk adverse, he would make pennies and never really made real money. You need to find someone in between. And that's really where you want to be. You want to be risk averse, never put yourself in a situation where you take a big drawdown, but you've got to have that killing instinct. You've got to have that instinct to go after it. So for me, and again, in a Maverick, what we're really looking for is that type of trader that is, again, can keep drawdowns low, but put the pedal to the metal when it's time.
Okay. So you described kind of a mishmash of different personality styles all kind of rolled into one. So that's a little tough to track for your average person. So let's do this instead. What are some of the, let's say, individual traits or individual behaviors that you would look for somebody who embodies, all of these more general traits that you're looking for?
Well, let's start off with those two extremes. I talked about how you need to be able to take enough risk, but you can't take too much risk. One of my favorite sayings in poker is another one of my favorite sayings in trading. In poker, you can put all your chips in at once and bet them all at once. It works every single time, except for the last time. If you trade like an all-in poker player, I've seen hot streaks. I've seen really amazing hot streaks, but it always ends at zero because that's the nature of the way you trade. On the other side, you've got the person that's just too risk adverse that never ever makes any sort of real money or any real bets. So again, as a risk manager, you're identifying both of these people as problems and say, hey, how do we fix these problems? The people in the middle that are consistent, that have larger gains than losses, that have positive profit factors, that you don't worry about risk management at all with them, they're fine. Yes, there's a little bit of maintenance to do, but as a risk manager, you're really looking for those extremes. And how do you figure out those extremes? One of the questions I always ask my trader whenever there's a risk management call, I always put them in my situation. If this was your money on the line, would you be able to sleep at night? Now, sometimes they say, of course, I'd sleep like a baby. I'll push a little bit against that. But a lot of times they say, yeah, if I was in your situation, I would be calling me too. I get it. And then all of a sudden, you have a different perspective. The perspective I gained as a risk manager, and this is really what I want everyone to be able to do after this episode, is I am 100% objective because I don't have, I have skin in the game, I have my capital in the game, but I didn't pick their trade. I don't care about their trade. I don't care about their entry point. I could care less what the stochastics are saying or what a Fibonacci's. I don't care about any of that. And whenever I call a trader and they start telling me about their position, I'm like, hey, look, save it. I don't care. I don't care why you got into this. I don't care. There's either too much risk or not enough risk on it. Can you sleep at night? If you find yourself not being able to sleep at night, that is an issue. So let's wrap this up to where, okay, you understand that you are your own risk manager in trading on your own. You need to be in charge of you and your trading. You need to be your own risk manager. So how can you do that? First off, ask yourself, if this was someone else trading my money this way, would I approve? That's the first question to ask in every single situation. And just be objective about it and step back. Now look, I've had many times, especially in my younger career, where I made a trade and I knew I shouldn't do it. I knew I shouldn't do it. It was like so clear. My biggest loss I've taken, I can't remember if I told this story, but it was after the biggest gain I'd ever had in 2008. I shorted Aussie yen, made a ton of money, and I was on a high. My next trade was 100 lots. 100 lots. As soon as I clicked the button, my P&L was like $3,200 lost just from the spreads. And I remember thinking, uh-oh. I didn't get out. I didn't just say, hey, don't be an idiot. You're being an idiot. I needed me to be my risk manager and kick my ass and say, that's a dumb thing to do. So ask yourself, if someone else was trading this way, would I approve? Patrick, do you have a story where you got in a trade, knew it was wrong, but just couldn't get yourself out of it?
Not really, because, well, I mean, there's plenty of trades I should have gotten myself out of, but I let it run too far. Because as an indicator trader, especially if you're doing overbought, oversold, which I did in my early days, you're always waiting for that indicator to make that turn back the direction you want it to go. Now, the punchline there is it can take a very, very long time for it to do that. So do you want to sit there and wait and find out? Or do you just want to cut your losses? Well, I would always sit and wait and find out. But I don't think I ever entered a trade that I felt bad about. I was always probably the opposite. I was probably way too optimistic about every trade I entered because I had back tested, not formally, but in my mind, some of these new indicators, and they seemed to be amazing. So I couldn't wait to actually put it into practice. So that's kind of where I was. So the second half, yes. The first half, really for me, never. I would never. I don't like. That's why I don't gamble at casinos. I don't like going and putting my money down when I'm expected to lose. I always feel like I'm expected to win. And if I do, I do. I don't, I don't.
All right, so that is the entry, but what about a position size? Was there ever a time where you knew the position was too big?
The only time where that happened to me is where I was already down and I was going, quote, all in, which you should never, ever do in anything unless you're in a poker tournament or something like that. But that was like, all right, this has to work. I got $200 left to my name in this account, and I'm just going to let it ride. Now, that in the scope of a $1,500 trading account, that's way too big for one position, of course. But, I mean, look, man, I'm already down 1,500 down to 2. I'm not going to get back to 15 with regimented trading. I don't even know how to do that. So this is the younger me talking. So what I'm going to do is I'm going to go all in, and we're going to try to turn this 200 into at least 600 or 800 so I can finally get back on track and maybe, attempt to get back to even. So that was the logic train I followed when it came to those, quote, all-in trades. Stupid, of course. Like you said, they work until they don't, and then all your money's gone. But looking back, I think that's the only time I would fall into that category.
But at the time, did you know it was a dumb thing to do?
Totally, but I didn't care. What's the difference between 200 and 0 to me at this point after I've already lost that much? Not a whole lot. So yeah, I'm willfully doing something dumb and hoping it works.
Look, I get that, and I understand in that situation, that's not really a huge risk. Like if that's all you got left, YOLO, go for it. But there's been many times, at least in my life, where I just knew I was in the wrong. I knew that I had done something against my plan. And that's when your objective risk manager has got to take over. It's got to take over because you made that decision because of psychology, because of what's happening in your brain and all your brain chemicals and your chemistry right here, right now. You have to understand that, I'm engaging in self-destructive behavior. I need to stop this. So you need to be your own risk manager. When you recognize that self-destructive behavior, you've got to put yourself in a trading halt. And we do that at Maverick. If I see people that are doing stuff that's, totally outside of the trading plan, sometimes I don't even have a chance to call them and get in contact with them. I just slap a restriction on their account. It says, hey, and when they try to make a new trade, it says, call Rob. Call Rob to get the block lifted. That's what you need to do for yourself. You need to be able to objectively say, I'm engaging in destructive behavior. I need to put myself in a trading halt. It's very, very difficult to do. And that's one of the things we talk about at Maverick, which is beneficial about having a risk manager. We call it forced discipline. If you're having a hard time with discipline, get yourself a risk manager. They're going to be forcing discipline upon you. But again, I know not everyone can do that. So again, we got to be objective and say, okay, if I'm deviating from my system, I have to understand my brain chemistry is all over the place. I need to stop. And so what I do is I put these halts on people. And I just say stuff like, hey, you know what? Take the rest of the week off. Just take the rest of the week off. Or hey, you know what? Let's circle back at the end of the month. What I like to do is I like to wait for long enough to where the market dynamic has changed. Because the reason the trader is feeling that, and let's take you, Patrick, where again, something was overbought or oversold, and you were trying to reversal that, you are like just so eaten up by this inside and say, it's got to turn sometime. It's got to turn sometime. I love to break that and then have it to where the market dynamics change. Then when they come back, they no longer have that bias. That's one of my favorite things to do with traders. Is just like, I can see like if they're looking for a reversal, I just say, hey, you know what? Now look, every so often the reversal happens, right when I cut them off, and that does happen. But a lot of times the reversal doesn't happen. And 2 weeks later, they come back and they're saying, I'm glad I was cut off. I'm glad. And now they are coming back with a new open mind instead of whatever they had stuck in their head that was causing them to have that behavior. So again, trading halts, we've had an episode or two on this. I've talked about this. Trading halts are really beneficial for you.
Yeah, I completely agree here. And this does go against a lot of, well, if any of you out there are fans of the podcast, you know how I usually approach things like this. When the going gets tough, the tough get going. If you're going through hell, just keep going. Suck it up, buttercup. Figure it out. There's going to be times where you're down in your trading. You can't just stop and quit every time this happens. You got to trade your way out of it. Situations like Rob just described, if you're willfully engaging in destructive behavior or destructive trading behavior, yes, they will shut you down, and be happy when they do. You're probably not going to like it at first, but like in the example Rob just gave, as soon as your head clears up a bit, you absolutely will. But like Rob said too, you should already be doing this yourself. A good prop firm, unlike most prop firms out there, will do this for you, but you cannot rely on them to do this for you. So you have to be able to do this yourself. Am I kind of making sense here?
Yeah, no, every single person, because look, by the time the risk manager gets in touch with you, you've already messed up. You're already past that point. And you knew, everyone always knows that the call is coming or the email is coming. People are never surprised when one of us reaches out in the risk management department. They know it's coming because they know where they are. They fully understand it. We all know when we're struggling and doing bad. And this is where, again, you've got to check yourself. Am I engaging in bad behaviors? Is this slump my fault? You have to take a step back and be objective. And if it is your fault, trading halt. Trading halt 100% of the time. Break the stimulus of the market. Take 2 weeks off, 3 weeks off. Let everything change to where all of your biases are now gone. When you come back, you're going to be much better. We also all know when we're doing well. And this is where the monthly check-ins are actually really beneficial. So at the end of every month, we do all the accounting and we look through all the trader performances. And what we're really looking at is two metrics. Two metrics is the number one. Overall return, and then the drawdown or the risk it took to get that return, or what some people call like a Sharpe ratio. Again, this is what we look at. Okay, you made a return, great job, but what was the drawdown on the risk you took to get that return? We have a monthly trader meeting and we go through all the traders' performance, and then we decide, okay, these are the traders that we need to reach out to. And Again, either just to pat them on the back and say, good job, or say, hey, you know what? We noticed that you had some issues. Let's fix those issues. I think it's very important as a trader to have a monthly meeting about your trades. And I know that sounds weird, but I'm going to give you a little bit of a tax trick that you can actually use on this. And then you should do a yearly meeting. Now, Maverick, we always tell people, look, if you're in the business of trading, you may as well incorporate. All of those meetings, again, companies have meetings. And those meetings, the expenses of those meetings are paid for by the corporation, and they are corporate expenses. So again, a monthly meeting, go out to a nice dinner with yourself and go over your trades, or have takeout, have it brought in, and use your corporation to pay for that expense. But again, you've got to have these meetings because I know it's going to benefit you for taxes, but have the meeting. It's going to be a bigger benefit. Look over your statements, look over your performance, look over your journal, look in that notes tab. How did you do psychologically? Have that meeting. Like I said, have takeout be brought in, write that off as an expense. And then once a year, your corporation has to have an annual meeting. The expenses of that annual meeting could be paid for by the corporation. You could go have your annual meeting in New York. You could have it in Rome. You could have it a lot of places. Again, you got to have the annual meeting, and maybe you won't be able to write off all of it, but you can write that stuff off. But you got to have these meetings, because I remember my first couple of years, I just traded. That's all I did. Every day I traded, and I never stopped to look back because I was always just living in the future for tomorrow and the next day and the next day and the next week and next month. Looking back is more important than looking forward. Patrick, I know you're big on journaling, and this is just where journaling comes in. It's so important. Trader, especially in the first couple of years, should really only look backwards. Look backwards at your results and be focused on what can you do to make those results better. Again, what could you have done last month to make it better, and then make those changes in the month ahead to see how it goes. Do you have anything to add here about journaling and looking back?
No, but I think what you just said there is something we've never said on this podcast before, that every month is a really good period of time to go back and look. Especially that comment section, which we always talk about here, is the most important column on that entire journal. People think it's actually the least important. No, it is the most. But looking at it every single day, assuming there's something there, I don't think that's very helpful. I think that's a good way to raise your anxiety level. I think at the end of the month, give that journal a good look and say, okay, I made mistakes here, here, and here. Now that those trades are kind of done and I'm over it and we've moved on, I think it's so much easier to learn from those trades doing it this way, looking back after the emotions has subsided. Because this way you can actually get a real picture of what you're doing, and the emotions you had inside of that trade are no longer there. You know, I always say you want to be able to look at things with as clear of a head as possible. I think every month is a really, really good way to do that. So that's the one thing I would probably add there.
Patrick, right before us recording this podcast, I met with one of our traders going over his results. And one of the things is I keep exiting my winners too early. How can I change that? What can I do? And again, he's asking me and I'm giving him some ideas, but you don't need me there. You don't need Patrick there. You can look at your journal and say, hey, I got out before my exit called for me to get out. Why did I do that? Have that meeting. Have that really deep thought about, okay, why do I do this? My guess is you do this because you're screen watching. If you're not screen watching, it's almost impossible to do this. So then it's like, okay, I need to make some rules that I can't screen watch during, these periods of time, or I can't do this. Have that meeting. Have that meeting like we have with our traders. Have that with yourself. Identify the problems and then really work on fixing them the next month. The way trading works and the way the evolution of trader works is you go from making a mistake a day to a mistake a week to a mistake a month, and then you make a mistake every 3 months, and then you make 1 or 2 mistakes a year, and then you make 1 or 2 mistakes a decade, you're still going to make some mistakes, but you can see it's getting infinitesimally smaller. That no one just flips the switch and becomes perfect. It is a process. Meet with yourself and go through that and really work on it. And the last thing I wanted to add is, at Maverick, we always have continuing education. We just rolled out a big push about AI as, hey, how can you use AI in your trading? Do the same thing with yourself. Always be learning, always be growing, always finding new things, new edges, new products, new trading styles, always be growing.
So I did a bad job of transitioning us here, and I never really said, okay, we are officially at the solutions part of this episode. So let me go ahead and kind of recap the solutions to the overall question. And I guess the question is, too, we didn't even really illustrate that super well. We just kind of went by the seat of our pants on this episode, if you couldn't tell. But this was really, okay, how can I be, at least as far as risk goes, just in the parameters of risk, how can I be an attractive option for a prop firm who is looking at hiring me? Passing a test is one thing, but this is a relationship that's going to go a very long time if you're good at it. So how do you become one of those people that says, hey, I am not only in this, but I am trainable, I am coachable, I am adjustable, and I want to be just the best gosh darn prop trader in the entire firm. I want to be exactly what you want me to be. This is how you do that, at least how you do that here. And I would imagine if you could figure out how to be the ideal client for Maverick, you're probably going to do pretty well in most places. But again, it goes beyond just passing a test. So the solutions there are, asking yourself, if this was somebody trading my money, would I approve? Having your monthly meetings, maybe even adding tax benefits onto that. We don't talk about taxes on this show. I don't talk about it on my channel because it's a very sensitive, ever-changing topic that is different for everybody. But I will say, if you're interested in trading as a business and incorporating, there are in-house videos and webinars that they do at Maverick for that.
Patrick, we actually have one up on our YouTube channel. People could check out.
Oh, nice. Okay, that's wasn't aware you did that. So good. Let's.
I'll give you the link.
Yeah, perfect. Let's do that. Next solution: putting trading halts in yourself if you need to, because some prop firms will, some prop firms won't. But you can't assume that any prop firm is going to do it for you at all. And then the last one that Rob just said, checking in for training and continuing education. There's certain rules you just don't break in this industry, but there are certain things that continuously evolve and evolve for the better, and you should be embracing those things. Now, another solution I want to add, and Rob, I think you can speak to this, is if you follow the no-nonsense Forex way of trading, a lot of this stuff is already built in. A lot of the problems we just talk about, a lot of the problems we just spoke about in this episode really are not going to apply to you for the most part, because the system kind of takes care of all of this for you. I mean, I know there's a lot of no-nonsense Forex traders already there. What advantages have you been able to see, like personally with your own two eyes, that they just kind of have from the start, right as they join? Have you been able to see anything like unique to any of the other traders you've been seeing?
Yes, and thank you. First of all, most of the traders that come to us from your channel are trading on the daily chart, which right there cuts down on so many psychological mistakes. I mean, that right there gets rid of like 90% of the issues. They run a very tight system. They follow their rules. And yeah, then they don't really get these risk management calls whatsoever. So yeah, very happy about it.
Yeah, and the other thing too that I wanted to add as well is you've heard us mention all these things you can do to become a more attractive trader for a prop firm, but I wouldn't obsess over these things. These are general guidelines and just things you can do in general just to be a better trader overall. But I do know at a place like Maverick, they will train you and they will smooth those rough edges away over time. And I know that's one of the things they look for too. You have to be a bit adjustable. Even if you think you're the shit, you probably are, but this is a completely different arena, and it's almost like you're starting the game over again completely. So you want good coaches there who can train you and make you even better. And I know this whole episode has sounded like one big commercial, but I'm just saying I don't know if other prop firms do this because I haven't been a part of them. But I know Maverick can and will, so don't obsess too much over this. But again, pay close attention to it, because everything we've said in this episode, to me, is just kind of a good common sense guideline if you want to become better at really anything, much less trading.
Some of our top performing traders, not all of them, but some of them, will reach out to me periodically and be like, Rob, I want to have a meeting. I want to go over my performance metrics. And I'm always like, dude, you're killing it. You know what's going on. And it's not a talk to brag, but they genuinely want to get my feedback and to see if I have anything that they could possibly do to improve. That's a killer attitude, and that is just the perfect attitude. Hey, I'm killing it, but I'm always looking for a way to improve. Can we meet, every 6 months and go over my performance and you can take a look at things? Of course. That's just a great attitude, and if you have that attitude as a trader, you're going to go really far.
So, top to bottom, I think we gave you a pretty good overview of what a good prop firm is going to be looking for in terms of somebody who manages risk, which at the end of the day, that is what you are. You can really tell others who don't understand what trading is I'm a risk manager. And you might bore them to death, but that is what you are. That is what we do it every day in every decision we make, but we especially do it in trading and investing and things like that. So hopefully we gave you a good top to bottom episode today. These episodes do go to YouTube, so if you have any further questions, really about anything we've talked about the prop firm industry or risk in general, go to YouTube, sound off down below. One of us will do our best to answer you. And thank you for joining us for yet another episode of the Trading Psychology Podcast. Rob and I will both see you in the next episode.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me is he is every episode. He failed his own prop trading challenge 3 times. So he just said screw it and became the CEO. It's Rob Reinhold.
I'm not sure that was the right idea. Yeah, I think it's actually a little bit more difficult than passing the prop challenge test.
So, moving on, we have the most Rob episode I think we've ever had here, because if you haven't noticed in the last few episodes, we've been trying to get you guys ready to pass a prop firm challenge yourself, because that is the main goal for a lot of traders. At least at the start, you can kind of decide what you want to do after that, whether you want to join multiple prop firms, whether you want to go your own direction, whether you want to stay a prop firm trader and do other things. There's so many directions you can go in this industry, but becoming a prop trader is often step number 1 for a lot of people. So we're going to try to get you mentally prepared for this endeavor. Who caught lightning in a bottle 3 times in a row, and that guy would actually trade for a little bit before flaming out. But most people just couldn't keep up with the parameters that these prop firms set, and that was done on purpose. They just wanted your money up front. They wanted you to flame out on your own to take the liability off of them, and then just keep recycling these people in and out, in and out, in and out, and making their money that way. I will bet a lot of those companies have gotten cleaned out over time, but maybe not all of them. So the only thing I wanted to say here is just be on the lookout. I've said this before in previous videos. I have not said it lately. If the challenge itself just seems unreasonable, just avoid it. There are plenty of challenge firms out there who have very reasonable goals and will not hold you to them month after month, because that is stupid. Everybody has down months, and will give you a reasonable amount of drawdown to hit, and will let you hold positions over the weekend, like you should be doing. Things like that. Just keep a sharp eye out. Don't get too excited. Don't think it's your only chance just because this one prop firm reached out to you. Make sure you're joining one that you can actually stay with. I just want to say that because that's a big thing on the challenge side that I don't know if it's still around. Maybe some of you can let us know down in the comments section on YouTube if it is. But that's probably my one big contribution for the episode there, Rob.
Well, Patrick, you are exactly right. And that was actually right on our outline as the number one thing to discuss is the rules. Now, look, the prop firm is set up to where they want to reward the good traders and they want to restrict the losing traders. I mean, just think about it. That sounds predatory, but that's also how you run a trading firm. And then that's just how you do it. So traders who succeed, then yes, they should get more limits. They should get more. And the traders that don't, they should be restricted. I don't think that's predatory. But as you said, Patrick, there are some rules that are just unattainable. They're just unattainable. And that's where you need to start. You need to understand the rules of your trading. So we're talking about lots of different rules. What are the drawdown limits? Is there a daily drawdown? Is there a position drawdown? Is there a weekly drawdown? Is there a monthly drawdown? You have to know these things because when you go into your back testing, you need to be able to see, would you have triggered one of these drawdown limits? And if the answer is yes, then nothing to the right of that equity curve mattered because you were shut down and booted. So again, you have to understand the rules. And this is where, it's great that we have an online community out there. There's lots of websites out there that will share these with you. But from someone who runs a prop firm, the best place to get these rules is from the prop firm itself. They should have clear stated goals of how it goes and what are the rules. Some of the real restrictive ones I don't like. Again, a reasonable one is drawdowns. What happens in drawdowns? And again, are the drawdowns too tight? If they're not too tight, then that's a very reasonable rule. But some of the other unreasonable rules I don't like personally, and I'm not trying to talk bad about any one firm, it's just not how I want to run the firm, is there's minimum trading days. Like, you have to be active on, 80% of the days, or you have to make a minimum of 20 trades in this period. I hate that. You should not be having to make trades to meet a goal. You should be making trades because they're good setups.
One of the ones that I have seen multiple times, and again, I saw these more back in the day. I don't really pay attention to them now. But something like you must make a minimum of 5% every month. You will never, ever do that. You might be able to do it for 2 or 3 months, if you hit some really good streaks, or if you over leverage, which is probably what they're looking for you to do so you can flame out. But just when you see things like this, just run the opposite direction as soon as you see it and go somewhere else.
Yeah, and this comes back to, looking at these rules. You are playing in the prop firm's house with the prop firm's capital. So they do, unfortunately, get to write the rules. I said unfortunately, but I run one and I write the rules exactly how I want it to be. So I guess it's not too apologetic about that. But make sure that there are rules in place that you won't violate. And if there are rules that you're going to violate, then it's not the right fit for you. So Patrick, you had one of goals, of a certain percentage amount of goals. I think that's very difficult as well. I think that's just setting you up. You could have a couple good months, but What about that fourth month when you don't meet those goals? A lot of these firms, they make you basically start back over at the bottom and rebuy in, which is going to be more capital. You're going to drop down in capital levels. It's pretty discouraging. At Maverick, we only have one rule. It's profitability, and profitability can be $1. If you make $1, that is considered a profitable month. 2 profitable months, you get a capital raise. If you don't, you stay where you are. And if you have too big of a drawdown, we put you into our trader retention program where you do some training and then you start back up. Those are very easy rules, and that's how we've run our firm. But look, there's lots of firms out there. There's going to be some that are better fits for some of you. So what I'm saying is make sure you understand their rules. And they even get into some pretty funky rules. And these are the ones I really don't like. I heard one of a consistency rule. Patrick, have you ever heard of a consistency rule?
Not formally, but if it's anything like the one I described earlier, then I have. I don't know. Explain.
I didn't know this one existed, but we have one of our traders. He trades with some other prop firms as well. And he got a warning that he had made money too quickly. It was too big of a gain too quickly. And he was put on a break for breaking that rule. That's pretty silly to me. It's pretty silly. You don't have control over the return and when it comes and how many, like you could have just one big candle off of some, news event or some surge in liquidity. And all of a sudden you violated rules because of something you have no control over and something that was ultimately positive. I just don't like that one.
Yeah, it's like maybe they have a rule to where you can only have a 2-to-1 or a 3-to-1 profit to loss ratio on every trade, which I've done an entire video on. I said that's stupid. Why would you ever cap your upside? But maybe their rules are so regimented that if you go beyond that, you've officially, I'm doing air quotes, broken the rules and need to be put in timeout. I don't know.
The rules I really want you to think about avoiding are the rules that you literally have no control over. Like you have no control over the speed at which your profits come. Like we all have our targets on our trades, but whether it gets there in 3 hours or 30 days, we don't know. And no one does. And no one has control of that. So anything that you don't have control over, I really don't like. And like I said, if it doesn't fit you, it's nothing bad with that prop firm. It just doesn't fit you. Go find one that has some rules that work for you. Other rules that they have, no news, no holding over the weekends. I've seen some that have no holding over the turnover period from day to day. You have to exit and then you can get back in on the next day, which is just, I don't love that because that just generates some more slippage in commissions and slippage in the bid ask. But again, understand the rules. Patrick, do you have anything to add on that? Because I can't say that more strongly.
No, and like Rob said, if you see things like this, don't despair. There are, especially now, there are so many prop firms out there. And like Rob was saying too, with one of the guys at Maverick, and a lot of people at Maverick do this, a lot of people I know do this, you don't have to just join one. You can join several. So if maybe there's some things in these rules you're not seeing, or some things about this particular firm you might end up learning the hard way 3 or 4 months in, well, now you have some other outs. So 1, make sure you can handle 3 prop firms time-wise. But 2, spreading yourself out and joining a few if you can isn't the worst idea either.
And if you have multiple strategies, which you should absolutely have, you should literally shop for the prop firm that best fits that strategy. Like, we don't like scalping. We don't encourage scalping. We actually discourage scalping, and we don't want scalpers whatsoever at Maverick. Whatsoever. So we're not set up for that. We don't want that. If you have a scalping strategy, go find someone that does. But if you like to trade off the daily chart or even the weekly chart, hey, we love that style of trading, and we've set our rules up to really encourage that style of trading. So again, you should also be matching up prop firms with strategies and making sure you find the one that fits the best. All right, and then next, number 2. Once you understand those rules, then you need to go back and back test those rules. Go back to your back testing over the past year, 2 or 3 years, or whatever it is, and see, did you ever violate the drawdown limit? Did you ever violate the consistency rule? Did you ever hold over a news event that you wouldn't have been allowed to hold over. So again, example, let's say they say you can't hold over employment reports. Maybe that's one of the reports you can't hold over. Now, in your trading, you don't care about those reports because you're trading off the daily and the weekly chart. So you don't even care about those when you're looking at your back testing. But guess what? One of those happened during your back test and you would have violated their policy. You need to go back and see, did your back testing, did it work with the rules that were provided by the firm you're looking at?
Yeah, and one thing I'll say to that is you might run into a situation where you would not have hit those drawdown limits had you had just taken on a little bit less leverage or maybe just made your position sizes a bit smaller. And as long as that's not too restrictive to the way you trade, well then I would say don't let this be a deterrent for joining a prop firm. Just go ahead and make that one small adjustment. If the adjustment is egregious and it just completely flies in the face of the way you trade, okay, yeah, go somewhere else. Like Rob said, have an abundance mindset here because you should. There's prop firms all over the place. But if you run one of these tests like Rob is talking about and you do hit drawdown limits, my advice would be go back and just try a little bit less risk and run those tests again and then see what it would have looked like because that can make a big difference.
Oh, that's a piece of cake. That's a total piece of cake. It's just, you just adjust your position size. And you could also do it the other way. Like if you look back at your results and you see that you were nowhere near the stop out limits, hey, take a look at increasing the position size a little bit. Let's add a little bit more juice onto it to where you can make a little bit more money while still fitting within those rules. That's really what you need to do is you need to backtest your system under the rules and make sure that you aren't violating any of those rules because those rules will get you either put on a halt or even booted out of the firm if you violate them. All right. And then the next one, number 3, game the system. We've talked about gaming the system a lot in this podcast. I love to game systems. It's one of my favorite things. And it's actually, I think the reason why I've been successful in my life was that I look at a system or I look at, like, for example, let's take my first job. My first job I looked at the job and I thought, I see what everyone else is doing, but they're dumb. If they came in 5 minutes early and they did this and this and this, they could get all their work done well before everyone else. And so that's what I would do. I would just go find a way to, again, I call it game the system, find a way to outperform everyone else, figure out how to, I don't want to use the word cheat, but figure out how to work within the rules to win. And the thing I love so much about trading, that's exactly what you're doing as a trader. There is a system out there. We all know there's money to be had. Some people win, some people don't. Can you figure out how you are going to take money out of that system?
Okay, I have to throw an objection out here, and this might be an isolated example. You tell me, Rob. But let's say I want to move up from level 1 to level 2 at Maverick. My first trade is a winner for the month, or for the time period that you're looking at me for. I'm not sure how it is at the lower levels anymore. But let's say my first trade is a winner, and then I just completely stop trading. I got the win, and let's say I do that for the next period. That's twice in a row. I think you should give me more money. What do you think?
That has happened, and we do give more money. Because, again...
You're kidding.
No. I respect people that game the system. I actually have to tell our traders sometimes, like, hey, if you did this, that you could make more money. Now, it's better if they didn't do that for the firm, but I tell them, like, hey, you should do this. It's going to be better. And they're like, oh, yeah, you're right. Why would you tell me that? Because the traders that learn how to game the system, they're the ones that win in the end. So look, maybe at higher levels, I've probably told a trader like, hey, look, you got to make more than one trade. I'm not giving you another $100,000 because you made me $2. Sure, that doesn't happen. But at the earlier levels, I absolutely respect people gaming this system.
God, I wish I knew that earlier. Okay. Anyway, moving on.
So this is kind of like reverse engineering. you're looking at the prop firm's rules and you're looking at what they allow, how they allow it. Do some reverse engineering and take a look at that system. Is there anything you can do to exploit those rules? And just like what Patrick said, I had one trader, and again, I'm not encouraging anyone to do this because it's going to annoy me if I get a whole bunch of people looking to do this. But he did exactly what you said, and he worked his way up to about 100K of firm capital, where then he started trading a little bit more aggressively. I liked it. It's exactly what I want our traders to do, is game the system. And then, of course, then it's my job that if it's egregious or if it's some issue that's going to be long-term damaging to the firm, then it's my job to close that loophole. But I love when traders find those loopholes. So I want you to do the opposite now. You're looking at first, I want you to look and see, how do you plug your system into the rules? And I also want you to look at the rules and say, it looks like I can do this and actually get a little bit better edge because of these rules they have in place. So game the system. I can't give you any more than that. You just have to look at the rules and see what you can do to get an advantage. But if they're going to give you an advantage, absolutely take it. And I'm saying this as someone on the other side of this equation.
All right. So at first I'm like, man, I'm going to be thinking about this for the rest of the year. But it kind of does make sense because let's say I game the system all the way up to 100K. It's not like I've really made any money. You've just given me more money to trade with. I haven't really made anything. So now I still have to make money, and I'm not going to do that trading once a month. So I see what you're saying there. At some point, you actually got to trade, but I was really surprised at that answer, but I'm starting to kind of understand it now. I don't know if I'm okay with it, but maybe that's just regret on my end. I don't know. But okay, I've kind of squared that circle.
One of the things I was very surprised about in the beginning when we started this firm 27 years ago was not everyone had the same motivations that I did. When I got into trading, my motivation was to be like the superstar and to have all this money and all this capital and all this everything. And then when I get other people, some people don't care about that at all. Some people just want to not lose money. I actually have had people come and say, I'm joining Maverick because I've lost too much money. I'm going to keep trading. I love trading so much, but if I could just break even, I would be so happy. That blows me away. I'm like, what? Like, that's your highest goal of motivation? I have some people that just said, hey, I'm just looking to manage my money a little bit better. I'm not going to be a super active trader. I'm going to do some longer term things, but I think I can add in an edge. It doesn't surprise me now. Every single person has different motivations. Some people, they get into a prop firm and they want to start making money now. Some people are doing the long game, like this guy, where he's like, I'll sit here for a year building up my capital levels so I can actually have a good stake to trade and make some good money. Everyone has different goals and nothing surprises me anymore.
So, all right, Rob, now that we've kind of talked about all of this, give everybody just a quick list of bullet points in terms of the things you have to really pay attention to before you apply and attempt a challenge for a prop firm, regardless of what type of prop firm it is.
Okay, great. I'm going to start with something we haven't talked about yet, and then I'll give the list. Confidence. So let's talk about confidence. As traders, a lot of times our confidence, I shouldn't say a lot of times, but especially in the beginning, your confidence is tied to your P&L or your equity curve. Now, I want you to imagine an equity curve of a profitable trader, but it has runs and falls, runs and falls, runs and pullbacks. And there's maybe even months where there's nothing, there's just flat movement, no profits. And there might even be a 3-month period where there's only losses. That's an equity curve of a trader. And you're going to be able to draw your equity curve for your whole life. If you start trading at 20 and you die when you're 90, and you made trades for the whole thing, you could literally see the equity curve of your life. Now, that equity curve, if we were to be able to put emotions over it, what emotions will you be feeling at those moments? And when we talk about confidence, your confidence is likely going to be the highest after one of your long runs, after one of the times where you see really good results with your trading system. Now, as a young trader, I only got more confident in that situation. Now, as an old trader, I get paranoid. Like, uh-oh, drawdown is coming. I know, Patrick, we've talked about this before. What do you do after you have a big, nice run?
I get ready to take it in the shorts.
Okay, so I wanted to talk about this phenomenon where our confidence is tied to our equity curve. And when you take a look at your equity curves, your highest confidence is probably at the moment right before drawdowns. And your lowest confidence levels are probably at the points after your longest drawdowns on the downside. So I don't want you to use confidence as the measure of, am I ready for a prop firm or not? Really, there is no great time. And I hear people say, I'm waiting for this market to change before I get back into trading. And I'm like, that's silly. That's silly. I've heard that before where, the market's been going down for a couple months and someone's like, I'm just waiting for the right market conditions. Or, hey, this market's gone up for 3 months in a row. I don't want to get in at the top. I'm going to wait for these market conditions. That's silly to think that you actually can call where we are in market cycles. It's just silly. So the time when you are ready for a prop challenge is when you are no longer making mistakes. That's it. That's it. And as far as time is ready, don't think about your confidence. Don't think about, hey, I'm on a real hot streak. And in fact, I think if you were to do this right, if you're a consistent trader, the best time for you to join a prop firm challenge is after a big drawdown. It's probably going to be statistically the best thing. I know it's kind of crazy to say that, and I think it's a bad way to make a decision, but I don't want you to be joining at the highs of your equity curve. Patrick, does that make sense to you?
It does, and you really can't time things like that, so you're right. Just go, and go with confidence. That's one of the things I can say because that's one of the things I did not do at all. I was extremely confident going in, but as soon as I got there, I became very intimidated and very overwhelmed, and it showed. And I say it, you guys have heard me say it all the time, I massively struggled. My first 6 months at the prop firm, almost to the point to where I had to drop out or I had to get that call. I just avoided it, but man, that first 4 to 6 months probably was really, really rough because I just had no confidence. I was super intimidated. I was worried what everybody was thinking about me, and I was just a mess. If I would have just approached it with the same confidence I had going in, those first 6 months would have never happened, and I would have been on my way.
Yeah. So there's no perfect timing as far as market conditions or anything. The perfect timing is when you are ready to trade perfectly and flawlessly and never deviate from your system. That's when you're ready. And don't worry about the market condition. Don't worry about the market cycles. It doesn't matter. Just get in. So once you have that down, then it's finding a challenge firm that has the rules to fit your system. And again, learn the rules, go back into your back testing and see, would your system have worked under these rules? If they don't, then you either need to change up some of your rules. We talked about like the drawdown. Okay, maybe at 1.5%, my drawdowns were a little bit too big, but at 1%, it would have been really easy to not break any of the rules. Make that change. Make that change or go find a firm that has, looser drawdown limits. Make sure you understand those rules. Make sure your system works on that. And then look at those rules and see, is there anything you can exploit? Anything that you can, I don't like the word exploit, but again, game the system. Is there something you can do? Can you make trades at certain points of the month to get yourself a little bit of an edge? Again, I'm on the other side of this equation where I really don't want people doing these kind of gimmicks, but you really need to do them because it's part of the whole process of being a trader. We are literally trying to game a system out there and trying to figure out how we're going to take money out of it. So again, understand the rules, make sure your system works in it, look for things that you can, I'll use the word exploit to give yourself an advantage and then be flawless. That's really my advice for you in this episode.
And I would echo all of those things, except for maybe the exploitation part. I think you can just trade your system and do it the right way and be fine, but I don't disagree with what Rob was saying there. I'm still kind of taken aback by it. But that has concluded this episode of the Trading Psychology Podcast. Thank you for joining us. Hope you learned a lot. Good luck in all of your prop trading endeavors, and Rob and I will see you in the next episode.
Goodbye, everybody.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, we always knew he was AI deep down, didn't we? It's Rob Reinhold.
That is true. I am artificially intelligent. That sounds like a negative. Yeah. I'm going to call someone. You're artificially intelligent. And see what they say. What do you think?
No, that is a very backhanded, slick little backhanded compliment. I kind of like that. Yeah, I might actually steal that one. But traders, you have not heard from us in a while, and it's because I was waiting for Rob to put this really great little thing together for everybody. As you guys probably know or have figured out, we are definitely reaching the end of the Trading Psychology Podcast. And but that's okay.
I'm learning about the War of 1812, and I heard that the English were really the aggressors. Is that true? And it literally will then talk to me and tell me exactly what the history was, and then I can ask it questions and get more information. I love the chat feature. So I want you to think about this. So you wake up, let's say you wake up in the morning and you start your trading day. You're going to start a thread with that prompt, and then it's going to say in the pre-trade interview, it's going to ask you questions. I actually asked it, what are some of the questions you are likely to ask in the pre-trade interview? So here are 5, and it actually broke it down into some things I wanted to know. Number 1 was emotional state and readiness. Now, Patrick, let's do a little back and forth here. Let's pretend that I'm the AI, you're the trader, and you are going to start your pre-trade interview on AI. Here's the cool thing. All you need to do is, after you put in the prompt, all you need to do is say into the microphone, start my pre-trade interview on this thread, and it will automatically start. And the first question it's going to ask, and again, this is what I asked it. For the first one, it says, what emotions are you feeling as you approach the session? Are you calm, anxious, confident, rushed, distracted? Tell me your emotional feelings right now.
Honestly, I'm a bit anxious. I'm a bit distracted.
And then it's going to go into probably some more detail, like what things in your life are distracting you at the moment.
I am concerned my wife is sleeping with my brother.
Well, I can't help you with that. I'm here for trading psychology. That's literally probably what it will say. But I just want you to see the back and forth that's likely to happen. And once you do this a couple days, it's going to ask you about, do you have any negative feelings about the trade you took yesterday that caused you a big loss? It's going to ask you things like that. You're going to think about it. You're going to be like, yeah, I actually couldn't sleep last night because of that, and it really bothered me. So it's going to ask you questions, again, on your emotional state and readiness. It's going to ask you about your mental clarity. Is your mind clear today? is anything outside of your trading pulling at your focus? It's going to check your biases. Are you feeling any urges, such as wanting to make up for something? Do you think the market's going to do something that maybe it isn't? Again, it's going to ask you these things, and you're just going to say, hey, you know what? I do think the market's going to fall today. And it's going to ask, well, why do you think that? Well, I read this article last night that talked about the incoming collapse of the Japanese bond market, and it's really got me thinking we're going down. All of a sudden, it's going to point out, hey, you've got this bias. What do the charts say? Right? Who knows what it will say, but it will take you from there. It's going to ask you about your plan. What is your intended plan today? What setups are you looking for? And is there anything you plan to avoid? Okay, I'm looking for setups today. I'm looking for high base setups, and I'm looking to avoid the yen because I think the yen's got some excess risk, and I'm going to plan to avoid it. And then it's going to ask you on your risk behavior. Do you anticipate any temptation to over position size, under position size, or deviate from your rules-based system based on how you feel right now? And you could say yes, no. Okay, that's going to take you probably 3 to 5 minutes. And if you have the chat feature, the voice feature on, this is just talking back and forth, and it's logging this. So that is your pre-trade interview. That's going to take 3 to 5 minutes, and you've gone through all the things that you should be going through in your head as a trader to make sure that you are mentally ready, making sure you're not carrying baggage in. Everything that we've literally talked about in the last almost 100 sessions, it's literally going to walk through and ask you if you're feeling any of these psychological problems that we've talked about. Patrick, one of the things you've always been very clear about is that your journal isn't just about the numbers. It's about how you feel at the moment and how you felt about each trade. Isn't this awesome that this is basically doing it for you and you're just talking?
In a way, yeah, because we spoke before about how on your journal, it's the comment section that really is the most important at the end of the day. And for me, if I put a comment there, it means that I likely messed something up, and this is the reason why. And so I can go back and I can look and see, okay, where were the comments for this month? Were there any? When's the last time I had one? So I'm not sure. I guess you'll have to tell me here. For me, I kind of like that format where I can just kind of scan and look and see if I have actual comments. So how is this an enhancement to something like that? Because I'm open-minded as far as something that's better than what I have. I just really like what I have.
Well, you're going to have to wait till the end of this podcast to find out, because at the end of this podcast, I'm going to talk about pulling up reports. It is logging everything you're telling it. And especially when we get to the post-trade interview. So again, you're going to do your pre-trade interview, then you're going to have your trading day. Again, I set this up for day trading, so you do your trading day. And when you're done with your trading day, the next step is you upload your trades. You literally upload the trades you took. Now, you can do this any certain way. You could actually just take a picture of your trades from your account, literally take a screenshot and paste it into ChatGPT like, here are my trades. And then you could ask it to, hey, take these trades and break down my win-loss for today. What's my profit factor for today? I am starting to really see this as a complete and total replacement of a journal. Just think about this. You can feed it the raw numbers. It's very easy to take the raw numbers. Like I said, I can just take a picture of my trades and throw it in there. Or if I use a trading journal, I could just put the numbers in there and then download the data from my trade journal and throw it into ChatGPT. Here's my trades. It has your trades. Now you're going to do your post-trading interview. So you do your pre-trade interview, you have your trading day, and then at the end, you upload your trades, and then you have a post-trade interview. Okay, let's go back to the prompt. So we said, you're my trading psychology coach, and then we said, give me a pre-trading interview. Ask me 3 to 5 questions. The next part of the prompt is trade upload and post-trading interview. After trading, I will first upload my trades. Review them before asking your questions. Then ask 3 to 5 questions based on the trades themselves. For example, What emotions were present during this entry or exit? Why did you increase the risk or decrease the risk on this trade? Which one of my trades was impulsive, avoided, or rushed, or which one did I hold too long? It's basically going to ask you questions about your trades. Now, this is where it's really cool. It is going to be logging your response to that trade. Patrick, in your trading journal, you put in your trade, okay, I bought dollar yen here, I sold it here, and then you've got a space in your spreadsheet that says, this is how I was thinking about this trade. And you go in there and you type out how you're thinking about that trade. AI is going to do that automatically. And I'm going to talk about getting into reporting here at the end, but you're going to ask for basically a trade journal with the comments you made about this trade and what the recommendations were that AI made for you, or something like that. We'll wait till we get into the reporting. So it's going to ask you specifically about your trades. You uploaded it. It's going to say, hey, this dollar yen seems like a weird trade. It's much bigger loss than you usually take. What happened? What was the thing? What happened? And then you literally will just talk and explain. Now, I don't know about you, Patrick, but I am not a write it down kind of guy. I hate writing. And I've said this before, whenever I give my wife like an anniversary card or a Mother's Day card, I type it out and print it and put it inside the card. I hate writing. I hate it. This to me is just, it's fresh. You're right there, post-trade interview. It logs it to the specific trade that you want it to, and then we'll talk about getting into reporting. So Patrick, do you think that could make your life a little easier?
I don't know about easier because I think the way I have it is easy, but I would say it could make my journal a lot better because with a lot of the trades I do make, I'm feeling emotions at the time. I have biases. I'm on a good streak or a bad streak or just a streak where I'm not getting any volume, something like that. And as much as I sit there and say I don't care about the trades I make, which again, we've spoken before, that's a great place to be. I still have things going through my head when I put this stuff in. I don't know why. Maybe it's just because I'm playing a little game with myself. I don't know. But it would be really interesting to see this type of output for every trade I make. It wouldn't simplify anything, quite the opposite. But I do think it could really enhance my journal. And if you're not somebody who is already trading at a pro level consistently, this might be exactly what you need because it is very likely, if it works the way I think it's going to work, to find certain blind spots that you may not be noticing in your own trading psychology. This could be happening to me too, for all I know. Or even in the past when I had more comments in the comments section because I was making more mistakes. There could have been other mistakes I was making on other trades too, but I just wasn't compelled to write anything down because it wasn't like just it wasn't a fumble on my end. Is this making any sense, Rob? Like, I feel like the sheer fact that it can uncover blind spots that every one of us might have is worth the price of admission here. And that price is free, by the way.
Absolutely. When you were talking, I was thinking, when you put that in your journal, in that line, you're putting in what you think and what you believe. And if there's anything that we've talked about in this trading psychology podcast, is that we have tons of blind spots. We have tons of blind spots. So yes, you're doing the best you can do to be self-aware and to think about what you did wrong, but we all have blind sites. This is, imagine Patrick, at the end of every trading session, you give me your journal and I grill you on each trade, exactly why you did what you did. And I love to argue. We've had plenty of great arguments over the years. Just think if we argued over every single trade about why you did it. Now, look, I'm not saying use chat to argue with you, but that's the kind of feedback, is that you're getting someone who's saying, no, I actually think that you're not looking at this the right way. I think you just hit the nail on the head. This is great because you actually have a trading psychologist on call to tell you, No, I've noticed this pattern over your last 3 weeks, and I think this is what's likely happening. You may not be able to be self-aware enough to see it at that point, but you might be like, oh my gosh, yeah, it's right. I totally have been doing that. So I think that's where this really helps is you have someone who's challenging you on all those questions instead of you just writing down what you think at the moment.
Okay, so question. You said there's the pre-interview and the post-interview. When exactly does the pre-interview happen? I would imagine the post-interview happens after the trading day or after whatever session you're doing. But do they happen kind of one right after the other, or do you do the pre-interview at the start of the trading session? Time-wise, what are we talking about here?
Yes, you'll do the pre-trading interview basically when you sit down behind your system. Say, hey, you know what, let me take a couple minutes and do this pre-trading interview. It's going to take, hey, how you feeling? What do you think about yesterday's trading session? Are you have any concerns about today? And then you're going to trade. And then you're going to upload your trades. At the end of the day, again, I set this whole thing up for day trading. So if it's like once a week, a lot of our traders at Maverick Trading do options trading. So it's really on a weekly basis. So maybe you do the pre-trade interview on Monday morning or Sunday night, and then you do the wrap-up on Friday, where you upload all your trades and you have your interview.
Okay, cool. And does it matter if I'm a stock trader or an options trader or a Forex trader or a crypto trader, or is it pretty universal all across the board? Or is there going to be one little place to where I should specify what vehicles I'm trading for the day?
That's a great question. Trading psychology is not about what you're trading. It's not about futures. It's not about crypto. Look, they all have little different personalities, but as I've said before, trading is trading. You buy, you sell. If you sell for higher than you bought it at, it's a win. If you want to go short, you sell first. If you buy it for lower than you sold it for, you win. I mean, it's really the same game. And again, your prompt said, don't give me any strategy advice. I only want behavioral insights. So it's only going to be looking at your behavior. It's only going to be looking into the common problems that we see in trading psychology, revenge trading, overtrading, undertrading, overposition sizing, all that stuff we've talked about. That's what it's really looking for. So it does not matter. And again, it does not matter time frame either. If you are on the weekly chart, you might have a pre-trade interview at the first of the month and a post-trade interview at the end of the month. It really doesn't matter. It just is going to be there to fit you.
Okay, so that's a good question. I'm glad you said that, because one of my complaints about a lot of LMMs right now is we'll be talking about something, and then if I log off or if there's a browser update or something like that, these LMMs will completely forget what we were talking about, and then I have to remind them again. So you said start the interview at the beginning of the month and then do the exit interview at the end. How does that work exactly? Like, am I going to have to not use ChatGPT, for example, for an entire month just so it remembers and has that information fresh? Help me understand that a bit.
Thanks for bringing that up, because that was a technical question I was supposed to cover at first. The way that all these AIs are set up is they are topic-based. And, I use ChatGPT. I know other people use Grok or whatever. There's going to be a list of previous chats that you've had. So you're going to have one that says, my trading psychology coach. You could even tell it, I want you to name it this, and it will be in your list. So you're going to go find that. You've got to find that thread and click on that thread, and now you're inside that trading psychology coach thread. Now it knows exactly what you said the last time. Yeah, don't just go on and start a whole new thread. Yeah, that's really going to mess it up. I'm really glad you brought this up. You need to go to your trading psychology coach thread, click on that, get inside of that, and then you simply are going to start where you left off.
Okay, another question for you. I'm thinking of all these questions as you're talking, which is good, I think, because listeners at home are probably going to have these same type of questions. And if you give me questions in the YouTube comment section, I will not be able to answer them myself. And as busy as Rob is, don't expect him to be able to come in there and answer them either. So let's get as many of these out of the way as we can. One question I was thinking about is you said, this really kind of breaks down a lot of the things that we do wrong in our trading sessions. What if I just have an amazing trading session and there's really nothing to critique, or maybe there is? What happens there?
This is all your self-perception. And that's what our trading psychology podcast has been about since the beginning, is that we all think we're using the right part of our brain. We all think we're using logic and reason. But the reason we got out of a trade early is because 2 months ago, we got burned in the same situation. Now, you're not thinking about that when you're getting out early. You actually think you're making a logical, rational decision. The point is that we want to make sure that we're making the most logical, rational decision. So look, if you have a great day, I've seen a lot of traders have great days and their trades were shit. It doesn't mean there was a good trading day. So I absolutely think good trading day, bad trading day, it's absolutely important to log everything, because what you think may not be the truth. And that's what this is all about, is a psychiatrist there to tell you, you're the problem. It's not your ex, it's you. That's what this is all about.
Okay. Now you were talking earlier about being able to upload all this information into a file. Is like a CSV file, or how does that work? How do I need to tell it exactly what to do? Is that part of the prompt?
Great question. So let's talk about reporting. So to start your pre-trade interview, literally just click on the thread, and I highly recommend you use the voice chat feature and just say, start my pre-trade interview. It'll start it. And then when it's done, it's logged. And then you're going to upload your trades. Now, how you upload your trades, it could be done a ton of different ways. Like I said, you could take a picture of the trades from your trading account and simply upload that picture. Now it's got all the trades you made. You could take the trades you log into a regular journal and download it and upload them there. You can even say, at 9:17 a.m., I took a long position on dollar yen for 55,000. And I sold that at 12:47 for whatever the price is. And again, you could actually literally log your trades by your voice. You could tell it, log this trade. Now, what it's doing behind the scenes, it's basically putting everything into a journal, but you just don't see it. At the end of this all, it's your reports that are really going to be important. Now, here's what I love about this. And I've said, I really think that this can replace journals in general. Because you can ask it stuff like, hey, you know what? I just want you to give me the hard numbers on my journal. Over the past month, what has my win-loss rate been? What's my profit factor? What's my Sharpe ratio? And what's my largest drawdown? It can give you all that information. It can just give that to you. Or you can say, hey, I really want my journal in a Excel spreadsheet. Can you give me my trades over the last month in an Excel spreadsheet with, the time I entered? Again, you can tell it what you want, and I want you to log my psychology questions on that trade. It will produce that for you, and you literally will be able to download an Excel file that has broken everything down exactly how other journals do. And you can also say, hey, you know what? Give me my equity curve over the last month. It's going to create a graph for you of what your equity curve looks like. You're going to ask it show me my best trade. It's going to show you the best trade. This is really cool because you have basically, just by interacting with AI and giving it your trades and then giving it your feelings and your thoughts, everything is logged in a database to where you can just simply go grab the information. You just have to ask for it. So I just talked about using it as just getting your journal numbers. You could absolutely use this just to get your journal numbers. Or you can say, give me a monthly psychological performance report. Now, these are all things that it recommended that I ask for. So this is the great thing about AI. A lot of times if you don't know what to ask it. What should I ask you? What are some of the reports you can provide for me over the past month? It's going to list a whole bunch. And then you might get an idea of, hey, I really want you to take this report, but then add this. Can you do that for me? Absolutely. Here it is. So again, some of the recommendations that said a monthly psychological performance report, basically going to tell you, okay, this is what we saw. These are the things we think are bad. You can ask for a behavioral pattern report, and it's going to say, hey, it looks like over the past month we've identified 3 trades that are potentially revenge trading. This is something that you may or may not have noticed, but this is something you want to look forward to in the future. You can ask for a monthly improvement plan. Okay, what can I improve on next month from some of my mistakes I made this past month? Okay, we've noticed that these are some problem areas in your trading. We've noticed that after big up days, you typically have big down days because, again, we get overconfident. Or, hey, we noticed that after big up days, you make twice as many trades the next day. Oh my gosh, I didn't even notice I did that. So now this month, when you go have a big day, hopefully you think, oh crap, I'm not going to repeat the cycle I did last month where I got all excited and blew it all the next day because I was so amped up. I'm going to calm it down. And again, ask what reports it can provide and let it go. As I said, we're all going to start at the same place, but where we go in the end is going to be wildly different. And I just hope you can see the possibilities of how to use this in your trading life. It's literally going to take 3 minutes for your pre-trade interview and maybe 5 minutes in your post-trade interview, because I think uploading your trades are going to take a couple minutes, and then do the interview. You're done. Everything's logged, and you can have that for any report you want at any time, over a year, over a quarter, over a day, over the last 17 days and 12 minutes. It's there for you if you log it. All right, as you can tell, Patrick, I'm super excited about this. It's something that I'm actively developing for all of our Maverick traders. I'm going through a whole month basically doing this to where we get this data, and then we can actually ask for all these reports and see what it does. So I'm super excited about this. Hopefully this helps everyone listening get started in this.
Okay. So I still have questions. Is that okay?
Of course.
Okay. Because when you mentioned the dollar yen, it made me think about this. Now, maybe I'm asking too much from the prompt, but I can tell you just not emotions so much, but just some things that I'm thinking about. As most of you know, I've been trading the weekly chart all through 2025. And in all candor, I am in a dollar yen long as we speak. But if you go look at a chart right now, it's retracing to the downside. Now, can I go to this and mention this trade and where I am in it and how much I've already made and where my stop loss is, and then say, kind of what you said, say, okay, I'm in this trade and it's going well and my system is not telling me to exit, but I am having concerns. It's getting close to the end of the year, and what if JGBs blow up, and I have all these concerns about the overall direction of the dollar yen, some to the upside, some to the downside. And I tell ChatGPT these issues based on the prompts I've already given it in the past. Can it help me make more sense of those thoughts? Can it give me advice on what my head should be thinking about, what directions I should be looking, or is it just not quite that type of prompt, or just maybe not that advanced yet?
It absolutely can, and that's the greatest thing about it. Trading is a lonely game. Even when I traded in the Maverick Trading office where we were side by side with other traders, it was a lonely game. You were in a trade by yourself, and maybe someone else was in it with you that you could talk about the trade with. But for the most part, everyone traded their own book. So even though I was sitting with a bunch of traders, I couldn't really talk to someone about my trade. You finally have someone to talk to. And I highly recommend to use, again, the voice feature, where maybe part of your pre-trade interview, you instructed to check in on any existing positions I have and how I'm feeling about them. You would actually have that as part of your pre-trade checklist. And maybe, Patrick, you do it on a weekly time frame because you're on the weekly chart. So maybe on Sunday night you say, hey, start my pre-trade interview. And you've already instructed it to ask about existing positions that you are in and how you are feeling about them. So you can actually prompt AI to be proactive to where you don't even have to come to AI and say, hey, I've got this all these thoughts. Please help me you manage them. You can actually program it when you have your pre-trade meeting. It asks you, hey, Patrick, you're in the dollar yen trade. You've got a nice gain here. How are you thinking about this? You can program chat or any LLM to do exactly that. You're no longer completely alone. Look, I know it's a complete fake type of friend and a fake type of psychologist, but sometimes, when you are able to talk about things out loud, you just feel better about it. It's exactly that. You can talk out loud with someone and they definitely won't judge you. In fact, ChatGPT is like a little bitch. It will fall all over you unless you tell it to not be a yes man.
Oh yeah, Gemini is the worst. I have to tell them do not patronize, and they even forget over time. Like they're giving me compliments every time I ask a basic question. But yeah, I get that part. So okay, now that I guess we've really touched on the majority of the features. Towards the end, if you want to mention some features we maybe hadn't spoken about yet, that's fine. But at least we've gotten this far. Now I just really want to know, since I and the viewers have gotten a better idea of what this is and what it does, what is the procedure here? Because you give these prompts, but you also say to use the voice feature. Should we be cutting and pasting these prompts first and then using the voice feature for other things afterwards? What's the best way to approach this in your mind?
Great question. Copy pasting the initial prompt is definitely going to be faster. But you could actually go to the prompt on your website. And if you're using your phone to do this, which I like to use my phone a lot for ChatGPT, go on my phone, hit the voice button, and literally read the prompt. Hey, here's the prompt. And I literally read the prompt that's on your website to my voice feature. It's just like copy pasting it. Look, copy pasting is way faster, and you don't have to use the voice feature. You can do all of it typing if you want. The reason I like the voice feature, because I think it's easier to express yourself, and this is me talking, and maybe this is not how everyone else works. It's much easier for me to express myself in speech than in type. I just feel like I'm able to get my feelings out better than typing. I feel typing is very rigid. So that's why I highly recommend the voice feature for everyone. But you can use any type or voice. It doesn't matter.
Okay, cool. Is there anything else about this you want to mention before we sign off?
No. Like I said, I just hope everyone sees the possibilities of this. And if you are struggling with trading psychology issues, this is just a really great way to, first of all, make sure that you're being self-aware. Everything we've done in this entire podcast has been about being self-aware to when you're making a mistake that you don't think you're making. Like, oh, wait, I realize I'm making mistakes. I have a bias. I have, all this stuff. This is a way for you to have someone looking over your shoulder. And if you ever thought to yourself, man, if I just could just have a trading partner, if I could just have someone who, looked over my shoulder. One of the episodes we did, Patrick, was about accountability. Having someone who's accountable to you. And I talked about having a father, an uncle, a spouse, a friend, a neighbor, whatever. No, this is the tool. You can get accountability. You just have to tell it, I need you to hold my feet to the fire. I need you to be brutally honest with me. What am I doing wrong? Here's my pre-trade interview. Here's my trades. Here's my post-trade interview. And if you tell it to rip you apart, it will rip you apart. If that's what you want and if that's what you need. That's the beautiful thing about it, is that you get to create this relationship with this trading psychologist based on what you need and based on your personality. Where you end up is going to be wildly different than everyone else. But enjoy the journey and use it. It's a great tool.
One final question. So there's AI naysayers out there still, and for good reason. These machines aren't where they are going to be years from now. We're almost still in like the 1.0, 1.5 phase of all of this. The hallucination rates are still quite high on a lot of these. Should we just take everything this thing says back to us as the gospel truth, or how seriously should we take this advice? I would imagine pretty seriously, because again, it's there to discover blind spots that we don't obviously notice ourselves. But at what point should we not put 100% faith in what this thing tells us? Is there ever a time, or is it really pretty close to where it needs to be already?
Ooh, this is a very deep question. And it reminds me back to the podcast where I said, if I got in a time machine and went back to 25-year-old me, and I told them, hey, I'm me from the future, and I believed them at 25, oh, this is me from the future. And I told 25-year-old Rob, here's all the things you need to do. 25-year-old Rob would have told me to shut up, old man. He wouldn't have listened to me. So there's that aspect of we're going to be given advice, and sometimes the advice isn't the right advice, and it is up to us to determine, is that the best advice for us? But instead of being combative, be introspective and reflexive. And that's, again, 25-year-old Rob wasn't able to be introspective. I think this is a really non-threatening way for people to basically get a computer to tell them, hey, you're doing it wrong. And then you'd be like, let me think about it. That's much easier to react to than like a coach saying you're doing it wrong, because that gets our reflexes up. That gets our hackles up. Like we need to defend ourselves and why we did what we did. I just think it's a really nice thing. But no, we shouldn't just carte blanche be like, AI's right, I'm wrong. No, that's definitely not what this is about. This is about a journey of becoming better. And you don't become better in a day. You don't become better in a month. You become better over your life. And at the end of your life, you're still not great. You're still not where you could be. This is just a process, and just use this tool as that process. But yeah, whatever it says, just think about it. Be introspective and see, okay, maybe it's right, maybe it's wrong, but I'm going to be thinking about it.
Yeah, the hope is that you find those eureka moments to where it does find something that you never really considered in the past. And because a lot of times you're not going to always learn that by listening to these podcast episodes, by the way. A lot of times you do, but we're not going to be able to uncover 100% of those blind spots like we spoke about before. So again, Rob has spent a lot of time putting this together for you. The very first link in the show notes will say, find the prompts here, and it will whisk you away to a page on nononsenseforex.com. On that page will be the YouTube video of this very interview. So somebody coming there for the first time actually knows what this is and what to do with it. But then below that, you will find the prompt itself, and copy, paste, have fun. And we really, really hope this helps you. I'm sure it's bound to at some point if you stick with it, just like anything else. So, Rob, do you have anything to say before we sign off today?
I have one thing to say. The reporting is the gem in this. That's the gem. So just like you're logging a journal, okay, what's the trade? Here's the trade. Here's my position size. Here's my entry point. Here's my exit point. Here's this. And then, okay, here's what I thought about it. And then you go to the next line. Okay, here's this. That's great, whatever. But the reason you're doing that is so you have a subset of data that you can actually analyze how well you're doing. It's why I talked about trading in blocks of 25. Like, don't even look at individual trades. I don't care about individual trades. How is your block of 25 trades? This is a great way to just log your life and log your thoughts, your trades, and everything. But then at the end, I'm telling you, I can't even give you all of the possibilities that this could do. You could ask for any report you want. And I don't know if it can give it to you, but you could say, hey, you know what? I want you to, identify all the trades I made on Tuesday. Is there one day of the week that I do much better than other days? And it might say, hey, you do better on Mondays and you're really bad on Fridays. And so then you might be able to say, oh my gosh, I didn't recognize that. Why don't I just not trade Friday? I mean, the possibilities of this are endless, but you've got to log the data so that when you get to the reporting, you have your subset and then you can ask it whatever you want. I think this is just a game changer, and I really hope that you use it.
I do too. And just like everything has always been on this channel, it is 100% free for you to use, explore, and hopefully enhance your overall trading. So, on behalf of Rob Reinhold and myself, thank you for joining us here on the Trading Psychology Podcast. We will both see you in the next episode.
Goodbye, artificially intelligent people.
This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, he still owes me money from that dice game back in 21. It's Rob Reinhold.
Well, that's because you cheated. I'm never paying you at all for that.
Oh, you know me too well. All right. So this episode, traders, is all about debt. Now, you might think to yourself, well, how does this fit into something like the Trading Psychology Podcast? Well, we're going to get there, but this is something that probably affects every single one of you, but in different ways. And so Rob and I are going to try really hard to attack all three of those ways. But as we do first every episode, Robert, we started doing this recently. We need to define terms just to make sure that me, you, and everybody listening are all on the same page. So on our handy little outline here, we have written three different types of debt. We have, the first one is credit card debt. Now, I always pay my credit cards on time. I didn't always, and things really got out of hand. And so I've been on both sides of this equation. Now, I know in the United States, Trump just put out, and this is not official yet, from what I understand, he's trying to cap the amount of interest on credit cards, assuming you don't pay them on time, to 10%. I don't know how well this is going to fly. I don't know what this is going to do to the banks, but to me, it's like, well, if you at least pay the minimum payment on time, this isn't really a big problem. What say you?
Yeah, this is never going to happen. First of all, there is no mechanism for the President of the United States to dictate to private companies what they can do with their business. So I think right there, it's just not ever going to happen. But let's say it did happen. All that's going to happen is that credit's going to get a lot less available, and hardly anyone's going to be able to get a credit card. And that's going to cause real problems because a big bulk of the U.S. spending is done by people holding revolving debt on credit cards. It's not going to be good for the economy. I know it's one of these things that sounds good and it sounds wonderful, but when you really get into it, and I read a couple of articles about this, it just have how bad of an idea it actually is. It will tighten up credit. It will make it to where the people that need credit the most, they're not going to be able to go to a credit card for it. So where do they have to go? Loan sharks and payday lenders that come out at like 30% a month. So it's a bad idea, in my opinion.
Yeah, something like this, I'm almost positive would have to go through Congress anyway. But the point remains is that credit card debt in the U.S. and I think worldwide right now is at all-time highs. People always talk about how prosperous we are because the airports are always full. Turns out, I would be willing to bet that most of those people are just like, F it. I can't pay off anything, so we need to go on a vacation, so we're just going to use the credit card. And if things get higher, who cares? What's the difference between being $25,000 in credit card debt compared to $28,000? Let's just throw caution to the wind. I feel like that's where people are at right now. And well, in my opinion, on this aside, this really is a problem because unless there's some kind of debt forgiveness that comes up anytime soon, these people are going to have to pay the piper at some point, right?
Well, that is what happens with debt. And as we get into this episode, a recurring theme is going to be that debt is simply an accelerant of your financial picture. It's just an accelerant, meaning if you use it and it works out, it's great. If you use it and it doesn't work out, it's terrible. So yeah, it's really just an accelerant. And so when everyone has a job, when everyone has an income, it's easy to pay off those bills. And it's easy to carry those credit card interest rates and keep paying the minimum because, hey, you've still got your job. The problem is when the economy slows down and you no longer have your job, then you are in real trouble. So it's just an accelerant. And I want everyone to remember that as we go through this entire episode, is that debt isn't positive or negative. It's just an accelerant of the underlying condition.
All right, but we're 5 minutes in and we're still defining terms here, and that is my fault. I need to move on here. So you have credit card debt, which may or may not affect you, regardless if you have a lot or a little. But even if your credit card debt is under control and your payments are under control, the majority of people out there, especially in the West, still have loans on their home or their car or a business loan. So even if you have one side of the debt under control, there's always going to be that lingering debt on the other side. So I just want to bring that up while we're defining terms here. And then Rob, you had added one below talking about, some, especially this as this pertains to some of our listeners, you might have margin debt and you had margin/prop firms. What exactly did you mean when you wrote that down?
Anytime we talk about debt, it's when you're borrowing someone else's money. And whenever you're borrowing someone else's money, there's a cost. There's a cost. And I love to write this as an owner of a prop firm because I love just to really talk frankly. And when you do join up with a prop firm, there are costs to that capital. It would be wonderful if we could all just get access to any capital we wanted and there's no cost, but that is not reality. It's like, hey, let's get a credit card with no responsibility. You can never, get in trouble by ever using it, and there's no interest. Well, that doesn't exist. So when we use things like margin through our brokers, and our brokers allow us to go on margin, that's given freely. That's given very easily, as long as you qualify for a margin account, which I don't know anyone who's ever been denied a margin account that didn't have the minimum balance. That's just given freely. And it always has a cost. It always has a cost. Again, with margin debt, there is, margin interest that's going to be eating away at your returns. If you're with a prop firm, there's going to be monthly fees. There's going to be other things where, again, it's eating away. So we really have to really think about, is this debt positive or negative for me? And that's really how we want you to take a look at everything in this episode.
Well, I'll push back a little bit on the margin side as far as a Forex trader goes, because with Forex, if you're not trading with margin, it's not even really worth trading unless you're just sitting there with $500,000 in your account. So your average person, especially somebody starting up with a prop firm, they're going to need that margin. So isn't that just kind of an accepted hindrance that you just have to deal with?
I think an accepted expense. Let's just take a look at something like buying a house. Or let's not even go buy the house. Let's go to your first car that you need to buy. Most people, when they go buy their first car, they don't have enough money to buy a decent car. And so they're going to buy that car and it's going to come with debt. There's going to be debt saddled to it, and that debt's going to have an interest rate and there's going to be a cost to it. But do you need that car to get to work? Do you need that car to get to places to where you can then make way more money than that debt costs you? The answer is yes. So I think you need to take a look at debt as an expense. It's simply an expense of doing either business or doing things in your life. And the big question is it good or bad? What is it doing for you?
Okay. So now that we're finally out of the defined terms portion of the podcast, I wanted to move on to the thing that I say a lot on my other podcast. And that is when I talk about compound interest. And I wish more people understood this. Your average person has no idea. But Einstein himself even said it. Compound interest is the greatest wonder of the world. What he left out is when it works in your favor. When it's working against you, which it does in the case of debt, it can be absolutely debilitating. Imagine if you had the biggest wonder of the world, but not on the right side of the equation, but on the left side of the equation, and you were constantly fighting this every day of your life, not including the fact that your fiat currency just never buys the same thing it bought the day before. I mean, that's really, really tough. And I want to illustrate that before we go forward, because I think you and I both might have different opinions on how to handle debt. But this to me, I think if more people really understood this, there would be a lot less people in debt, or at least that would be not as an alluring proposition for somebody right off the bat if they understood this math.
You're exactly right. If you really understood the math, you would really work on getting to the right side of the equation. And in this podcast, we have talked so many times, and I know it, me especially, and I've tried to be really clear as, look, the game of money is really simple. Everyone needs to go out and work, unless you were born wealthy, which not a lot of us were. So the rest of us, we need to go out and work. You have to take some of that money and buy assets that go up in value. Then all of a sudden, you're getting the interest working in your favor. You're getting 8% a year here, 12% a year here, 15% a year here, and it's working for you. And at first, it seems small, but I agree, Patrick, when you said, I wish everyone understood this. I remember learning about this in school and putting it in the calculator and being like, oh, that's pretty cool. You don't really understand it until you've lived it. Like when you make 10% a year on $10,000, that's $1,000. That's cool. That's great. That's really cool. When you make 10% on 10 million, that's really cool. That's the life-changing money. It's the same 10%, but you've got to get up to that big stack of money for compounding interest to really change your life. So everyone's got to start at zero. Everyone's going to start off at the bottom, but everything you can throw into assets, eventually when you get to 40, 50, 60 years old and you've got that big stack and you're earning 15% a year on it, oh, it's life-changing. But on the other hand, if you're working and then you're overspending and then now you've got debt payments, so you're not even keeping up with your income that you're bringing in, but now you're falling further and further and further behind because you have these extra expenses. It's such a debilitating and destructive process.
And what Rob says is 100% correct. And because it's correct, if you're 22 years old listening to this podcast right now, for example, my advice to you right straight away would be, look, I know everybody says, oh, your 20s are where you're supposed to go broke and make a bunch of mistakes, ha ha ha. Well, seeing as how it sucks so bad when you're in debt and you're young, and it becomes completely amazing when you're older and you've got things figured out, why not do what you can to get to that point as soon as possible instead of just pissing away your entire 20s? What do you say to that argument, Rob?
If you talk to any older person who is not where they want to be financially, and you ask them, do you have any advice for me in my 20s? I already know what advice they're going to give you. I wish I would have started saving earlier in my life. That's the only advice I'll give you. I promise you. So take that advice. Just start. Just start the process. Start the cycle. I know it starts small. I know it starts at the $100 here, $100 there. It grows over your life.
All right. So there's other follow-up questions we can add to that, but I want to get to those just a bit later. Now, I know we're bouncing it back and forth a little bit here, but when it comes to the loan debt we talked about, like home, car, business, things that affect most Americans, Europeans. I know like in the Middle East, it's not as much of a thing because of the usury laws they have in their religions and things like that. But for most people listening to this podcast, getting a loan for something that's normally going to be out of your price range up front, like a home, like a car, for people who start a business, I personally don't have any debt. That's my one biggest superpower. And I made sure I did that as early as I possibly could. And we'll talk about that in a moment. But for people who live in the normal world, like Rob Reinhold, like what are the percentage rates on things like a home loan and a car loan nowadays? What are most people contending with right now? I kind of want to get an idea of what we're up against here.
I think right now the average for a car loan is like 8% a year. The average mortgage, 6% a year. Average credit card is 29%. So these are all really, expensive expenses. Now, look, I know not everyone can just go pay cash for a car, pay cash for a house. Your goal is to someday be able to do that. I have not had a car loan in 15, 20 years, and it's great. It's fantastic. And we drive our cars for a decade or more. And you know what? It's such a smaller expense than having to carry that. But in my early years, I absolutely had that debt, and it was just something that was cost of doing business. But your goal is to have no debt. That's absolutely a goal you should have.
Well, and one of the biggest reasons for that is, this is a psychology podcast, is just the psychological strain it can put on every single day of your life. And I know this because I've been there myself. I kind of want to talk about, it's obvious there's going to be psychological strain there, Rob, but what are some of the things that are more possible now? Like, what are some things that have a greater probability of happening if you have, just crippling amounts of debt affecting you every single day of your life? What is somebody like that more likely to do? What are they more likely to think when it comes time to making decisions? And they shouldn't really be thinking this way. A normal person wouldn't think the way a heavily indebted person would, right? Like, that's kind of what I want to get at here, because I feel like the majority of people listening to this right now do carry some debt. And as we often do on this show, we identify the problems first. We identify the symptoms so we can be aware of them, because if we're not aware of them, we can't fix them. So this is my roundabout way of asking you, Rob, somebody who's in debt, what might they do that a person with zero debt would generally not do?
You already gave one example where you said that someone was, $25,000 into debt, and they say, well, why don't we go on that $3,000 vacation? Anyway, what's the difference between $25,000 of debt and $28,000 of debt? And so what happens is it puts you in this mindset that you'll never get out of it. So why try? Because you look at it, it seems it's like such a big hill to climb. And so then you never start. We've all been to a point in life where we have a big challenge in front of us, and we know it's going to be tough, and we know it's going to be a fight, and we know it's going to be a slog. And because of that, you delay actually taking action because it's just so overwhelming psychologically. And so I think what's going to happen is someone that is in debt, they're going to delay getting out of debt because they know how painful it's going to be. They know how uncomfortable it's going to be. Hopefully everyone knows about a guy named Dave Ramsey. I'm not saying I'm a huge Dave Ramsey fan, but anyone that I meet that talks to me about debt and wants to get out of debt, I say, go check out Dave Ramsey. Go do everything Dave Ramsey says. Do everything he says. And then after you get out of debt, then maybe don't do exactly what he says. He's not the greatest in investing advice, even though it's solid advice. It's solid advice. He's not telling you to do anything stupid, but you can do things better. But everything he says about getting out of debt is great. And every Friday, at least on his radio show, he has an episode where people who did it call up, tell the world their story, tell the world how they got out of debt, how much debt they got out of, and then they all yell freedom. It's awesome. I love that moment so much. And so I would say to anyone out there who is in debt and you're unhappy about it and you want to get out of it, which should be all of you if you're in debt, then take action. Do something. And I promise you, in a month from today, you'll feel a little bit better about your situation. And I promise you that a year from today, you're actually going to be pretty damn proud of what you've done. Start. The psychology behind this is that you get so far behind the eight ball that you say, why try? Or it seems like it's such a big deal that you delay the process. Just start now.
Yeah, and before I know, Rob, you get a little ahead of me as far as the solutions portion here. I'm like, no, there's still some problems here that I want to really hammer home, because I can say this for a couple different ways. One is kind of the way you just talked about, to where you're like, you just have this like existential dread to where you're like, well, what's it matter? I'm in mountains of debt, or I'm in mountains and oceans of debt. There's no difference. That's a really depressing way to live, almost, because that just ensures that the problem is never, ever going to get better. You will get to a point to where you just absolutely will never be able to pay off that debt, ever, because not only is it a high amount, but it also becomes a high percentage too. And again, you have that compound interest working against you. That is just the worst feeling. Now, I was in this situation myself, not because I had that level of irresponsibility, but because there just came a point in time where I was so indebted And I had that compound interest working against me every single month to where I just simply couldn't pay my mortgage sometimes. So I would have to take out more credit card debt just to pay the mortgage. And this is something a lot of people do. They take out some debt over here just to pay for this other thing over there. And that is just a creditor's wet dream. I mean, they love when people do that because in their minds, it's like, hey, it's not my problem. It's not me being irresponsible. I'm providing a service they need. But in a way, it's a little bit predatory because they're going to be collecting even more percentage points off of somebody who's already past the point of no return. And I lived in the most fun city in the world in Las Vegas for a long time. And for a lot of that time, I really didn't want to go out and do anything because it just killed me to get myself deeper and deeper in debt. Like, what would my life be if I was just in this huge hole that I could never come out of for the rest of my life? That type of strain, how are you ever going to be successful with that hanging over your head? Now, I got a bit lucky because I was able to short sell my house. That was kind of a get out of jail free card. That's something the United States government did because they realized that a lot of people were giving predatory loans, which is one of the loans I had, and I was able to get out of it. I still don't know today. I think based on the money I made, since that time, I would have been able to get out of it. But man, if it wasn't for things like that, even somebody who's been really responsible and who takes risks and who has successful businesses like me, that would have been really, really hard to get out of. Before we get to the solutions portion, I just want to kind of deeper explore. I just want to more deeply explore, what allowing this to get out of hand, whether it's your fault or just simply not your fault, what that can do to a person, how that affects every single decision they make going forward.
When you think about debt, it's almost impossible in life to get ahead without debt. Like, I don't think anyone can be born, you leave your house at 18 and you never take out any debt for anything. I don't see how you ever get ahead. I mean, I think debt is an essential tool to get ahead in life. But there's definitely risks about it, which we've talked about and we'll keep talking about. But there's so many things that are wonderful with debt, like a school loan, like going to college. All the studies show that people that go to college end up making way more than their college cost them. Now, look, I know that a lot of these studies were done 20 years ago, and I know the math is different. I understand that. But when you look at studies look at everything. Now, someone who went to school and got a $200,000 loan for an art degree, yeah, they're probably not going to make that money back. But for the most part, something like a student loan is actually a really wonderful investment, and that debt is going to pay off huge. So as we talk about debt, we're going to spend a lot of time on the negatives of debt, but I really want to spend some time on the positives of debt because I don't think the average person can ever get ahead in life without taking on debt, but you have to use it correctly. I don't see how anyone will ever buy a house without taking on debt. So again, it's all about using it correctly. And as I said, it's an accelerant. If you're doing the right things and doing good things and being responsible and being thoughtful, debt can actually be very positive in your growth. If you're doing destructive things, buying depreciating assets and buying crap that you don't need, debt can be very destructive. So I don't want to do this big scary thing about debt. Debt is wonderful if you're doing the right things.
And I wonder too, so this podcast also goes to YouTube. Any of my Middle Eastern or my Muslim listeners, if you want to go into the comment section and talk about what the debt situation is for most people there, because to my knowledge, it's very, very different because interest on debt is considered usury in a lot of Muslim cultures. So talk to us about if it exists or how essential it actually is in that culture. I would really like to know, because that's a total difference in culture right there, to where we think that it's absolutely necessary for life, to where you have other cultures that almost just don't do it at all. Do you have anything to say to that, Rob?
I'm really hesitant to say anything on something I don't know a whole lot about, but I do know that they have just a different way of borrowing money over there. So if you wanted to borrow $100,000 and then pay $10,000 of interest, you can't do that. But what you can do is borrow $110,000 and the person gives you $100,000. So I know there's ways to get loans without interest, but look, I should just shut my mouth now. I don't really know what I'm talking about.
Moving over to the ways debt can help you. Now, we want to be very, very careful here when we talk about this. There is a time and a place, and I don't know for your average person if there really is a time and a place to take on debt. But again, you guys have to understand, I'm very anti-debt, to where Rob actually sees the sunny side of it. In a lot of ways, I just don't even walk that path. So Rob, I'm going to turn most of this over to you because this is something you know more about. But there are ways, apart from just getting a loan for college or something like that, which we can have that debate whether in 2026 that's a good idea almost ever. Maybe there's a few, but there are other ways out there, and a lot of people talk about creative ways to leverage and arbitrage debt in your favor. Now, most of these people already have lots and lots and lots of money. I've noticed this with people who talk about this little strategy. But is there a way for the average person to use debt to their advantage in a low-risk way, possibly for the purpose of helping to eliminate the debt they have? That's what's really interesting. Seeing as most people do have debt, would it make sense to take on more, but if the math is right, maybe use it to their advantage and help trim that negative debt down? You would know much more about this than I would.
Oh, Patrick, you are opening up such a rabbit hole for people to go down.
Let's go.
I'm going to start off with just some basic ones, and then I'm going to get into some pretty complex things. Obviously, this isn't a podcast about how to do any of those things. One of the things I've done in the past is back in the day, they were giving 0% balance transfers or cash advancements from credit cards. This was back in, from 2008 to 2015. They would send you these checks literally every month in the mail, like, hey, just write this check out. And it's 0% for 18 months. Now, look, it had like a 3% fee in the beginning. So if you were borrowing $30,000, that's going to cost you $900. But that's going to be $900 over 18 months. So you have to figure out, okay, what is that as far as expense? And then I would make some hard money loans. Someone says, hey, I need, $30,000 for my business. And I say, okay, you've got to secure it. I need to, get a lien on some of your assets. And I would do that. And then they'd pay me back and I would make a profit. So things like that. What you really need to look at is just something called ROI. ROI, return on investment. If there's a positive ROI, good job. If it's not, bad job.
Okay. Well, again, you just described rich people stuff. Your average person doesn't have $30K just to give to somebody who needs it.
No, but that money came off of a credit card.
Okay. So that 0% credit card, does that still exist in modern day? Is this applicable advice for 2026, or is this something that's no longer around?
It's not as generous. I've seen some like 2.9% or 4.9%, or hey, you can do it for 6 months. They're still out there. You could absolutely still find those.
Okay. So I've also seen things like what Michael Saylor did with Bitcoin was very interesting. And people have also done this with precious metals too. Given the fact that fiat is so trash, especially long term, we know that long term it always loses its value over time. And then there are money alternatives which do nothing but gain over time. Michael Saylor is really good with this, spending a bunch of his useless fiat and getting a bunch of Bitcoin, especially early on. And that's why one of the reasons why he became so rich and really accelerated his wealth over time. And so this is something you can do at a very, very low rate. And this is something that your average person nowadays, with all the instruments available, they can do this themselves. Would this be something you recommend your average person do? Because for me, the reason I've never really gone this route is a lot of the options that are out there just seem uncomfortable to me because I don't know a lot about it. It seems like I really don't want to cut my teeth and make a bunch of mistakes on something that I just don't know a lot about. But I can certainly spend money and buy gold and spend money and buy Bitcoin and have that type of arbitrage. Or I can borrow against the Bitcoin I have. That's another type of arbitrage out there. I'm not sure how much you actually know about this. Maybe you've never really done this yourself. But people have asked me over time if they should do something like this because I always tell people never get a loan to trade. You're only going to make it worse because of all the psychological factors you have working against you. But are there better ways for people who really are desperate to get out of debt, but just need a way they can use debt in their favor to do that? Again, for your average person, is something like I just spoke about a good option? Do you have another option that might be more suitable for your everyday person in debt? Where do you stand on this?
All right, great question. And the question was, if there's someone in debt, should they go out and try something big to get out of debt? And the answer is no. That's how people get in worse debt. There's only one way to get out of debt, is to spend less than you make and have to put the extra money you have towards your debt and get out of debt. Could someone go, instead of paying off their debt, go to Vegas and put it all on black and they win black so they double their money and then they pay off their debt? Sure, that can happen. And you know what? If that happened to you, well done, you're dumb, but it worked out. But schemes and things like that don't work out. If you are in debt, you have to get out of debt first. So what that means is you need to have a positive monthly cash flow. You need to figure out, if you make $3,000 and you're spending $3,000 and you've got $5,000 of debt, the math doesn't work. You can't get out of debt because you literally don't have any extra money. So for people that are in debt, the first thing they need to do is they need to create a positive monthly cash flow to where that extra monthly cash flow can go to debt. Now, once you get out of debt, then that extra goes into assets, which we've talked about several times in this podcast. But that's what you have to do. I wouldn't try any big crazy thing to get out of debt. You got to just grind it out. Now, I heard a great quote that I want to share with everyone, and I love this quote so much. And this is so true. I heard someone, I think it was on a podcast or something, say, it's so much easier to make $5,000 a year more than to spend $5,000 less. And I thought to myself, oh my gosh, that's so true. I remember the times in my life where I had to really cut and really spend less and really do without. It's miserable. And you get in this mindset that just nothing's going right and life is hard and why does life suck? It's so much easier just to go and drive Uber on the weekends and make $5,000 more. It's so much easier just to go do something else than to cut back. So I just want to share that with you. Just think differently. It's going to be easier for you to make $5,000 more a year than it is to try to cut it. And if you're in debt and you need more income, go figure it out. Go figure out how to make more income, but let's not do gambling schemes to try to pay it all off at once.
All right. Well, let me present one more thing to you then, Rob. I'm in. The debt I'm in right now is about 25% a year. It's absolutely killing me. But I know from the numbers, and I won't say since its inception. I'll just say in the last 10 years, Bitcoin averages about 75% per year, right in that range from what I remember. Again, this is how people like Michael Saylor were so brilliant. He took bad money and put it into good money. What if I just did something like that? Because I feel like if I spend all this time trying to pay down this debt, the opportunity costs I'm missing out on some of these things that give me 75% a year, it would just make a lot more sense for me to take the money I do have and put it into something that can make enough money to pay off my debt. I mean, I feel like I have a big enough sample size. I know it might go down, but if I wait long enough, it's bound to go up, right? I feel like, instead of, I have a wife and kids, I can't just be driving Uber on the weekends. I just don't have time. I'm in a terrible place right now It's affecting my trading because I'm always tempted to over leverage. Why don't I just take advantage of opportunities like this? They're in front of me right now. We live in the greatest period of time in the world when it comes to making money. I feel like I should be taking these chances now instead of doing it the old school way. It seems like the math just maths. Can you provide a counter argument that's greater than math itself?
Yes. And let me tell you why it's not going to matter. Because if you're in debt, what it means is you haven't figured out how to manage money. And you haven't figured out how to have an income that's greater than your expenses. So let's say you go out and you leverage, you take out a home equity loan, you leverage Bitcoin, and you end up making an extra $100,000 off of that. And then you take that money and you pay off your bills. In 5 years, you're going to be in the exact same place. The exact same place because you didn't fix the actual issue of why you're in debt was that you don't have enough income to pay for your expenses. Either you don't make enough money or you spend too much money. It's one of the two. And if you don't fix that, I don't care. You might get lucky. Go put it all on black. You might get lucky. You'll be in the exact same place 5 years from now unless you fix why you're in debt.
I love that answer too, because it's almost a mean thing to say, hey, you're not psychologically strong enough to not put yourself in the same terrible situation again. Even though you would think you would grow and learn from it all. I really agree with that, man. You have to grind it out. Like, just because I short sold my house doesn't mean I still didn't have a lot of debt. Remember, I had to take out different credit cards just to get by during the slow times of the year. So I still had to grind and work myself out of a lot of that debt. And that character building was one of the best things that ever happened to me, because now I am so financially responsible and have been, for the past 10, 12 years. And I just don't think you can put a price on that.
Patrick, let me ask you the question. Without going through that tough period, would you be where you were today, thriving?
Not to this degree. No, because I would have taken more L's. Anybody that knows my material since the beginning of time, since I started my YouTube channel, knows that reducing the amount of L's just puts the math so much in your favor. And I don't know if I would have learned that had I had not learned what it's like to be in debt and what it's like to have yourself out of debt, and just the difference that makes on every dollar you earn going forward.
Every single person has to learn that lesson. I had to learn it. I had to learn that lesson. I got behind the eight ball as a young age, and I'm like, oh crap, this is serious. I need to figure out how to actually control spending. Once I did that, it's been fairly easy, but it wasn't easy at first. Every single person has to go through that process and figure that out before you can really go out there and take risks. Because even if you hit it big, it's not going to matter. You'll be in the same place. Figure out the cash flow game where you make more than you spend and you put the extra in investments. Just figure that out. Once you do that, then you can start to do some cool stuff. And let's talk about ways to use debt to grow faster. Here's one that I was thinking about when you said, hey, why don't I just go buy Bitcoin? Why don't I just go buy Bitcoin? Okay, how about this? How about you get yourself out of debt first? So you've done the math, you increase your income, you decrease your spending, and you now have $500 extra every month. And you have paid down your debt. So now you don't even have those debt payments, which gives you another $500 a month. So you now have fixed the equation to where you now have $1,000 of extra money every month. Now, if you look at that and you say, okay, well, I'm going to put that $1,000 into gold or silver or Bitcoin. You know what? It's going to be slow. It's going to be slow. Here's a way to kickstart that. Why don't you go buy $12,000 worth of gold? And again, how are you going to do that? Well, you can do it on a credit card. I buy gold from coin shops with my credit card, and they always say, hey, it's going to cost you 3%. I'm like, charge me. Charge me for it. I don't care. Put that on a credit card, buy $12,000 worth of gold, and over the next year, you pay $1,000 a month. Now, of course, if you can get like, hey, this credit card has 2.9% for the first year, of course, you're going to do everything you can to minimize that debt expense. But let's say their credit card says, hey, for the first 12 months, it's only 4% interest. Great. Get that credit card, buy $12,000 worth of gold, make $1,000 payments every month. What that does is that speeds up the math because you now have a $12,000 asset earning a rate of return. Whereas before, that first month, you only had a $1,000 asset earning a rate of return. At the end of the year, if you do the math of where you were, if you would have bought $12,000 on day one and got the return versus you bought $1,000 of gold every single month, the returns are much, much larger. So there's great ways to use debt to get ahead, and you just have to think about the return on investment.
All right, so slow down there just a little bit here, Rob, as I want to officially, I guess, we've already talked about a couple ways, but officially transition into the solutions portion of the podcast. One of the key things you said there, Rob, was after you already pay off all of your debt. So my biggest question, as somebody who is very debt averse to somebody who is more accepting of debt, my question to you is, should the very first thing every single one of our listeners should be focusing on right now is paying down their debt? After your basic expenses are taken care of, should that be your very next focus? Not so much on the making money part, but a focus on getting rid of that negative compound interest that is going to just continually be an albatross around your neck up until the time comes where you get rid of it.
So the first thing to do, even before that one, Patrick, is you got to fix your cash flow picture. Like I said, you got in debt because you spent more than you made. Now, when I say spent more than made, a lot of people say, oh, someone's out there buying all these designer handbags they can't afford. I'm not talking about that. I'm talking about life. Like, hey, your car went out and you now have to drop $800 for a repair that you weren't expecting. Like, shit happens. I get it. And it's tough. So until you fix the income versus expenses thing, it doesn't matter. It doesn't matter if you pay down your debt because you haven't fixed the problem. That's the first thing you have to fix. Then, yes, then you take the extra money you have and you pay down that debt. And there are mathematical ways to do it the fastest. There's something called a debt snowball. I don't have time to get into it. Look up debt snowball. Go into ChatGPT or any AI, list all your debts and say, I have $300 a month to put onto debt payments. Tell me the fastest way to get out of debt. And it's going to tell you, pay this one off first, and then pay this one off next, and then do that one next. It's going to tell you the mathematical way to do it. So yeah, fix the problem of the income statement, and then do the mathematically correct thing when it comes to paying off debt. Because if you don't do it right, I've seen the studies of people doing a debt snowball versus not. It takes like this person would have gotten out of debt in 36 months to like 12 months or 15 months. It's amazing if you use the right kind of math on, it's called a debt snowball. So that's my advice. Fix the equation and then take all the extra money you have and do the mathematically best process to pay down the debt. And then once you get to zero, then all of a sudden you've got extra money that you can invest in assets.
That's a really awesome solution. I've never even heard of that. But if there's a faster way to do it, without taking on any extra risk, that's something people should be looking up right now. No, that's great. And if you feel like for some reason that you're not really winning by doing this, you're just simply not losing, well, no, you are, because as we all know, if you're a follower of my channel, we win by not losing. Mark Cuban said it really well. He says, if you have 23% debt and you eliminate it, that's actually a 23% gain. And that's not just a one-time gain. That's every single year because you no longer have that 23% working against you. Again, I cannot stress this enough. Compound interest working for you is tremendous. Compound interest working against you is horrific. And the sooner you can get that off the books, the better you are. Now, if you have something like a home loan or a car loan. You're always going to have some percentage working against you, and that's fine. The next step is like Rob said, figure out ways to have it work in your favor to more than offset the stuff that's working against you. One of the ways that I always tell my people on my other podcast, Rob, is to, everybody's going to have some cash. All of that cash should be working for you. Unless you're going to need it that month, put it in something that gives you yield somewhere. You can do this through bond funds, and bond funds exist pretty much on every single stock market. You can get anywhere from 3 to 5% on almost every currency out there right now, in some cases more. Or there's plenty of good options on the blockchain from very respected companies where you can do the exact same thing. Compound interest working for you, even if it's small, is still compounding, and it gets a lot bigger. I've explained this to people at first, and they don't think it's very significant. I'm like, well, on the surface, it's not. But when it compounds, it gets much, much bigger. And if you're doing in other places, not just your cash, then it's just that much more. And you would be amazed how much this, pardon the term because you've already used it, how much it snowballs in your favor. And you can make up so much ground in so little time.
One of the things that always drives me crazy is when I talk to people and they tell me how much money they have like in their checking account. And when people have large balances in their checking account, it drives me crazy. I remember my daughter was making some pretty good money, and she showed me like how much she had in her checking account and how much she then had in like her high yield savings account. And it's like she had 95% of her money in the checking account and almost nothing in the savings account. And I'm like, what are you doing? You're literally just losing free money. It's free money. Like, just simply move it from here to here. Here you get 0.1%. Over here you get 3.1%. Like, and if you need it, it's still there. It blows me away that people don't have the same thoughts that I do, that, you always want to be optimizing that cash. You should have the bare minimum of what you need in a checking account. And actually, I don't even think you need that, because if you've got a credit card with zero balance on it, you've got spending power. If you have an emergency come up and you got to fix your car, you got to do something, it's right there. It's right there. You should be having all your cash working for you all the time, period. It drives me crazy, so I'm going to stop my rant. I'm over.
Well, no, let's actually keep going just a little bit on that, because, you and I are money people. So in our mind, we can't understand how somebody would not do something so obvious. But I can tell you why I think a lot of people don't. One, again, they don't feel like that number is significant enough to even get out of bed and hit a few keystrokes on their computer. Two, we can't sit there and pretend like there is absolutely no risk involved in doing that. There is. It is microscopic, but it is there. And so I think what your average person might think is, well, it took me a long time to get this money. This is all the money I have. If I lose it, I'm completely screwed. For that small percentage, I just don't feel like it's worth the risk to move my money from here, where it's nice and safe and cozy in the bank doing nothing, over to there, where there is always the chance that something could collapse or something calamitous could happen, and I could lose everything I've worked so hard for. What would be your response to something like that? Because I guarantee you that is the inner monologue to most people when you bring something like this up. And in a way, I kind of get what they're thinking. I get the ethos here. I don't agree with it, but I at least get it.
I can understand it as well. But here's the reality of life. If you live your life in a scarcity mindset, you're going to struggle financially. I can guarantee you'll struggle financially. If you live in a abundance mindset, you're going to do so much better. And it's just a mindset. You could do the same things. You could do the exact same actions, but one person is living scared. They're living worried. They're worried that it's not going to be enough. I might lose it all. If you live your life like that, number one, you're going to be unhappy. Number two, you're not going to take risks. Now, yes, you may not go broke, But I have met thousands of people. I'm telling you, thousands of people in my life who have gone broke once in their life. They all tell me, best thing that ever happened to me. Because guess what? They got up, they learned from it, they grew, and they're doing fantastic. Now look, there's probably someone who did fail and went broke and was so devastated by it that they never recovered. Okay, that probably happened. But going broke, if you are living your life to not go broke, man, that's a miserable life. I'm sorry. It's why I tell the story, Patrick, whenever I'm worried about money, I get $100 bills out of my bank and I start giving them away to people. Even though I'm worried about money and I want to hold on to money, I give them away because I want to have that mindset that, hey, you know what? It's okay. There's a lot of abundance here. I want to be very grateful for what I have. That's going to lead you into a so much better financial place and a mental place in your life, just living that lifestyle.
And I'm so glad you brought this up because I've talked about this as well, especially in the times we live in now. It's almost like I felt like in the 90s you could get away with this, but things are just so much different nowadays. For those of you who do not listen to my other podcast and you mostly just listen to this one, I had an episode where I brought something up that was very damning. It was very alarming to most people, but it's true. We spoke before about how fiat currency does nothing but lose its value because of the way we dilute it and we print over time. Well, since 2020, where we threw $7 trillion at the economy simply so it wouldn't crash during the COVID years in the United States. And the odd thing was, every G20 country did this same, not named Russia, did this exact same thing, worse per capita than the United States did. So if you're in any of those countries, this is probably going to apply to you. And if you're in some other countries, this is going to apply even worse. But I went to ChatGPT and to Gemini both to cross-reference this. And I said, okay, since 2020, how much purchasing power has the United States dollar lost? And they both gave me about the same answer, about 25%, which is a lot. Horrifying to know that in such a short amount of time, we have lost a quarter of our purchasing power. But I noticed they were both using the CPI as their guide, which anybody who follows finance, Rob and I, you both know how inaccurate the CPI actually is. They don't account for home costs or fuel, which is like the top two, or I think it's food and fuel, two of the top, expenses that everybody has. They just don't even count that. They massage those numbers over time to make the end number look better. So I said, okay, I know of this guy named John Williams in Australia who owns a company called Shadow Stats. And what he does is he attempts to find the actual correct number. Now, I don't know how correct he is to the high side or the low side. I don't know. But I said, eliminate the CPI from your equation and substitute John Williams's numbers in. Now how much have we lost since the year 2020? And the answer came more to 65%. Horrifying. And it makes a lot of sense. I don't know about you, Rob, but on social media back in 2019, I didn't see anybody talking about how expensive everything is and how they can't pay their bills and how they can't buy a house and all this. But I see it all the time now. So it wouldn't surprise me one bit if those numbers were correct. The point I want to make with this, and it ties to your point, is nowadays, even though we were raised to think otherwise for some reason, the riskiest thing you can possibly do is to not take any risk at all. So like we said earlier, the first thing you need to do is to get rid of that debt. You cannot have compound interest working against you. That's absurd. It doesn't matter what you do from that point on. That must be step number one. But from there, don't be so risk averse that you don't take chances and you don't understand the percentage points mean a lot going forward. Because the absolute worst thing you can do is to curl up into a ball and squirrel your money away. Because little do you know, you're losing it, and you're losing it at a high rate almost every single day nowadays in 2026.
You're so right. I mean, if you want to guarantee that you lose, don't stay in ahead of the inflation curve. You'll fall further and further behind, and that's just another compound interest working against you. As things get more and more expensive, if your income isn't going up by at least that amount, you're screwed. You're screwed. How are you possibly going to survive if your income isn't going up enough to cover the rising cost of inflation? You can't fall behind that curve at all. You can't. This, as Patrick said, the compounding interest working against you is devastating. You'll never make it.
So to wrap it all up, I know this is probably the longest episode we ever did, but it was worth it because, well, one, we haven't talked to you guys in a while. We haven't done a show in a while, so it's long overdue. And then two, if you don't get this right, the other 98 episodes we did almost don't even matter. So it's so important you figure this part out first and then move on to step two, which is how can I make more sustainable money through trading and through investing, going forward. So I almost wish I would have thought of this episode earlier, but at least we thought about it now. Thank you, everybody, for listening. I hope you put it into practice if you haven't already. And Rob and I will both see you in the next episode.
Welcome back to another episode of the Stoic Trading Psychology.